What that you can give us on take
Yeah, we've
rate?
so I think we are at in the last quarter. If you look at the full year, we achieved 8.8 basis points. But if you look at the last quarter, we achieved 9.2 basis points in Q4. So we think that getting to 10 to 11 basis points is our goal for the coming quarters.
And with that, it's a wrap on today's edition of All You Need to Know. But do stay tuned. India Market Open coming up next.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by CRISIL and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds? While the share of women in mutual funds has risen in the past 5 years, what is heartening to know that more women from the hinterland of India are investing in mutual funds versus urban centers. And the report also showed
Hello and welcome. You're watching India Market Open. We're gearing you up for trade this morning. We don't have too much of a takeaway from global markets. Asia's trading fairly mixed. But I think what was significant once again was we momentarily hit the $5 trillion mark on the exchange yesterday, and this is despite FIs aggressively selling this month.
Yeah. I think global market is all about NVIDIA. Everyone's just
maybe
excited
tomorrow
about
morning,
that.
maybe today.
Yeah, no, in anticipation as well.
Yeah.
So that's the only thing happening. But you know, guys, before we get to the rest, that Singapore airline story and that footage, I mean, I don't know how Boeing is going to react, etc. I think that's the scariest thing I've ever seen.
Yeah.
So, yeah.
Wear your seatbelts.
Wear your seatbelts through
times.
the flight at all times,
But no, I mean, just taking back to markets, I mean, couple of things. That's this 5 trillion momentarily. 1 trillion has been added in the last 6 months.
Less than 6 months.
Yeah,
May 20,
that's quite
29th,
crazy,
yeah.
right? So there's something crazy happening here, and something crazy happening in the way stocks are moving, right? We know silver is active, but for Hindustan Zinc to do what it is doing, stunning. We know that shipbuilders are getting orders, but the way the stocks are moving, there seems to be a belief that kal nahi hoga. Let's do it today.
FOMO
it's
feeling.
Crazy word. Yeah, there's a big FOMO feeling right now, and for it to happen, as some of the Instagram posts are doing, right? They are putting out that the note that Home Minister Amit Shah gave on markets to NDTV network, and then Tamanna, I think you only put it out, right, on the groups, and then the Prime Minister Modi speaking about it parallelly. So I think there's a lot of confidence currently.
And you know, just not to trumpet ourselves, but actually yes, too, for a few seconds, all the newsmakers that have impacted the markets or the markets are watching have spoken to the NDTV network this election season. We're the ones who've asked them about issues that matter and you know, questions about the stock market. So if you've had Home Minister saying watch what happens on 4th June, you have the Prime Minister saying watch what happens on 4th June, and perhaps that's the FOMO that you know, you're talking about.
And we're only 250 points away from our life highs, 500 points away from 23,000, which essentially is only 2%. So
and you're only
it's
12
actually
days.
not as significant
You're only
anymore,
12 days,
right?
2 weeks away from 4th
I mean,
of
I think
June.
most people are betting new record highs even before the 4th of June, and if that, and of course your broader markets are trading at record levels. So it's euphoria all over, but that's what sometimes could be a reason to worry. Like you said, Hindustan Zinc, 20% yesterday.
Craziness in some pockets for sure, but I think overall it's okay. Plus, yields are off today for the first time in 4 days. So hopefully the global markets are steady as well.
So let's get to that pace, the global market space, and you know, give you details of what's been happening. Record highs on the S&P 500, on the Nasdaq. No massive gains, but yeah, everything is in the green. You had record closing for both of these indices. And the Dow also closed up in the green. Dow futures also, you know, positive territory. What's been working? Like I said, it's all about NVIDIA. Last 2 trading sessions, the Nasdaq has been up in anticipation of what the NVIDIA numbers are going to look like. That stock has rallied 93% just in 2024. So will their results live up is the big question really as far as that is concerned. If I'm talking about the other cues, Christopher Waller spoke yesterday, and he's a governor of the Federal Reserve. He sounded a caution on rate hikes, and I've picked one particular quote of his from, you know, what he spoke, which I thought was important, where he says, I need to see several more months of good inflation data before I would be comfortable supporting an easing in stance of monetary policy. And remember that that's how it works for the Fed. You have all of these governors come in with their views. He says he wants to see more data. Bonds have been okay, you know, nothing moving too much, but the 10-year at 4.41, so did briefly move an inch higher. Crude is also largely range-bound and benign, Brent under $83 a barrel. Asia has had a mixed kind of an opening today, and continues to be there with the Nikkei in negative territory. I'm going to pull up the implied open, you know, to look at how we are opening up, and mildly positive. So I don't know if I'd call it euphoria yet, but if you look at it in a broader trend, yes, we are still in positive territory. Quick look at the fund flows yesterday, and they've not been that great. So I think while in certain stocks and sectors, like Neeraj said, there is this FOMO factor. Overall, there is still some bit of caution. So DII is about 3,500 crores yesterday. FI is about 1,800 crores in the red, which continues to be the factor. But then, who's talking about FIs anymore? I mean, they should feel that FOMO. This market has moved on in that sense. And of course, all their money is welcome as and when it comes. But yeah, not dependent on it in that sense.
For now, certainly doesn't look like it. And, I mean, frankly, if you just look at, that's a part of the trade setup. One, that we've had a fairly strong and a bullish pattern in trade yesterday as well, marked with reasonably strong volumes, which is actually a positive sign. You want a good day, but you want a good day with good volumes. And a trending day with good volumes typically augurs well for the next day, and which is a positive sign. So that's the first part, that I think we had a good day in trade yesterday with good volumes, which is a positive. But the other more important part is, if you just look at what's happened in the last 5, 6, 7 days, or maybe 8 days, is that the call writers are now shirking away from creating any resistance at the near strikes, right? So we are at 22,529, but if you look at the call concentration, it's straight at 23,000 and 23,200 in a major way, which just shows that the bent of the market is not to come in the way of a ferocious up move. I would also take it, and I don't know how Samina and Tamanna think about it, but I would also think that this would mean that short sellers will not be trying to go out and create any large short positions in the current setup. And the absence of sellers is also a very big trigger for the market to move up. Typically, the market is sluggish or moves rationally if there is equal and opposite participation happening, but there is a strength in one end of the market, be it short or the long side. Here, we are seeing typical behavior of short sellers not wanting to create any near-term short positions, and evident by the call positions that are being set up. So one would presume that the absence of people who are going out and shorting the market is also a positive for the uptick to come in.
Because they got burnt. I mean, just to put it very simply, in the last fortnight or so, shorts have got singed very, very badly when the market turns. So you've been caught, with the tide flown out, and you're sort of stuck there.
Which is why you're scared, right? You don't want to come out in the way of, a rolling stone per se, because you just are scared of what could happen to your money. Eventually, you're in the market to make money, not just necessarily to create positions. And frankly, commodity stocks may pause today, yes, and we'll talk about it in detail on the editor's cut. But even if they pause today, I think the bent of the market is towards some optimism there. Maybe not in some of the crazily valued stocks, but there is no saying why some of these stocks cannot continue to do well, even if they pause. I mean, we were talking about it on yesterday's trade setup too. Who would have anticipated a 6-7% up move in a Vedanta and a Hindalco, for ferrous companies to do well, and for a Hinzing to go up 20%? I mean, even if you avoid that crazy move in Hinzing, just the moves that some of the commodity stocks are doing are just so exceptional that it won't stop in a day. I mean, maybe there is a pause today because they've done so well yesterday, but everybody's constructive on the commodity stocks even now.
Yeah, absolutely.
Yeah, I think that's what it looks like in terms of setup. I think what stood out for me, though, Neeraj, is 23,000 has seen maximum call OI for the last 7-8 weeks. But 23,200, I think that's a new entrant. So while 23,000 was seeming like something that could potentially be in line of sight, seeing activity around 23,200 also goes to imply that the optimism and the bullish sentiment is only getting stronger. The wicks yesterday went up a little bit, but remember, in the last 5 days, it's actually down nearly 9%. So your cost of option premiums would have also come off just a little bit. So you want to keep that in mind. You've seen an increase in the last day of trade, which is up about 6.5%. But over the longer last 5 to 6 days, it's actually eased off in terms of the India wicks. So you want to be mindful of that. Bank Nifty continues to be important in terms of guiding the market in terms of direction. Yesterday, interestingly, there was underperformance coming in on Bank Nifty. Now, this is one factor you want to keep a close eye out on, because every time Bank Nifty starts participating, the markets, of course, get enough and more support coming in from that. We're on the fag end of the earnings season. Lots of important earnings that will be coming out in today's day of trade. But just to take you through what we've seen between yesterday's close and this morning's open, top of the list is Action Construction. This has been a favorite of Day Street, and for good enough reason, right? Very, very interesting business model. Not too much in terms of listed peers. Very good quarter for the company. The stock was up 6% even before it reported its earnings. So the street was anticipating a good quarter from Action Construction. The revenues were up a whopping 36% to come in at 836 crores. This is, of course, a YOY number that we're comparing. EBITDA came in 77% higher at 130 crores. Margins were at 15.5%, so very big expansion coming in on the margin front on back of operational leverage, and net profits came in at 98 crores versus 47 crores. So strong growth, over 100% higher in terms of reporting, at least in terms of net profit. So could be another very strong morning for Action Construction in today's day of trade. The other one, interestingly, is JK Tyres. The company's earnings quarter on quarter may not look fantastic, but what they do look really good is on a year on year. Top line largely flat, even YOY, up about 1.8%. But quarter on quarter, their profits have actually declined on back of what we are seeing is that in this quarter, the fact that you had lower commodity prices and operating leverage, lower interest costs has actually helped the bottom line for JK Tyre. What we did see though is from March onwards, commodity prices started inching up, on back of which JK Tyres has undertaken a price hike. And you will see that in terms of when we talk to the management and get a sense of what lies ahead in FY25. But from the way we look at it, it's been a good quarter for JK Tyres. Year on year, good sort of revenue, and revenue growth has been flat. Profitability and margins have expanded. They've talked about a 1,400 crore expansion plan in FY25, which could potentially get the markets quite excited. Well, the other one that's a good quarter is GE T&D India. They've reported a strong growth on back of exports. In fact, very strong, with 30% higher in terms of top line. Growth was led by exports. Margins have also expanded significantly, coming in at 12.1% versus 4%. Now, whether this is an aberration or this is going to be sustainable going into FY25 is what we should understand from the management. But lower interest costs and strong operating performance is what's actually led to that. EBITDA came in about 111 versus 28 crores. Net profit was 66 crores versus a loss of 15 crores. So if I had to pick a stock of the morning, it wouldn't surprise me if GE T&D tops that list. Fantastic numbers. They've done well operationally. They've done well in terms of top line. Exports, which is high margin for them, is also looking pretty solid.
Yeah. The only fly in the ointment might be, I mean, it's a 190 crore annual PAT business. Loss last year, 190 crores of PAT this year. It trades at 35,000 crores of market cap. I mean, 192 times FY24. Even if you
stop questioning valuations.
Yeah, but at some point of time, right? It's not a structural story.
There others like that?
No, but here's the thing. No. My limited point is, an ABB and ACE, etc., have had strong performances for a number of quarters and years now, right? This one at 192 times, let's assume it grows 100% in FY25. It trades at 90 times or 95 times. That's I mean, yes, you know, what Samina is saying is true. Her stock of the day pick is probably true because it's beaten estimates. But just look at the valuations, guys. It's crazy.
But look at the kind of growth that also they're eking
I'm saying
right?
It grows at 100%. It will still trade
at
90 times.
REC and PFC. If you talk about valuations, I think it's a never-ending conversation. There's no right or wrong anymore, I've realized. You can't question the flow of money.
Yeah, no, like I said, you might well be right today.
I just hope
I know, but you're talking about, I think both of you are right in one way or the other. You're talking about it in terms of stock of the day. You're talking about it from a more longer term perspective, where at some point, if you're making a long term portfolio, you are going to look at the valuations as well. That's not something that you can sort of leave out.
Stock is up only 240% in the last 6 months. Only 240%.
So, yeah, that's one to watch out for. I think the other one that will not be very positive, perhaps, but you will see some action there is BHEL. So when we're talking about numbers, that could be the big one to watch out for this morning, because it's been largely a disappointing quarter with flat revenues and a drop in EBITDA margins. The higher provisioning is what has largely hit the margins, and that's what came out from the con call as well. Nuvama has retained a buy with a target price of 400 rupees and also says that the pipeline looks good. The order book looks okay. So it says, Nuvama says BHEL is best placed to ride the thermal power wave in 12 to 24 months. So we'll just pull up those pointers that I've given as well. So the con call highlights are, telling us about how gross margins have impacted due to supply chain issues, execution delays this fiscal. Suffice to say that BHEL has not had the greatest quarter, but then I just want to, sort of caveat that with the fact that ONGC didn't have great numbers, but it had a superb opening yesterday. So watch out for that. Overall, the pipeline looks good. The quarter has been a bit disappointing on BHEL. Hitachi Energy was the other one that I found quite interesting, where you've had decent numbers, beaten estimates on most fronts. Revenues up 27%, EBITDA up 91% at 182 crores. So it's a beat on EBITDA and PAT expectations by 53% and 66% respectively. Another maybe a contender for stock of this morning. Already another stock that has run up quite massively in 1 month, about 34%. We should pull up the yearly growth as well. Net profit also at 114 crores versus 51 crores. Nuvama has a buy this morning on Hitachi Energy with a target price of 13,000 rupees. So they're already seeing a 20% plus upside on Hitachi Energy, and of course double-digit margins well before the guidance that they've given of Q4 of FY25. So they've clocked that in advance. That's another stock that I would watch out for. The third one will also be an interesting one, definitely a newsmaker, because 197 Communications is going to come out with its numbers today, and in fact maybe pre-market you'll see those numbers hit for their quarter. And this is the set of numbers every analyst is going to be looking at, because remember, this is what will reflect all the regulatory pain that 197 Communications has seen. So remember RBI's suspension of Paytm Payment Bank's wallet business. That is their high MDR business, the cream of the crop, so to say. So to speak. They've seen customer attrition since then. The UPI component has gone up, which isn't, giving them any great margins. They've had to rope in partners. So you will see the full impact financially of all of those blows on their balance sheet today. And the mood on the street sort of has been up and down as far as Paytm is concerned after a fair amount of beating. And look at that 1 month chart. At least just the shape of that chart tells you how volatile that has been. Now, all I can say about 197 is that the bad news is well known and to some extent priced in. If there is any silver lining in what the numbers show today, you might see that kind of a reaction as well. Just FYI, MK put out a note a few days ago, and they say that they expect Paytm to turn EBITDA positive only by FY28. So that's the extent of pain that you could see in a 197.
Well, strange things can happen, pigs can fly. BHEL, if it reacts positively, I'll use that term simply because if it does well, it's only on the promise of a better future, because God alone knows when will they deliver on the numbers front. But yeah, like Tamanna said, sometimes, like ONGC was an example yesterday, or some other stocks have been examples. Tech Mahindra reacted because of the commentary, not because of the numbers. So let's wait and watch what happens here. Dollar Industries, though, after a really long time, has done well, and the valuations are not expensive, and therefore watch out for this stock today. Revenues were up 23% at 500 crores. The estimates were 491. So good numbers, but in line with estimates, and is that a problem? Let's see. EBITDA at 57 crores versus 11 crores. Strong performance. The estimates were 54 crores, and margins too. I mean, imagine a number of 11.4% versus 2.8%. Just that's the kind of beat the dollar did in the quarter. Volume growth was very strong too for the year. They've clocked in a volume growth of 21%, but the margin performance, operating leverage coming into play, Bloomberg estimates were 11%, and net profit at 34 crores versus 46 lakhs. I mean, you can't find a fault with these numbers, but for the fact that they are exactly in line with what the analyst consensus estimates were. If anything tempers the stock, it is this, that it is in line with estimates. But cheap stock, which has delivered numbers, Let's see what happens to dollar. Let's see what happens to the space too. I mean, watch out for Lux and watch out for some of the others. A lot of marquee investors have gotten into those stocks. So that's first. Lakshmi Organic is the other one, which has delivered a bit of a surprise, you would argue, because you don't expect a chemical company to surprise so positively, and Lakshmi's done that. Revenues up 8.4% at 792 versus 730. The estimates were 712, which is fine. But on the margin front, the estimates were 8.4%. The corresponding quarter was 7.9%. They've delivered 11.4% as Lakshmi Organic. PAT up 82% at 44 crores versus 24 crores. The estimates were 28 crores, handsomely beating estimates. Again, a chemical stock which has done this, so just may react positively. Let's wait and watch. And what will definitely react negatively, that's the third stock on my list, is GSFC. Horrible numbers, but that's the template for all fertilizer companies. Capped upside on, or capped end product prices, rising raw material prices, no subsidy or lack of subsidy impacting them. Revenues down, margins down, PAT down, will react negatively, very likely. So watch out for this one as well. That's the first list. Anything else, guys?
I have a couple. I wanted to talk about Metropolis. I thought that was interesting, decent numbers on Metropolis, and management announcement as well. Amira Shah becomes chairperson. So revenues came in at 331 crores, 17% up. EBITDA at 80 crores, that's about 13.8% up, so decent on the numbers as well. Margins have squeezed a little bit, but okay, not too bad, and net profit at 37 crores. So Metropolis is one to look out. The space has also been interesting. The other one was ONGC. I'm coming back to ONGC because yesterday as well and today you've seen reports, and all the brokerages not very excited about what's happening with ONGC. Nuvama has maintained a reduce and set the target at 210 rupees, which is a fair downside from where it is currently. So ONGC managed to close up in the green yesterday after all of that up and down. The windfall tax to deprice the firm of any incremental benefit amidst high crude prices is what the take is from Nuvama. They also say APM gas pricing is pegged to 10% of Brent, also caps potential supernormal profits. So I don't know how much ONGC's run will continue, but that's one I'd watch.
Just a couple of other result boys, if you will. So one of them is Gulf Oil Lubricants. Revenues up 9.8%, but margins expand a little bit. On that base, from 11% to 13.5 is good, and as a result of which a 40% uptick in PAT, 87 crores versus 62 crores. And one small stock, don't know too much about it, must confess, but Suyog Telematics. We'll probably get the management a bit later on in the show, but watch out for Suyog, but don't know much about the business. 1150 crore market cap business, has signed a 15-year pact with BSNL for rollout of sites across India. A bit of a blind shot, but if you really want to know more about Suyog and whether it'll react or no, you should stay tuned to our show, because we'll get the management and ask them.
I really want to know what BSNL is doing in these 15 sites.
Yeah, but Suyog will tell us. But I'm just saying it might be really interesting to know what this order win is. So could be
just wanted to complete that list that I was talking about.
So, sorry, I didn't know that.
No.
Okay, yeah.
So Coforge was the other one. So their QIP has opened. The floor price is approved at 4,531 crores. That's a bit of a discount to the stock's close. So watch out for Coforge. And just one in the IPO space that I wanted to mention, which is Office Space Solutions. Their IPO opens today. It's I was describing it to Sajid as the Desi WeWork. So it's a flexible workspace company with a price range of 364 to 383. I thought this was interesting because after all of the changes around COVID in the last few years, I don't know how much of an appetite there is for a co-working space, but that's one that I would watch.
You've also got, you want to finish your list?
No, I'm done.
Yeah, just a quick mention. You've got a bit of a block deal that you want to watch out for this morning. It's on Apollo Tyres. Warburg Pincus is looking to sell about 3.5% stake. So you will see that stock quite active in early minutes of trade. You've talked about a bunch of earnings, guys, but a few other smaller ones. You had Morpen Labs that recently, rather reported numbers yesterday. The stock, of course, is a very small one, so it's a micro cap mention, but nevertheless, important because you will see it react to its earnings just like all these small companies usually do. Their profits have jumped 250% to 29 crores versus 8 crores, and revenues have also gone up about 16.5 crores. We talked about Tilak Nagar Industries and talked about a lot of the alcohol businesses and how this stock has actually done well in terms of stock performance, but the numbers were a huge disappointment. Profits are down 46% while revenues have remained flat. Sheela Foam, I think both of you have mentioned. You've also got Relega Enterprise, where profits have declined very substantially. So 97% drop in top line for Relega Enterprise to report at 125 crores versus 3,400 crores. There was an exceptional gain at 230 crores, and revenues have seen a growth of 33%. So those are a few names you want to track. You also have two tire companies, JK on earnings and Apollo Tyres on the block deal. But I think the markets will very excitedly watch out for Nykaa and Paytm. Two important numbers amongst all the other ones that will report today. And of course, Garden Shipyard.
So,
Garden Reach.
Garden Reach.
Largely because it's been such a rage in the last few weeks. It'd be good to see whether the earnings reflect the same kind of euphoria.
Absolutely.
Okay, time for a very quick mention about the key pocket of trade yesterday. Metals were active. Agam, wouldn't surprise anybody that that's the pocket we speak about.
Yeah, we talk about the metals pack and, well, also number 30 on the periodic table, zinc, that specific one. And let's not forget, because of that, we're also going to be talking about Hindustan Zinc, which has in fact gone up by a whopping 2.5%, or rather 2.5 times, pardon me, in this calendar, in this financial year. That's less than 2 months. So we've seen a surge out there from 295 rupees per share all the way up to as much as, well, what is it now? 741 rupees per share. We're going to talk about all that, Neeraj.
I didn't know about the periodic table bit, yeah?
Yeah.
So you're clearly teaching your kid a lot of things.
Yes. And I'm in general good in chemistry.
Okay. So pardon me for that. But yeah, I mean, I don't know if it's chemistry or something else, but there's some crazy moves out there happening, as you have discussed on the multiple derivative setups as well. But I just thought this note from Gavikal Research was interesting about what's happening across the world on industrial metals. So thought we'll borrow a little bit from there. So one, they lay out, Agam, the possible triggers for this rally in industrial metals. So stabilizing Chinese growth, and we're clearly seeing first signs of that at least. Would love to hear your views. A new Cold War leading to stockpiling, and if indeed that were to happen, then what it does to metal demand per se. US going all in on its industrial revival. Now that is something that a lot of notes are talking about, that US is laying blockages on multiple other countries doing industrial work in the country, and therefore it wants to revive, a clear signs that it wants to do the revival of on its own. And we know when US spends on infrastructure, what happens to demand for all and sundry.
Right.
So that's the third one. A potentially weaker dollar. Everybody's now talking about this possibility as well and what it does for metals per se. Yeah. And the last point they make is electrification of everything theme. I mean, just replace hydrocarbons as a primary fuel with all EV, and therefore what it does to copper, what it does to aluminum, and all the other metals. So that's something that stood out for me. Most of the other things are known, but just to quantify the electrification of everything seemed very interesting to me.
Yeah, absolutely. Neeraj, but every time we talk about metals, not just a specific one perhaps, there's a China equation which always comes into the picture. And once again, that stands out in this case.
In more ways than one. So yes, one, the electricity demand going up. There's an interesting statistic, by the way. I'm not good at chemistry or statistics per se, so I just happened to read. The data said that 83% of data centers which get launched in the US are pre-leased from the date of the launch of the project.
Right.
That's the kind of crazy demand that's coming. So electricity demand moving up across the world, and therefore semicon demand moving up, and does that lead to increased demand for metals. That's part one. Of course, electricity driven by semiconductors in China, and the alert that came in for a lagging market like Europe as well. Schneider Electric has had a massive run because of this. So part one. part to the China property package, right? This simulation that happens because of the China property sector. It recently unveiled a package to boost property sector. The package included about $42 billion worth of measures. Right. Effectively, what they're going to do is, as I read out from one of the notes, is that they are going, People's Bank of China will provide 300 billion yuan or $42 billion to financial institutions to lend to state-owned enterprises. The state-owned enterprises, in turn, are expected to buy the unsold apartments that are already being built.
Right.
Does that help the sector? And therefore, does it bring about the metal prices uptick? So that's the other question. And there are stock-specific triggers, right? You spoke about the periodic table and zinc, and the other underlying factor for Hindustan Zinc, which is silver price rise.
Absolutely,
There's just
yes.
no other way to place silver as opposed to Hindustan Zinc on a low free float.
So, you know, Neeraj, we've been talking to a handful of commodity guys on the F&O show over the past couple of weeks. And every single time, there are two metals which stand out in terms of bullish bets. One of them is copper, and the other one is, of course, zinc. For good reason, for many reasons that you've already enumerated. I'm actually looking at the chart for Hindustan Copper as well. Of course, Hindustan Copper and Hindustan Zinc are the two companies which have done the best over the course of the last 1.5 months. And it's the same for Hindustan Copper as well. It hasn't done as well as Hindustan Zinc. But if we just talk about Hindustan Zinc here, there are stock-specific triggers as well.
Yeah, so for Hinzing, Vedanta, Hindalco, everybody is now citing those individual reasons as well, aside of the moving up rally. So in Hindustan Zinc's case, as you said, the bullishness in zinc prices plus silver, and no other way to play this. Also a very low free float. I think the free float probably out there is 3-4%. So it's a very low free float which can propel the stock higher.
Yeah.
Vedanta, indirect beneficiary of Hindustan Zinc,
absolutely,
as well as all the other measures that it is talking about. So that's the other piece. Hindalco, amongst everything else that's happening in aluminum, also the Novelis IPO in September, they've declared it. So therefore, that's maybe a positive. And steel companies, prime beneficiary of the property stimulus. All of that might also help. So
I wonder if your regular demand supply cycles of these metals are actually coinciding with other fundamental aspects which are also playing in favor. Under those circumstances, of course, I reckon that a lot of market analysts would be even more bullish based on the prices and the kind of traction that we've already seen in these companies.
Entirely possible.
But there you have it. That's the upcycle on metals, something that's been identified by Neeraj, of course. So we're going to continue to give you updates and also track a lot of these metal counters through the course of the day, perhaps give you more of a fundamental view, besides, of course, a lot of technical analysis that does go through, not just in the commodities, but also the equities behind these commodities. We'll continue to give you an update on that. And on that note, it's also time to slip into a short break. And on the other side, we get you all the action from the futures and options space. Stay tuned. Back in just a bit.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much.
Welcome back. You're watching India Market Open. We're taking stock of the futures and options space. It was an interesting day of trade yesterday. We saw the Nifty once again move back above and close about the mark of 22,500, which is always a positive. It's been a little bit of a consolidation line for the Nifty, and the question really is that does that mean further impetus towards the upside? A lot of times the Nifty has tried to stay above 22,500 and even test 22,800, well, a handful of times, and it has not been able to do that. But the question really is that, is this that moment when we in fact take out that new life high? Now, as far as yesterday's day of trade is concerned, we really didn't see as much traction when it comes to the future space. As you can see, no change in OI. The Bank Nifty, again, that was a relative laggard. In fact, the underlying came off by around 0.3%, and again, a very little change in open interest. But we are talking about the options market out here, and considering the Nifty moved higher, we did see a lot of writing around the 22,500 and 22,400 puts. Those are the strikes which were significantly active. But what about when it comes to your overall open interest distribution picture for, well, this week's expiry, that is tomorrow? That's as far as the Nifty is concerned. On the higher end, of course, we continue to see a lot of action building up around 23,000. It is unlikely that we will reach 23,000 between today and tomorrow, which means that we are also looking at a significant amount of writing around the 23,000 call. That said, you know, a lot of things could change because we're about 2.5% away from that mark. So you never know, and you can't really rule out a lot because we are certainly in very volatile times, and the India Volatility Index sustains above the mark of 20 at the moment. Of course, on the lower end, we continue to keep an eye on 22,500 and 22,400. That's where we're seeing a little bit more accumulation around puts. Now, let's move on and talk about a handful of other counters and a rather handful of other, strikes and option markets. And of course, this is the Bank Nifty. Now, Bank Nifty, as I was mentioning, has been a little bit of a laggard, which means that it is seeing a significant amount more in terms of call writing as compared to puts being written at the moment. That could, of course, change over the course of the day. But for now, we're keeping an eye on 48,000 and 48,500. These are the two marks where we have a significant amount of call writing. And these are also round numbers, you know, so psychologically, it does come to that when it comes to placing bets for a lot of traders. But we are also considering the 6th of June expiry. Not much has changed there. We continue to see 23,000 call as the one with the max OI at the moment, significantly higher as compared to something like a 22,500, where both calls and puts have been equally written. I reckon to a certain extent that would be strangles written. But again, we're still a few days away from that particular expiry. So with that said, let's go on and talk about stocks which are also in focus. A lot of them moving on the back of earnings. Metropolis, Coal India, Sun Pharma, BHEL, all of them advancing in trade. Astral, of course, did come off by around 5%, but the commentary in the conference call post-market hours was very strong. So I wonder if there could, in fact, be some short covering there. In terms of stocks which are seeing unwinding, again, looking at short covering for BEL, Balkrishna Industries and Dalmia Bharat, very little traction when it comes to Indian Hotels and Escorts. But that said, let's get an expert opinion here and see what they are making of these markets and what kind of options they're deploying here. We have Ajit Rambia of Ajira Ventures, who's joining us on the show. Ajit, good morning. Thank you so much for joining in. Ajit, I believe you do have an option structure that you are deploying on the Nifty. What's the way forward? What is your reading and how are you going about it?
Good morning, Agam. Thanks for having me on the show. For the past week, the markets have been fairly volatile. The volatility is primarily due to political uncertainty and FIS selling. FIS have been continuously selling, except on Friday, it bought some. So as we approach 4th June, I believe the markets are gearing up for a significant movement post-election results. Even historically, election results have had a significant outcome on market sentiment. So we should expect a clear trend to emerge once the results are declared. Speaking about the indices, we find Nifty to be more stronger than Bank Nifty. Nifty is having a resistance at around 20,650 levels and support at around 22,350 levels. And in Bank Nifty, there is a clear resistance at 48,200 levels and a good support at 47,500 levels. Bank Nifty is not able to sustain about 48,200 levels these days, and any close above 48,200 will give a good rally.
All right. And what kind of option structure are you playing out here, Ajit?
Yeah, like we have a play in Nifty where we have a special election special trade for year. So we initiate a calendar spread where we sell one Nifty 6th June 22,500 put at 390 and simultaneously buy one Nifty 13th June 22,500 put at 428. So this is a calendar spread where we buy the far off option, put option, and sell the nearer option, 6th June. See, both these expiries are after the 4th of June. So this is a pure Vega play, and we will find highest Vega or VIX on 4th, which is the election result day. So we square off this strategy at the peak level when the VIX is at its peak. There's on 4th. So this is it.
In very simplified terms, what Ajit is looking to do is take advantage of the big difference between implied volatilities of the 6th of June expiry and the subsequent expiry. The difference, of course, is that because 6th of June will have that big event, which is why implied volatilities will be high, which is actually nothing but a function of expanded option premiums. And that is what the differential between these two expiries is what Ajit is looking to take advantage of. And of course, as he's mentioned, the strikes that in fact you can go ahead and place this specific calendar spread going in. But Ajit, moving on, I believe you also have an option structure on REC. Can you take us through that as well?
Yeah, so we are bullish on this counter. We initiate a simple bullish butterfly strategy whereby we buy one May call of 550 at 11.40 and sell two 560 calls at 8 rupees and hedge it with buying one 570 call at 550. So the maximum risk and investment for this strategy is mere 90 paise. So you are keeping only 90 paise per trade on the table to gain rupees 10 if it closes at 560 levels.
So that's again a bullish butterfly spread when it comes to REC. Now remember that when it comes to REC, it's been one of those counters which has been on the mend, and actually it's recovered a little bit. And I reckon that Ajit is looking to play that specific strategy going forward. But on that note, Ajit, taking a moment to thank you for joining us and taking us through your views on the markets, giving us that big election trade, as well as your view on REC. With that, it's back to you all.
Yeah, thanks a lot. Thanks a lot for that, Agam. So, well, that's the corner that we do every time and try and give you option strategies in addition to the option strategies until June 4th. Every working day, that is. Agam and his guest will get you an election strategy, an election trade, which you can exercise. Please do your own due checks. Talk to your own expert before you get into options, because they can be risky if you don't understand them. We'll try our best to, of course, make you understand everything, but do consult somebody before you get into these trades per se. But yeah, if you want to do options, then there's one place that you can definitely come in and try and understand all about it. So watching out for that. Yeah, I mean, aside of that, while it'll always be about just results, but yesterday's trade threw up some very interesting other trends as well. One was commodities. The other was the uptick that we saw, one in the Adani Group stocks, which did really well. Exceptional performance across the board for most of them. So that was one. And two, just that little bit of an uptick that we saw in PSUs yesterday. I mean, actually, little is an understatement. But just the kind of moves that some of the PSUs are doing is quite exceptional.
Just a quick one on Bharat Dynamics, only because you've talked about it. The run-up is also largely because of a stock split. This was announced in April, but I couldn't for the life of me understand 50% gains in a week. But it's not only got to do with fundamentals, there is an event, and hence the counter has also ran up.
So yeah, PSUs definitely in flavor, but I just want to sound that note of caution that you were mentioning. A, valuations. B, how much more of an uptake, and then if you look back at
that, you need to ask Modi ji, because they say the bull run is starting on the 4th of June.
Yeah, but if you look back at the quarterly numbers, then not all of them have had very robust balance sheet at the end of the day. Profitability, margins, all right. Everyone has a great order book and pipeline and everything. But not all of them. HAL, of course, the exception there.
And the valuations are a concern. In most of these cases, maybe they are not as indebted as some of the private guys. And as Abhay Agarwal was saying yesterday, that how many companies will have the ability to execute defense orders the way some of the PSUs do with the 25-30 year experience that they have. But nevertheless, valuations are a different story. Maybe tomorrow on Editor's Cut, we'll try and talk about the egregious valuations of some of the Indian listed stocks. But for now, talk about an interesting announcement that we saw, a quick conversation with Mr. Shiv Shankar Lature. He's managing director at Suyog Telematics. So what they have gotten, or what they've announced to the exchanges yesterday, Suyog, is that they've entered into an arrangement with BSNL for rollout of new sites across India, including Mumbai and the Delhi circles, and 15 sites, if I'm not wrong. Mr. Lature, I hope I'm pronouncing your name correctly, sir. Thank you so much for taking the time out. Good morning. Can you tell us what does Suyog do, and what is the nature of this announcement, rollout of 15 new sites?
No, I am disconnecting.
Hello, Mr. Lature. क्या आप मुझे सुन सकते हैं?
अभी सुन रहा हूँ.
अच्छा, शिवशंकर जी हमें बताएं कि ये सुयोग टेलीमेटिक्स करती क्या है, और ये जो अनाउंसमेंट आपने किया है कि आप बीएसएनएल के साथ 10 साइट या 15 साइट रोल आउट करने वाले हैं, उसका नेचर क्या है?
10-15 नहीं है, वो 10 years and 15 years पीरियड ऐसा है वो.
ओके,
फर्स्ट ऑफ ऑल.
हाँ जी.
ओके.
यस
सर, सुयोग टेलीमेटिक्स इंफ्रास्ट्रक्चर कंपनी है.
ओके.
Infrastructure company like Indus, ATC, like that infrastructure service provider है हम. पूरा ऑल इंडिया प्रेजेंट है हमारा. और अभी जो हमारा एग्रीमेंट हुआ है, सुयोग का बर्थ ही ईपीसी कॉन्ट्रैक्टर एज ए बीएसएनएल हुआ था. 15 मीटर टू 100 मीटर हाइट्स के टावर हमने बीएसएनएल के लिए 1995 से 2005 तक किए हुए हैं. अभी वही सब रोल आउट आईपी मॉडल में हम लोग बीएसएनएल के लिए ये जो अनाउंसमेंट हमने किया है, कल हमारा एग्रीमेंट विथ बीएसएनएल दिल्ली हेडक्वार्टर में हुआ है. अभी इसमें हम लोग पूरे ऑल इंडिया में 2000 का रोल आउट प्लान कर रहे हैं फॉर 2024-25 एंड 25-26. वी आर स्ट्रॉन्ग कैपेबिलिटी टू डिलीवर द गुड्स. So we are expecting this huge profit margin is also there in BSNL. Because हमारा जो system है already existing 5000 site all over India है. इसी के ऊपर second tenancy करके BSNL आने का possibility भी ज़्यादा है. जो already हमने कलकत्ता, वेस्ट बंगाल एंड ओडिशा में हमने
ऑलरेडी किया हुआ है. Got it. So शिव शंकर जी बताएं हमें, ये जो कॉन्ट्रैक्ट है उसमें एनुअल रेवेन्यूज कितने हो सकते हैं? व्हाट इज द पोटेंशियल ऑफ रेवेन्यूज फॉर यू एज अ कंपनी बिकॉज ऑफ दिस बीएसएनएल ऑर्डर?
ये बीएसएनएल का अगर हम 2000 साइट करते हैं तो पर मंथ हमारा 4 करोड़ से ज्यादा का मंथली रेवेन्यू होएगा.
ओके, सो एनुअली यू कुड क्लॉक इन अबाउट 50 करोड़ ऑफ रेवेन्यूज.
यस सर.
एंड दिस विल स्टार्ट, ये अभी ये महीने से चालू हो जाएगा?
जुलाई एंड के बाद चालू हो जाएगा.
जुलाई एंड के बाद, कोड ऑफ कंडक्ट के बाद. सो लेट्स अज्यूम आपको 8 महीने का रेवेन्यू मिलेगा. सो अबाउट 30 odd crores ऑन अ रेवेन्यू बेस. आपने 170 करोड़ का रेवेन्यू किया था FY24 में, उसमें 30 करोड़ और ऐड हो जाएगा.
यस सर.
ओके फाइन. और इस लास्ट क्वेश्चन, आपने बताया इसमें प्रॉफिट मार्जिन काफी स्ट्रांग होता है. क्या प्रॉफिट मार्जिन होगा इसमें?
अभी इसमें है सर 2 टाइप का मार्जिन है. एक तो हम लोग न्यू साइट लगाएंगे, और दूसरा जो है एग्जिस्टिंग हमारा जो पोर्टफोलियो उस पे अगर ऑपरेटर आता है तो इंफ्रास्ट्रक्चर कॉस्ट काफी कम लगेगी. और न्यू साइट के लिए तो मिक्स कॉम्बिनेशन करके हमारा प्रॉफिट मार्जिन जो फिलहाल जो सुयोग का चल रहा है 65% ईबिटा एंड 30% नेट प्रॉफिट होएगा.
हाँ, और वही मार्जिन रहेगा ये नए साइट में भी, राइट?
नए साइट में भी.
Okay, good. Okay, Shiv Shankar ji, all the best to you. Thank you so much for taking the time out and being with us and giving us your thoughts.
Thank you very much, sir.
And that's
Thank you. Thank you.
that's a small company, but hey, I mean the revenues aren't impressive. I mean, thus far also they've done 170 crores, but well,
They
addition
aren't
of 30
impressive.
crores. They aren't, because
Okay.
I mean it trades at 1200 crores, so it's already trading at 6 times revenues per se. But the margins are great. At 63 crores of PAT, they're trading at about 20 times. And if I do a back of the envelope calculation on a 30 crore revenue addition, if they do clock in about this 30-40% PAT margin, that adds about, well, 12 crores to the existing PAT. Not bad.
Yeah, I think maybe a deeper dive warranted on who else are their clients apart from BSNL,
Yeah.
etc. But all right, so that's one interesting story this morning. Let's go across for the larger view to Mayuresh Joshi, who's joining us today. He is HR Market Smith India. Mayuresh, good morning to you. Great to have you on. We have Aditya as well. As I can see, Aditya Arora, founder and multi-asset research analyst at adleatic.in. All right, Aditya, let me start with you on where you see, and let me pick up the key stocks which have been buzzing since yesterday, apart from just indices. Let me come to Hindustan Zinc. Let me come to Vedanta, your firecrackers of yesterday. Do you see that sustenance there?
Very good morning to you and to everyone. Look, I think markets are looking good, neutral to positive, I would say. And the important thing to note is that FIs are unwinding now the short positions in index futures. That's what we saw yesterday in the data. So now the momentum should start, picking up, and market is also discounting good numbers. So the view on the index is neutral to positive on Nifty and Bank Nifty. And if we talk about metals, then yes, this had to happen because commodities were doing fantastically well. Look at zinc in MCX, it's roaring since last 3 days. Look at copper, look at silver, look at gold or nickel, or internationally also few days back. All the metals, commodities on Shanghai exchange was plus 5 to 7%. So yes, when the intrinsic commodity is going up, this momentum will definitely trickle on stocks also. So yes, this momentum may continue, but I think this is the later stage of the rally, because we also saw some profit booking in commodities. Hence, I think one can maintain positive bias, but Hindalco hasn't participated in the rally, so that stock could do well. And second one, Hind Copper, which was in ban, so hence that stock didn't participate. That stock could do well, but overall the outlook on metal stocks is positive, and one should keep the exits close as the momentum is very high. So the overall view is positive.
Hindalco, I know, is one of your picks for the day as well. Aditya, what are the levels you're setting for Hindalco?
I had created an option strategy for Hindalco. So for that, 695 call is a buy at 16.85, 705 call is sell at 12.75, maximum loss potential is 5740, maximum profit potential is 8260. And if I talk about the levels on the stock, then I think yes, 2 to 5% up move is possible in this counter and even beyond.
Yeah. Mayuresh as well is joining in with a fundamental view on the markets. Mayuresh, how are you feeling about metals? I mean, the rally there is a little surprising. Hindustan Zinc eking out 20%, Vedanta, massive run up there. Do you feel like it's a space that you want to start investing in with all that talk about, stimulus coming in from China? Anything that you like here, really?
Morning, Samina. I think a lot of factors at play here, specifically for the entire metal universe. One, I think there is a big hope of the Chinese stimulus that is expected to come through. We've all seen China struggle for the better part of the last year and a half. And with the stimulus expectations, the revival in the Chinese market, and specifically the real estate market, is something that will boost the prospects of metals in general. The second element is for certain metals like copper or nickel, like Aditya was mentioning, there are obviously supply side issues, and you probably see prices zoom up in terms of an anticipation of how these supply side issues will play out. For certain commodities like steel, what you've probably seen in terms of both HRC and CRC prices actually firming up, and input costs, specifically coal costs, going down. A large expectation of the market is that the absolute EBITDA and reported EBITDA per ton should show sequential improvement. And certain commodities like silver, as an example, have hit an all-time high in the past decade or so. So I think there are a lot of factors at play probably for the metals as a space. In our opinion at Marketsmith India, I think integrated players should do relatively better on two counts. One, as Chinese demand starts coming back and as restocking starts happening at some point of time in the next few quarters, you're definitely going to see LME prices move higher, which have probably hit an all-time low, except copper, nickel, and a few other commodities. And the second element is the input costs should also start inching higher as this scenario plays out, which means integrated players should have a better advantage in the next few quarters. So yeah, I think something like a JSW Steel, something like a Hindalco is something that we'll keep on our list.
Absolutely. So metals in focus, PSUs in focus, a lot more to talk to Mayuresh and Aditya about. But first, we'll take a very short break and we'll be right back with pre-open rates and more.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by CRISIL and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on three things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means
Welcome back. You're watching India Market Open. We're gearing up for trade this morning. Implied Nifty indicating to a flat to slightly higher start. But remember, the handover from world markets is largely mixed this morning. So nothing major to take home from what we're getting from Asia this morning. But well, the story goes beyond today. And we have a special actually lined up for you where we take you to the top 10 mega multi-baggers if you're multi-baggers. To exemplify this, if you'd invested 1 lakh rupees in these stocks in 2019, we'll tell you what you could be worth today. Agam Vakil joins in with that list. Agam, 5 years ago, right in between the pandemic, or just at the start of the pandemic, if you had bet 1 lakh rupees on these 10 stocks, you would be a crorepati, to say the least.
To say the least, yes. You would have probably been well beyond that. I'm going to start off with the biggest of them all in terms of the gains, that substantial gains that we've seen. And right at the top, we have Lloyd's Engineering. Now, remember that it did sell a part of its business to Havells. And since then, it has moved up substantially. In fact, that 1 lakh invested would have turned into well over 1 crore, as you can see on your screen there. So perhaps the biggest of them all, 100 times move when it comes to Lloyd's Engineering. And of course, that's as far as how things are panning out there. Let's move on and talk about the next one, which is on our list. Of course, the 5-year CAGR top line is 45%, bottom line is 94%. But let's move on and talk about Adani Green then. Now, this is the other big one. The 3 to 4 years ago, Adani Green actually began with that green revolution, where we actually did start seeing a lot of traction with respect to green energy, specifically solar and wind. And of course, Adani Green has been partaken in it, and it's also seen its revenues move up around 4 times. Which also has an installed capacity now, which has nearly doubled. From where it began, about 250 gigawatts to about 442 gigawatts. Well, the next up on a screen is we have PG Electroplast. Now, this is the consumer durables company, which in fact does a lot of job work, and it has once again gained traction with the significant amount of demand that we've seen in consumers, and that's the reason why we're looking at that multifold gain as far as its revenues are concerned as well. Again, a lakh rupees invested in this one would have resulted in 35 lakh rupees, where its profitability has also moved up 10 times over the course of the last 5 years. Moving on to Ratan India. Now, this one is again considered an auto ancillary because of the products it provides. Again, a lakh rupees would have turned into 35 lakh rupees had you held it for these last 5 years, where we've seen a substantial up move in terms of revenues. Just look at the revenues and the way they have moved. In fact, it's also acquired Revolt Motors back in January of 2023, and that has further led to that inorganic growth in its numbers coming through. Well, let's move on and talk about Jai Balaji. Now, this is where we've seen a little bit of a turnaround. In fact, this turnaround has been very evident in the last 12 months. Of course, at one point in time, the company had undergone, debt restructuring, and has in fact come through its challenges with respect to NCLT, and it's currently undertaking a capacity enhancement. It's guided for about 18 to 20% EBITDA margins by FY26, and that's always a positive, especially for a company which was loss-making just a few years ago, and the turnaround is evident. As you can see, this one would have also turned into 32 lakh rupees if you had invested a lakh in there. Well, the next one on our list is Jupiter Wagons. We've spoken about this one very, very comprehensively. In fact, we speak to the management every now and then on the latest orders. The order flow is for everyone to see, and this one is a big one here. Again, the order book currently at around 7,100 crores for the year gone by. So again, a substantial up move there, with 1 lakh rupees converted into 27. So these are just some of the multi-baggers that we are tracking for you. And of course, we'll continue to give you an update. But that is what we have so far for now. With that, it's back to you all.
Thank you for that. That's, of course, multi-baggers. If we bought any of those stocks for 1 lakh of rupees, you'd be a crorepati, like Agam highlighted for you in the last 5 years. Well, we'll just do a quick move or shift focus to earnings. JK Tyres reported numbers, and the numbers were actually pretty strong coming in from their stable. We have with us Anuj Kataria, president of the company, talking about the earnings and the demand trend and the outlook for FY25.
Yeah, so for the Q4, as you know that we had a top line of 3,714 crores, which was a growth of 2 to 3% on a year-on-year basis. On the EBITDA front, we reported an EBITDA of 497 crores, which is a growth of 28% on a year-on-year basis. And this was basically on account of 3 things which I would call out. One is that our efforts on premiumization have continued to give us the results. Premiumization efforts were not only in the passenger car segment, that was definitely one of the major areas, but even on the truck and bus radial tires, the premium products, the XM series, the XF series, the XT series have done extremely well. And that has definitely contributed to the overall EBITDA growth. The other thing is that we have also enriched the network that we have. We have added more than 100 plus brand shops, which again has helped us to improve the overall margins. our operating efficiencies, better levers deployed in our sourcing strategy. So all this put together has definitely helped us to expand our EBITDA margins by around 28%.
Now, my next question is on commodities as well as raw materials. We saw that the company had a benefit on both these counts in the previous financial year, and we've seen that impact come into numbers for EBITDA as well as profitability in this financial year. Now, so the company has repaid roughly 800 crores of debt in this particular fiscal. It's come down to roughly 3,700 odd crores. The net debt to EBITDA has also improved to 1.75%, which was around the three times last year. What is the targeted level for this particular financial year?
So you're absolutely right. The raw material prices, the basket had started going up even in Q4 of last year. We had seen some commodities going up. The trend continues in Q1. In fact, in Q1, we expect that the raw material basket would go up by anywhere between 3 to 4%. For the year as a whole, we expect that it would be somewhere around between 6 to 7% is what we expect. But again, we will have to find ways and means to negate these. We have taken in the Q1, that the quarter we are in, we have started taking price increases. We have also continued or actually hastened our efforts on premiumization. We're also continuously working on our operating efficiencies. So this is an ongoing task. But yes, this year, we expect that because of the increase in the raw material prices, there would be, it would not be as, the situation will be different and there will be challenges. We are sure that with our efforts on the market facing as well as the back end, we should be able to a large extent, negate the impact of the raw material.
All right, so that was JK Tyre Management. Look at that stock pre-market. In fact, first set of rates are pointing out to an interesting day. Hindustan Zinc once again set for a zoom about 6.5–7% up. I mean, obviously these are pre-open rates, so everything needs to settle. Or maybe I'm looking at it on BSE, which is slightly higher than these are the NSE rates that you're watching right now. So let's just get quick calls now from Mayuresh and Aditya as we go into the trade today. Mayuresh, do you expect the next few days to be about PSUs once again? What is your pre-June 4 trade looking like right now?
Seems to be the case, Tamanna, for a long time now, the PSU trade. But the whole question at hand is how will they perform on the base that they have probably created? And to a certain extent, the earnings might still continue on a very strong footing. Because structurally, I think if you look at stories within the PSU basket, you look at the defense space, you look at power as a space, the order books are pretty full at this juncture, which gives revenue visibility, not just for the next year, for the next 3 or 4 years. They are executing it well. The margins are pretty decent of all these orders as well, which means huge operating leverage being created. And therefore, if they do not miss any kind of execution estimates in the next few quarters, I think the premium valuations might very well continue for these spaces. So I think within the spaces, I think PSU banks is still something from a risk-reward perspective that probably still seem to be attractive. So any decline seems to be a plausible buying opportunity for this space. Valuations also not through the roof compared to the other spaces within the PSU universe. And therefore, expectations in terms of a decent loan growth coming back, deposit growth coming back to normalization levels in the next few quarters, NIM spreads probably getting maintained and coming back to normalcy, which have contracted for both the reasons aforesaid. And strong expectations in terms of asset recoveries, which will directly add to the bottom line, which have been written off and substantially provided for in the balance sheet. So I think Bank of Maharashtra, Bank of Baroda, where EPS, RS rating very strong as per markets with India, should be kept on a watch list. So I think PSU banks as a space is something that we'll monitor.
Okay. Well, PSU banks it is, but I just wonder if like two pockets where the commodity rally, where the rallies are on and whether those will continue. So aluminum overnight has had a really good move, and Well, I know that Aditya has a long call on Hindalco. Mayuresh, I wonder if you would still be tempted fundamentally to invest into a Hindalco, into a Nalco, into a Vedanta, or the million-dollar question, do you have the guts to buy a Hindustan Zinc at these valuations?
Morning, Neeraj. No, so as I mentioned, I think within the non-ferrous space, aluminium players like Hindalco are looking good. I think the other reason that you probably look out for is obviously how Novelis is expected to perform. And Novelis has a lot of value-add components that are now getting added, which have got added in the last few quarters, but which should keep on doing well. Obviously, the value add also comes through in terms of the follow-on offer for Novelis as well. The third aspect also, Neeraj, is the entire fact in terms of the electric mobility business itself. And you probably look at the lithium-ion batteries and the casing thereof, almost 20-25% in terms of the material that is probably expected to get used as an outer casing is going to be aluminium. So I think what you probably expected to see in terms of where the prices are at this juncture, $2,100 per ton on LME, the inventory levels are at an absolute low level across the globe. And as demand starts coming back slowly and steadily, my own take is that LME prices should start inching higher. The advantage Hindalco has got is in terms of its alumina mines, as well as the bauxite mines. And therefore, integration to a large extent will also start shielding any kind of inflationary impact that one might see in terms of input cost inching higher. So I think there is a case to be made for Hindalco stroke Nalco. In zinc, I think it's more a play in terms of what is probably happening with silver at this juncture, what you've probably seen with copper also moving higher, and expectations of lead as well, which is an equally important component in terms of their entire mobility business. So yeah, I think the momentum might continue, but structurally, I think Hindalco on declines probably looks good.
Hindalco looks good. Technically, fundamentally, the stock is looking solid. And like Neeraj said, aluminium prices are up quite sharply. Hindalco itself was up 4% yesterday, up 7 to 8% in the last 5 days. But it seems like it could continue to move higher from these levels as well. Well, we've got a whole bunch of stocks to talk about, but as always, let's go over to Harsh with the top brokerage notes for the day. Harsh, over to you. What do you have this morning?
Well, first off, Morgan Stanley on, very interesting, on BHEL. They've maintained the target price 220 odd. They maintain their rating of equal weight. It's almost a 30% downside to current market price. BHEL came out with numbers. Execution on slightly on the weaker side, and therefore the numbers were weaker than most estimates were looking. In terms of key observations from Morgan Stanley, first off, cash flow from operations negative, but that's largely because of net negative working capital. Again, receivables being the pressure point where cash flows was concerned. They've won orders, of course, 78,000 crore worth of orders in FY24, and their order book now at 1.32 lakh crore. 10 gigawatts of more orders expected in FY25 as well. So the order pipeline decent. But the key point now is going to be on execution. So risks to upside from here. One, a sharp contraction in receivables, stronger free cash flow could prove to be positive. Stronger ordering, better demand, self-sufficiency, that's another point where Morgan Stanley believes there could be upside. Faster adoption of new environmental norms, of course, government intervention required there, or Supreme Court intervention for that matter. Positive control on fixed costs could obviously pose another positive, and a reduced adoption in renewables could also be a positive for BHEL. Risk to the downside though, because target price is 220, increase in working capital, as well as sluggish order demand, as well as a faster adoption of renewables. Some of these factors could play negatively, of course, currently 5% lower in pre-open. Let me though quickly switch over. Hitachi Energy, very strong set of numbers. Double-digit margin guidance expected was in Q4 of FY25. It's come in already Q4 of FY24. And therefore, the margin recovery has kicked in. They've clocked 10+% margins, a 15% margin product, which is the HVDC. Expected order wins from that in FY25 and 26 expected to be in the range of 4,000 to 4,500 crore. That could be a key positive going forward. They've revised their EPS estimates. This is Nuvama. They've in fact doubled the target price, first off, for context, from 6,500 to 13,000. That's what's got this note on my radar at least. And what they've therefore done is they valued Hitachi Energy at 60 times EPS versus the 48 times earlier. They've also hiked their estimates 5% lower on FY25 versus FY24, but on that base a 60% growth expected on EPS in FY26, and the 60 times is what they valued Hitachi Energy at.
So, well, to reach a target, give a multiple which is egregious, because the numbers are obeying that. Thanks a lot for that,
word
Harsh.
of the day, na, egregious. Because
Yeah,
you're finding
use it too much?
valuations.
Okay.
No, I mean, it's reading into it. Valuations are really, something is egregious for you in this market.
Times. FY26.
Yeah.
What do you do for execution risks? It's just crazy.
So, yeah, I guess, but actually, why don't you answer, Mayuresh, for us? You know, we've been discussing this from the start of the conversation this morning. Number of these counters, I mean, a G and TD, case in point, very, very expensive. But, I mean, since when has expensive been a problem in a market like ours?
I think when everything's going good, I think, Samina, everything probably looks very plausible and any excuse and reasoning can be given. But you have to have a look in terms of the base that is getting created for numbers. And if you're probably looking at numbers and data points, I think is the company expected to grow at the pace that it has grown in the past? As the base keeps on growing higher, to grow at 20-25% becomes a little bit of an improbable case every passing quarter for the next 2 to 3 years. And therefore, as Neeraj was pointing out, and as I mentioned as well, I think if there is some element of an execution risk which happens, and it will happen at some point of time, looking at the cyclicality of the businesses, the kind of premium valuations and the multiples that they're getting gets corrected very, very sharply. So I think you have to be careful in stocks which are trading at extremely high multiples going forward.
Well, about a minute left for the markets to kickstart trade. Aditya, can I request you to give us your one top idea for the day after taking into account the pre-open rates? So assuming that the stocks start off where the pre-open rates are suggesting, what is the trade that you would enact?
I like Z Entertainment. Z Entertainment was going through period of long underperformance. I think that underperformance is expected to reverse as suggested by the charts. There's good volume. There are good volumes on the charts, so that suggests some strong hands are accumulating this counter ahead of a breakout. So this seems like a bullish candidate. So one can buy Z Entertainment at 149.30. 138 should be the stop loss, and 160 to 175 would be the target.
Okay, 12 seconds left for the markets to kickstart trade. Remember, the Paytm results are out as well, and we will of course talk about that. A loss which is much higher than the corresponding quarter. But here are the first rates on the market, the more important number that we are looking at, and let's see how the markets are starting off. Well, about 20 odd points, so no big shakes there. Wonder if the mid caps and the small caps, the bank nifty of course deserves a mention first, and then the broader end of the spectrum, about 1/3% or slightly more than that for the mid cap index, if the small, closer to 0.5% actually for both the mid caps and the small caps. So the breadth continues to be okay on open. Metals, just pull up the Nifty Metal Index once before we get to the heat map, and let's see what's happening there, because that was a big mover yesterday. For now, in line with the small caps maybe. Let's pull up the heat map and show you what's moving and what's not. Well, a lot of green, very little red. I want to start with the green first, though must say not one stock is over 1%. So that's the other thing. Dr. Reddy's, maybe the top gainer. ONGC gains. There is an upgrade by Nomura today to a neutral rating for ONGC. There's strength in Coal India, Tata Steel, JSW Steel. So clearly metals doing okay. We're seeing Adani Ports take off from where it left yesterday, another 0.5% for that one as well. Don't quite see Adani Enterprises in that list yet. There is NTPC, HUL. So actually not too much, but for a Dr. Reddy's, Tamanna, which is doing well. It seems to be a broad sense of green without any key winners emerging, save for a Dr. Reddy's today.
It's like pushing the snooze button on your trade right now. It's a complete pause in taking any real risks from what is very clear. I just want to pull up the broader markets very quickly, and of course our eyes on that Paytm number, which we'll come to in a bit. Broader markets not doing as badly, a little more, I would say, signs of life. on the mid cap and small cap compared to the indices. But like yesterday, the action is stock specific and not necessarily the indices. So let's look at that and what's happening there. Hindustan Zinc top gainer yesterday, stellar performance on the markets yesterday. Does that continue is what we're looking at, and not bad at all, about 6.5%, 7% up. If I could just get that screen to face me, that would be easier. Apollo Tyres is the other one that I wanted to see this morning because you have the stake sale by Warburg Pincus coming in at about 5%. Hitachi Energy was on our stocks to watch list as well. Good numbers. Your brokerages are excited about it as well. Q4 above estimates, and that's about 5.5% up. JK Tyres also another good set of numbers, and the stock doing really well this morning, about 8%, 9% up right now. 197. Now 197 is the interesting one, and we have the first cut of numbers here as well. I'll quickly go through those. Net loss at 551 crores versus 222 crores. Now remember, this is the rough and tumble of the quarter that we need to see. These are the set of numbers which actually tell you what the impact has been of all of the RBI's regulatory actions. So your EBITDA losses have widened to 223 crore rupees in this quarter, and of course your net loss is over 500 crore rupees. That stock taking not that much of a beating, frankly. Revenues at 2,267, so a drop of 20.5% there as well. Maybe the expectations were of a deeper revenue loss, so 1.5% down. I would say maybe not bad compared to what those first numbers look like, but definitely expect a deeper cut on Paytm. BHEL had another set of disappointing numbers. Brokerages also look at maybe FY26 onwards, your higher margin projects flowing in, but FY25 will also not look too great. Order book is decent. So BHEL down about 4.5%. GE and TD, stock that Samina had also picked up this morning, about 5% up. That's a beat on numbers. And Dollar Industries, I would also look at. The margin increase was decent, but perhaps not enough for the street. So those are some of the stocks that are showing some movement and action. But yeah, Paytm I think would be the big story this morning to watch out in terms of what happens with those numbers. The stock not doing too much.
So far. Well, we'll find out in a few minutes how much worse can it get for Paytm in terms of stock performance. But a couple of counters worth mentioning. But before that, the broader markets not doing too badly in trade. Outperformance on the mid cap and the small cap index and the micro cap index too. Remember, the broader markets have been outperformers year to date, and that continues into today's session as well. Paytm numbers are below, slightly weaker than what the street was expecting, but much of it could be in the price, and hence you're not seeing a very sharp reaction just yet on the counter. A few that I want to mention is the tyre companies. JK Tyre reported numbers. It was a good quarter for them year on year. Quarter on quarter slightly soft, but YOY a pretty stellar performance. The stock is up 8% as we see it. Apollo Tyres, Warburg Pincus sold its last block in Apollo Tyres, 3.5% a few minutes ago. Post that, the stock has found its place and a bottom trades with a gain of 4% as we see it. PSUs and its railways this morning once again. RVNL, IRTC, all those counters up and about. RVNL is up 4%. IRCTC is trading flat right now. RITES, if we can pull that one up. Rail Vikas Nigam, IRFC is now up 2%. RITES also trading flat, but of course will continue to do well as we progress through the day. Stock of the morning once again is Hindustan Zinc, 8% already in the first 5 minutes itself. The stock is turning out to be one of your top trades in play right now. Action Construction reported very strong earnings once again, but remember the stock has ran up quite well. But despite that, a 3.5% gain on Action Construction. GET&D, let's take a look at that one. It's a very expensive counter like we've highlighted for you. The stock trades with a gain of 5% on back of good earnings being posted by the company. Adani Group names, once again, having a pretty solid day of trade. So Adani Power, Adani Green, if you can pull they're having not such a great morning, but Adani Green is up marginally. Adani Port trades flat as we see it. Adani Enterprise also having a flat morning. A few smaller mid-cap, micro-cap names that I want to quickly highlight is Gulf Oil. Profit was pretty solid, so the stock should be seeing a good reaction in trade. 7% on Gulf Oil is what we have. PI Industries, that's the other one, if we can pull that one up on the screen. Maharashtra Seamless, Ramco Systems. I'm going to quickly run through the list so we can take you through all those big movers. Maharashtra Seamless, weak numbers, the stock is down 6%. Dixon Tech is up 3% this morning. Morpen Laboratories, strong earnings, profits have jumped substantially. The counter sees should see an up move, 8% higher on Morpen Laboratories. Tilak Nagar Industries, numbers were weak. Sheela Foam, good numbers. That's it. Tilak Nagar down 7% on weak numbers. Sheela Foam up 4% on those earnings. Lakshmi Organics, Religare Enterprise, Hitachi, Ircon International are some of the other ones. So you've got Hitachi that's up 5%. Ircon, if I can quickly get that one up, and Religare Enterprise, if that could be pulled up on the screen. Let's see what it's getting up to. Lakshmi Organics is up 5.5%, 6%. Religare Enterprise is a cut of 1.5%. So VA Tech, Wabag, that's the last one on my list. And of course, then hand it back to our guest. The stock should be reacting and responding to its earnings. 3% cut as we see it. Aditya, any spots this morning? The morning again belongs to Hindustan Zinc. Hindalco has started off soft. A good time to buy and pick this up right now as we see it?
To talk specifically about Hindustan Zinc, looking at the chart patterns, I feel the short-term top could be very, near, it could be just around the corner. 810 is an important resistance for the counter, and we have seen the high as 807.70. So I think good time to take chips off the table. There could be some, profit taking on this counter. So I think one shouldn't go aggressively long on metals now. Because the theme has been very overstretched. I talked about Hindalco because that stock hasn't participated, and Vedanta also seems pretty overstretched. So only two stocks which I think can outperform the basket relatively is Hindalco and Hind Copper. And on the other counters, I feel there could be short-term dip or some profit booking. And I think in Hind Zinc specifically, there could be good profit booking.
Mayuresh, any view on the first cut of Paytm numbers that we've seen? There's an impairment provision that we're reporting at about 227 crore rupees. The stock obviously reacting negatively. This is the quarter where you would see the full force of RBI action on the balance sheet. Any first thoughts?
No, you're absolutely right. I think this will be the quarter where the maximum impact of RBI norms will take place. And therefore, I think it seems to be observed the way forward for Paytm and the management strategy going ahead as well. So I've not seen the numbers in detail, Tamanna, to be very honest. So let me have a look through the numbers line by line item and what the management has to say. But generally, I think far better stocks in the broader market to probably look at this juncture.
What are those far better stocks? And fair enough, the numbers are flashing on the screen as we speak, so we need some more detail there. But any of those far better stocks, as you described them, Mayuresh, this morning include your Rail Pack, your RVNL, etc.?
No, so I think we've got something more diverse. So what we like is FDC at Market Smith. Our take is that the numbers have been pretty solid for 9 months FY24. They've done almost 1,500 crores in terms of top line. The expectations in terms of their branded formulations business, both India and the US, is expected to do well. We are all very well aware of their brands. Electral expected to do phenomenally well going forward as well. An introduction of more products expected to come through in the next few quarters as well. So expecting solid top line growth to continue. Margins have expanded pretty well as well. And therefore, I think the entire balance sheet construct looks very, very robust at this juncture. The other stock, as I mentioned in last week's program as well, I think the domestic infrastructure capex theme continues. And therefore, Welspun Corp is something that we continue to like at Market Smith India. One of the largest global manufacturers in terms of line pipes, ductile iron pipes, with a capacity of 2.2 million. They're setting up a huge plant in Saudi Arabia in terms of their ductile iron business as well. Expectations in terms of the Nal Se Jal Yojana, which is almost 70,000 crores in terms of allocation. The piped gas, which is expected to go to 15% from 16,000 odd kilometers to 27 odd thousand kilometers. will mean that more pipelines are expected to come through, and with good margins as well. They've reduced their net debt, and therefore, from a balance sheet construct, from expectations of earnings growth, the EPS, RS rating, the institution holding as we see it, and canceling, I think most parameters are getting fulfilled. So I think FDC, Wellspring Corp, some of the stocks that you can keep on your radar.
All right, another section which is buzzing this morning is your realty space. Phoenix Mills, I think a day and a half after their numbers came out, is responding positively today, 4% up. Macrotech, Godrej Property, DLF, all your usual suspects are doing fairly well. The news story this morning is also the 197 numbers. Paytm's Q4 net loss has widened to 551 crores. Pragati has had an opportunity to look at the first cut of numbers. Pragati, what do you spot?
Hi Tamanna, good morning. Yes, weak set of numbers coming in from Paytm as expected, but still missing the estimates which were given by Bloomberg. As you mentioned, the net loss has widened to 551 crore. In the previous quarter, it stood at 222 crore rupees. If you look at the revenue, it is down 20.5% on a quarter-on-quarter basis to 267 crore rupees. Again, the revenue down was expected because, of course, the business of Paytm or 197 Communication has been impacted after the RBI clampdown. But if you look at the EBITDA loss, also it has widened to 223 crore rupees. Now, just to bring in some context here, on 31st January, RBI had a clampdown on Paytm Payments Bank, which was the payments bank or the arm of Paytm from where majority of business or a lot of business was coming in. So naturally, because of that impact, we are seeing this weak set of numbers. We must remember this is a very important quarter. This is because it's the first quarter after RBI's clampdown. This is why we are seeing numbers on a sequential basis. We must also remember that that Paytm has made an impairment provision, that's what they are calling it, of 227 crore rupees in line with RBI's clampdown or due to RBI's clampdown. They also said that they are expecting the financial impact to be rather less in Q4, but the full impact to be there in the first quarter of FY25. Accordingly, they expect a revenue impact of 1,500 to 1,600 crore and EBITDA before ESOP about 500 crore rupees. So a very mixed set of numbers, definitely in line with weaker expectations, but still missing the Bloomberg estimates. This was the first take for you. We'll bring you more updates as and when we have them.
Yes. Sorry, so that was the first cut on Paytm. Of course, we'll wait for those updates as and when they come. Mayuresh, I just wanted to get your take, not on Paytm, I know you need time to see those numbers, but on Nykaa Sun Pharma, only because those two are also expected today. And, as we're on the fag end of the result season, do you expect anything exciting from either of the two?
Not really. But again, I think the pipeline for Sun Pharma, Tamanna, looks very, very interesting because what they probably got in terms of their phase 3 trials, specialized drugs, and as they come to a conclusion stage, the kind of exclusivity that Sun Pharma will get for a few of these drugs as it happens over the next few months and quarters, that exclusivity will give them good revenue visibility, good margins. And therefore, I think the product pipeline that Sun Pharma has created is something to probably look at. The second element obviously has been the FDA concern surrounding their plant. And if there is some element of positive traction happening on this front over the next few months and quarters as well, I think that gives a huge boost in terms of more products that can come through this plant as well. And last but not least, I think the R&D expenses have now got normalized to a large extent. And therefore, margins would relatively remain stable at this juncture. With more FTFs and ANDAs coming through on the specialized front, there is some element in terms of margins actually expanding from the base that it is creating. So I think there are a lot of positives at play here in terms of earnings levers for the stock itself. And a very clear disclaimer, we continue holding this stock in our global portfolios.
Okay. Mayuresh, we'll let you go on that note. Thanks so much for that. Really appreciate your time. Aditya, we have to slip into a very quick break, but if you can give a quick answer, do the Adani Group stocks within that bucket of 10 stocks, which one looks good or which one looks bad? A quick answer, please. Yeah.
I think Adani Port looks good. So that stock has done a lot of consolidation now. The stock could, give a breakout above levels like 1420. So my pick would be Adani Port.
Appreciate this, Aditya, and thank you so much for taking the time out and being with us today on the show. Really appreciate your time. Take a quick break. Back with the management of GSFC on their numbers.
some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker.
Right, back with India Market Open right here on NDTV Profit. Now, a lot of you must be wondering what's happened with BHEL. The stock is amongst the top losers on the BSE 500, down about 6.5% today, or 4.5% now, but with reason, by the way, I must say, because BHEL numbers have looked wobbly and their guidance also, while constructive, leaves a lot to be desired. I think the real question mark, of course, is over the valuations of a BHEL. Now, one, the numbers missed estimates on almost all counts, whether it's top line, whether it's margins, whether it's bottom line, the numbers were below estimates. So that's the first key thing that came in. Then, if you look at the con call takeaways, there was optimism, yes, but the companies said unequivocally that they may not be able to better the margin profile that they did in FY24. So in some sense, there is no uptick on margins that is coming in. On the trade setup, we use a slice of the con call takeaways. There are 2 or 3 positives out there, which I want to highlight before I talk about anything else. So now these are the results notwithstanding, the company said that they are very constructive on the quantum of gigawatts of order flow coming in for BHEL. So that's part one. And they are also constructive on the defense segment. In fact, they are going to launch a prototype sometime in this year as well. So in some sense, for the outlook being given, it's very positive. But here's the thing, that it trades at valuations which are so expensive that CLSA, despite factoring in a 1,500 crore operating profit versus 280 crores in FY24, still has a sell on frothy valuations. So that's the thing about BHEL. Now, the other thing is GSFC, where the stock has corrected, I would suspect has corrected today. Let's bring that stock up. I'll be really surprised if it's not corrected. Down about 7.5% because the numbers leave a lot to be desired. Mr. V.D. Nanavati, the Executive Director of Finance and CFO of the company, joins us right now on the phone line to talk about these numbers. Mr. Nanavati, thanks so much for taking the time out. Now, good morning to you, but I understand that it's not very happy hunting grounds for fertilizer companies because the raw material prices are moving up, subsidies not there, and it's showing in the hit that all companies are taking on margins, including yours.
Correct.
So what's happening? The outlook, and why did this happen, and how bad can it get?
No, it will improve. I mean, this is the bottom, along with the lower, subsidy level versus higher input cost. We also had the Red Sea crisis that delayed the shipment of inputs in the Q4. So the production and sales, everything were affected. But we are hopeful to get back the ground in this current financial year, and 20% growth, volume growth we expect in the fertilizer volume on the, with the backup of the good monsoon that is predicted in the country, and the higher production at Sika unit we are planning, plus one more fertilizer plant set up at Baroda unit of ammonium sulfate. So with the support of these new facilities, we will be able to achieve higher volume of around 23 to 24 lakh metric ton in current FY. So that is what the positive thing is. As far as IP industrial product is concerned, still the headwinds of lower realizations continue, and immediately we don't see any turnaround in this chemical sector. So still there will be we'll be meeting the demand, there will be turnover, but margin will be under pressure.
Okay. So I hear that you're saying that there will be volume growth, Mr. Nanavati, but will that volume growth of 20% or even 23, 24% have operating leverage benefits? Would margins move up from either the 1% in March quarter or even the 5% in December quarter, which is not great either? What do you expect FY25 average margins to be like?
Yeah, we also see some margin growth in FY25 over the yearly performance of FY24.
How much?
Over FY24, whatever PBT we achieved, we see some growth in the PBT in the current financial year. So some improvements in margin is seen.
No, sir, sorry.
You know,
Sorry, I just want clarity. You are anyway showing a volume growth, so the PBT is going to go up. I have no doubts on that. My question is, from the 6% EBITDA margin that you've plotted, or operating profit margin that you had in FY24, can it go up to 7, 8, 9%? Or would it be double digits, or difficult to say?
No, difficult to achieve. But let us hope post-election result, some improvement in the subsidy regime also is taken to correct this anomaly at present, because still the raw material prices are high. It's not gone down the way subsidy is structured for the FY25 also. So already government is feeling the shortage of DAP in the country, and fertilizer companies are reluctant to either produce or import DAP. So this Kharif season, there is likely to be quite a good shortage in DAP, and that cannot be, tolerated. Demand has to be met on the back of the good monsoon. So some correction in subsidy may be considered post June or July.
Right, so I think, Mr. Nanavati, fair for us to assume that the first quarter of FY25 may still be a little soft, and we hopefully will see the sector and your company seeing an improvement in earnings going into second quarter of FY25. One of the good things about GSFC also is that you're debt-free. So any sort of planned capex, which you were fairly aggressive on last year, would have been self-funded. Can you share with us what is the cash positions at GSFC currently?
Yeah, so the published result, that is the balance sheet, shows the cash position. We have cash around 2,200 crores as on March end. So, and as you said, it is debt free. And our capex plans are also uploaded. Going in the next 5 years, we have capex plan of more than 6,000 crores. So we plow back all our earnings in form of growth as well as to reward the shareholders.
So Nanavati, it's interesting because exactly a year ago, the cash on the books was about 1,400 crores and now that's down to 200 crores. I do understand that you're plowing back all your earnings back into the business for expansion purposes. But given that things have been fairly muted in this quarter, those numbers, not just for you, but industry-wide are slightly weak. Is there any expectation of raising some debt to cross over, or for now that's not even on the radar as we see it? Or potentially a delay in expansion plans could possibly be an outcome of this?
No, CapEx plan will continue as planned and as shown in the investor presentation. As far as the borrowing is concerned, it is not immediately required. So the borrowing may happen after 3 years from now. So maybe FY28. If we need money, we will borrow. Otherwise, right now, we are okay with the fund position and internal accruals.
Mr. Nanavati, one thing on the dividend, because there's this whole talk about the dividend policy for some of the Gujarat PSUs. What's the update there? What's the dividend that you will be giving, or via subsidiaries if you're getting some?
Yeah, so we have declared 200% dividend in the yesterday's board meeting. It is little lower than that government guidelines because it is not also prudent to have a very large payout ratio when your PAT is low. So if we strictly follow guideline, it would have amounted to more than 75% payout ratio for the dividend. But that is not sound financial practice, as well as in view of the impending capex also, and plus government policy of reasonableness of profit guidelines, where you have control on your business aspect of the profitability also. So considering all these things, we need to be cautious in declaring the dividend. So the board declared 200% dividend instead of say 500% last year.
Thank you very much, Mr. Nanavati. Good luck. I know things are tough, but we really hope that it comes out of the woods because things have deteriorated substantially for the sector in the last couple of quarters, but we hope it works out for you. That's JFC. Market's not very pleased, but no surprises on back of those disappointing earnings. Real estate is in a good place. Real estate is in a good place, but so is railways and so is some of those defense names that continue to trade higher in trade as we see it. We'll take a break. We'll come back. We'll talk to ICICI Securities, Vinod Karki, to get a sense of what's happening with FPIs and what mutual funds are also getting up to in terms of buying, selling across the broader market funds.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by CRISIL and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits.
Welcome back. You're watching India Market Open. It's a quietish kind of morning as we see it. The Nifty, of course, oscillating between gains and losses, but the broader markets aren't doing too badly. 22,500 is what we're trying to hold on to. Well, we have a special guest this morning, Vinod Karki, Senior VP Equity Research of ICICI Securities, joining in on a recent report put out by ICICI Securities. Vinod, firstly, a very happy birthday to you, and thank you for taking out the time to be talking to us on your birthday.
Thank you so much. Thanks for the kind wishes.
Vinod, let's start with what the biggest talking point on the street has been for the last couple of months. FPIs have turned net sellers. FPI holding in Indian equities at a decade low. Those are largely headlines. At the same time, the Nifty, of course, trades close to its life highs. So you'd imagine that with FPI selling, the markets would be under pressure, but that's actually not happening. Give us a sense of what FPIs are feeling. What is the reason for the selling? What are you picking up?
Yes, so if you look beneath the so on headline, it seems that current year till date, we are, I think, more than 2 billion negative outflow. But when you look underneath, what you realize is some of the, what you should say, excesses of the past. Some of these private sector banks where FPIs had a significantly higher weightage, I think that is reversing. So typically, when you look at FPI selling and the risk-off environment, which is called, you have to look at which sectors are getting sold off. So the association is very simple. If you have a risk of selling by FPIs, what gets sold off is the high beta stocks like PSU banks, industrials, autos, real estate, capital goods. These are the typical high beta sectors which get sold off during a typical risk of selling.
Right.
But if you see currently CYTD, all these sectors which I just named actually have been bought by the FPIs. What has been sold by the FPIs is the opposite, which is the defensives, which is IT, FMCG, global commodities, and these few private banks where bulk of this selling is actually concentrated. So which doesn't give me a sense that the FPI selling is something which can be a signal of a risk of selling by FPIs. That absolutely is not there in my mind.
So it's, so then if it's not risk off, it's very sector specific. So like you said, banks are seeing some selling, but anything that's domestic consumption facing potentially is seeing an inflow. Does that mean that once elections are behind us, if the fresh money and new money is going to come back in, it will be focused on these sectors itself? Or do you think banks and other sectors such as that, which have seen an outflow, may see a return of funds?
Yeah, so let me clarify. So within banks, the PSU banks actually have seen buying. So they are the more cyclical domestic, assets. And within the domestic companies, as I said, it is more to do with the investment cycle, the capital goods and other sectors, industrials. Auto obviously is high-end discretionary consumption. But when you say about low-end mass consumption, FMCG, there is selling. And there is selling in the other defenses, which is related to global economy, which is IT and global commodities. So that seems to be the color of where FPIs are taking a bet and where they are withdrawing money.
Vinod, birthday greetings to you. I hope it's a fabulous one, and thanks for speaking to us on this day.
Thanks, Nick.
Just wondering, Vinod, if all of this is not an indication, there's a lot of buy-side fund managers who are talking about how their conversations with fund managers based abroad indicate that people are waiting for the event to get over before they deploy the remaining 5, 10, 15% as the case may be that they have. It's not a question of valuations, but a question of that event going. Do you sense the same as well in your conversations with your clients, or is it different?
Yeah, so first of all, the action itself. I mean, as I said, if the FPIs are buying domestic cyclicals, at the same time going into an event risk, what I feel is happening is some amount of hedging may be happening. That's why on the derivative market, you're seeing significant short positions. So it's a classical case where you have built cash positions in cyclicals, but then there is a risk of a event happening which can be adverse. I mean, if you look at past data, it is very clear that any adverse in elections precisely hits these kind of domestic cyclicals. So I think there is this which is happening that, okay, on the cash side, domestic cyclicals are being bought, but significant amount of hedging is happening if at all there is some kind of adverse.
Right.
Seems like that.
Right. Vinod, let's quickly shift focus to domestic institutions. Where is their bias sitting? Because what we've seen is that while the expectation is that FIs usually like the large cap part of the market, it's the DIs that prefer the broader markets, and currently that's largely the trend. What have you noticed with larger mutual funds, sort of flexi cap fund, a multi cap fund, even a large and a small and mid cap? Are they increasing their allocations to the broader markets, or are you seeing more buying, which is value buying, on some of the large cap names right now?
So if you look at the domestic mutual fund action for April, it's very clear that we haven't seen any in any category, be it mid, small, or any of the other categories where we have seen outflows from these funds or selling. There have been some, whatever it is, there's incremental buying. But on a larger scale, because if the FPIs are selling large portions of private sector banks, select private sector banks, obviously the only entity which can absorb that huge amount of selling is the domestic mutual fund. That is reflected, the highest buying is observed in some of the sectors which, as I said, the FPIs have been selling, so that automatically translates. These are two big institutions which trade with each other. So that's what we have seen. But overall, the flows remain positive from domestic mutual funds. The flows into their schemes continues to be at record high, and their deployment continues to be positive.
Okay. Vinod, very quickly before we wrap up, are you doing any kind of positioning ahead of the June 4 event? There are multiple notes from multiple houses which are saying that we are even doing a strategy ahead of the June 4 verdict and then for post. Are you doing the same? Are you doing anything before the June 4th event?
So two things, Raj. One is the tendency over the last several elections. The election-related volatility has only dipped over the years, right? So that is one point. But that doesn't mean that it will continue. But in the larger scheme of things, so we believe that the investment cycle is on its way up, basically. And the profit cycle has reached 5% of GDP. The ROE is at 16%, which is the highest after the US. So that's rising. So in this scenario, if you look at the past data between 2003 to 2007, when the index went up 7x, basically, the election-related volatility which was created in 2004 was one of the few big entry points because the economic cycles were on their own rising significantly despite political uncertainty. So the larger picture is that if you get high volatility, I would say one should buy into the dips, right? Because I don't see any cracks in the economic cycles. And in my view, that is a bigger factor than just some amount of political uncertainty. Having said that, what we have observed is that actually the volatility has been reducing. So I don't see volatility rising much more than what it has been over the past. I don't see any factor which can increase this volatility significantly. That's what I feel.
Got it. Vinod, much appreciate you taking the time out and being with us today. Have a fantastic birthday and a great year ahead. Thanks for taking the time out.
Thank you so much.
That's Vinod Karki. Love talking to him. The data that he presents is pretty good. And we'll try and have a conversation with him post June 4th as well to try and understand what is his latest strategy. But if in your strategy, if you missed out on some of the key multi-baggers, then well, Agam is here to make you and me feel miserable about that. Agam, some of these guys have had a terrific run and for reasons which might be fundamental in nature as well.
Yeah, so, well, that's certainly the case, and we have seen some staggering gains coming through over the course of the last 5 years. Of course, this is a look back, and well, 5 years down the line, there's going to be plenty of other counters, but let's talk about the counters which have in fact done so very well over the course of the last 5 years. So right at the top, we start off with the counter which has in fact moved up. Well, your 1 lakh rupees has become a crore and over that, and that's the first one on your list. That's Lloyds Engineering. We know that the company has in fact sold its division to Havells. This was back in 2017 for 1,600 crores, but it has also revamped its business. And you know, on over a 5-year CAGR, we're looking at a top line growth of 45%, bottom line of 94%. Well, moving on, the second one on our list is Adani Green. This one is also something which has moved substantially higher, but remember that a lot of changes in Adani Green came through over the last 3 years. This was with the adoption of green energy in general, and you know, solar and wind coming into the fore. And well, Adani Green clearly has taken advantage of that, because we've actually seen installed capacity now well, nearly double from where it began well, about 5 years ago. Well, let's move on and talk about the next one, PG Electroplast. Again, well, giving out and you know, catering to the consumer durable segment, and because of the nature of this business and the kind of demand that consumer durables has in fact seen, we've seen revenues move from 641 crores all the way to nearly 2,500 crores. As far as your PAT's concerned, again a substantial improvement there, but remember that margins are not as high for PG Electroplast because it does take up job work here. Let's move on and talk about the next one on a screen. This is Ratan India. This one, of course, caters to the auto sector. And here as well, your 1 lakh rupee would have turned into 34 lakh rupees. So a significant up move there as well. And you know, in terms of your other factors which have in fact moved in favor of Ratan India's its acquisition, which has actually added to its inorganic growth as well. From there on, we also talk about Jai Balaji. And now this one is a turnaround story. Over the course of the last 12 months, it has in fact moved from loss-making to profit-making, and it has, of course, undergone several challenges with respect to NCLT. It's also undergone a corporate restructuring of sorts, and the undertaking capacity now, of course, I'm looking at about 18 to 20% EBITDA margins for FY26 is a big positive, and that's also the reason why it's had a staggering 12 months. Jupiter Wagons is a story, it's well known out there because we've actually been giving you updates on a regular basis and also talking to the management on a very, you know, from time to time to talk about the beneficiary of being in the capital expenditure as far as India is concerned, and which is why the order book has also you know, moved up substantially to around 7,100 crores. Of course, it's not just Jupiter Wagons, right? Because we've had plenty of other companies which are also in focus. Elecon Engineering is the other one where your 1 lakh rupee would have moved to nearly 23 lakh rupees. Again, this is where we're looking at a fairly decent revenue CAGR of around 23%, and in fact expects to make another 15% revenue growth in FY25 as well. Another very steady counter which has moved up substantially, and you know, FY24 specifically has been a very good year for them. Anant Raj is the other one where it benefits from a strong outlook. Now Anant Raj, of course, is in the real estate sector. We know what kind of 18 months the real estate sector has had, another key beneficiary, and it's looking to scale up its operations here as well. Aims to be net debt free by December December of 2024. So, that's fairly uncommon for a real estate company. And HBL Power is the other one. Again, this provides power products here, and look at the kind of growth that is seen when it comes to its profitability. This 1 lakh rupees would have grown to around 21 lakh rupees. Its EPS has also moved from strength to strength. Next one on our list, of course, is Adani Enterprises. Well, no prizes for guessing here. This has incubated several of businesses, and it perhaps gains the most when any and all of its businesses move on and mature, and naturally it stands to gain here. Of course, the current valuations would have been 20 lakhs if you had invested one, and well, there are plenty of other factors that have moved in favor of Adani Enterprises. Of course, 2 of the top 10 big multi-baggers are from the Adani Group company. So standard disclaimer there that the channel that you're watching is also an Adani Group entity. But plenty of money made, hopefully, at least for some in the markets. And well, we're going to keep an eye out on which are those stocks which are going to be the staggering big multi-baggers over the course of the next 5 years.
Well, if only one can predict that, but Agam is right. We keep an eye out for them, and of course, we will report them as we see them. But with that, it's a wrap on India Markets Open. Thanks so much for tuning in. Up next is Talking Point.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms
Hello and welcome to NDTV Profit. I'm Neeraj Shah and you're watching The Talking Point. Joining me today on the show is Aditya Khemka, Fund Manager at Ingrid Asset Management. The case for a chat today, obviously around healthcare. Aditya specializes in that. And we thought we'll pick up different facets of healthcare to try and understand what is it that we should be talking to him. So let's get the case for a chat first up on your screen. Pharma opportunity, will it lie in the small and mid caps? Or will it stick with the large caps, as is the case in some of the other sectors? Can diagnostics come of age and even go and outperform hospitals? Or is that even a consideration while investing into these stocks? We'll ask Aditya because he's been constructive on diagnostic companies for some time. And is the CDMO space at a turning point? I think that is the other key thing that we need to probe with Aditya today. Aditya, great having you as always. Thanks for taking the time out. I hope all is well.
All is well, Neeraj. Thanks for having me.
The pleasure is entirely ours. Aditya, the earnings season has seen some of the companies or most of the companies come out. We've seen diagnostic players, CDMO players, even pure play pharma companies come out. It's the quarter and it's the year gone by. What has stood out for you?
So what has stood out are two things, Neeraj. Number one, the large cap pharma companies or the unbranded generic companies, they have done fairly well compared to our expectations. I think they have done better than what we had expected. And that doesn't seem to be driven by the broader market rally because we still don't see enough evidence to infer that the broader unbranded generic market fundamentals are improving. But yeah, there are product-specific opportunities which are playing out well for the unbranded guys. So that has been something that has outperformed our expectations. On the other side, we have seen hospitals underperforming expectations, and we have been saying that the valuations of hospitals have probably run far behind, what was fairly intrinsic value. And hence, now that the hospital's earnings momentum is slowing down or normalizing, I think hospital stocks seem like a difficult trade at this point. And lastly, diagnostics have done phenomenally well. The top line growth has been far beyond our expectations. Margins have been a little, I should say, subdued, but I think that's mostly driven by the need for capacity expansion or the need for geographical footprint expansion. And hence, that has depressed margins for diagnostics. But I think that, as always, is temporary because once the expansion starts bearing revenue, you will see the margins expanding to normal again.
Okay. Can I start off with the larger one first, Aditya? Because I've learned it from you that you try and think of some of those US exposed multinationals, Indian multinationals, as FMCG players and play a cycle. Now, I would love to understand from you, where in the cycle are we? Is Revlimid strong enough for this cycle to continue? When does the market start discounting the end of the Revlimid revenues, and do the companies do something else by then?
Sure. So I think Revlimid, all of us know, it's a known fact that in 2026 the product goes off, the patent goes off, and there will be stiff competition, price erosion, and these companies which are making $200-300 million on that product today, that number will fall to, I don't know, 10, 20, $30 million. So and it will become like any other product opportunity in the past. So I think that's clearly there's clearly a deadline after which Revlimid is not going to help earnings. In fact, it will hurt earnings because it is currently a large part of your earnings, and then it will go down to virtually zero or any insignificant number, right? So when does the market start discounting that? It's a puzzle that it's anybody's guess. Market should have already discounted it, if you ask me, because we always look 1 year forward in terms of price targets, and hence 2 year forward in terms of earnings. So, and 2 years forward, Revlimid will have no impact on the earnings that you project for these companies, and hence market should have already started discounting that. But I think there's also an element of momentum of the market, right? So if the market is in momentum, stock prices are flaring, then these things take a backseat. The fundamentals take a backseat. It's more about PE multiples and what cash flow you can generate this year and visibility for the next 2 quarters. I think those things take more of a front seat in a situation like this. So no doubt the unbranded pharma companies will have a tough time 2 years down the road for sure in displaying any growth in earnings. When the market starts discounting that, I think your guess is as good as mine. It's just a matter of perspective there.
Now, I'm certain that your perspective is much more informed than mine, Aditya. So hence the need to ask this to you. I'll stick to pharma first. We'll do healthcare or the broader healthcare in the next segment. But pharmaceuticals, CDMO players, the other aspect. You would have guessed that I would ask you about it. Because Aditya, the commentary seemed, how do I say, constructive, mixed constructive, if you will. Because players are talking about the possibility of R&D spends coming back, contract sizes becoming good, but back-ended, maybe in the second half. And we've heard the possibility of this now for a while. Are you baking in positives here for CDMO players, or is there still some time before you start becoming constructive?
So Neeraj, unfortunately, I think the response to this question is very company specific. Something like a Syngene or a Newland may have a tough FY25 because they had a great FY24. So see, the CDMO business, especially when you deal with innovators, it tends to be lumpy. Now the lumpiness is not just within quarters, sometimes it's within years also. So an innovator might give you a project which you have finished in year 1, and he may not give you another project till year 3. So in which case your year 2 over year 1 will not look like a good year, because you did a project in year 1 which is not recurring in year 2. Similarly, let's say if you're contract manufacturing innovator's product, he just might buy enough inventory for 2 years in 2 quarters. And then for the next 1.5 years, you don't have any orders for the same product from the same innovator. And hence, your again, year 2 will look difficult compared to year 1 because you have recognized all the revenue in year 1, and year 2 will not have much of revenue from that product. So, when they invest in CDMOs for innovators, needs to be cognizant that this is a business that if it is not very broad-based, if it is not broad-based across several clients and several projects, which just today isn't the case in many of these, CDMO companies in India, given that their scale is really small. Compared to global innovators, if you look at WuXi, Lonza, Catalent, Recipharm, compare these companies' revenue, they are like 1/5, 1/6, 1/8 of the revenue these giants do, with whom they are competing in the marketplace. So yes, you have to be prepared for lumpiness. The lumpiness can be within quarters, can be within years. But if you take a 5-year view, which is generally how we operate with a 5-year view of, where the stock or where the earnings would be in 5 years, then these lumpinesses doesn't bother you. In fact, every dip gives you an opportunity to add, and, so that you can build a sizable position by the end of the 5th year. And I think that is where things look really, really good for the CDMOs based out of India. But yes, FY25 would be difficult for companies like Syngene or Newland. They can be really good for companies like Heikel, for whom FY24 was not a good year. So again, which is why I said it is a company specific. It's not going to be, a routine thing for everybody. FY24 for Newland was a great year, but FY24 for Heikel, despite Heikel also being a CDMO player, it wasn't great. So you have to look at it from a individual business standpoint and not really from a CDMO sector standpoint.
Okay. It's such an interesting answer, and hence it's lovely talking to Aditya, but we need to slip into a break. And, I'll carry forward this conversation on the other side of the break. Television audiences, you might return to JK Tyre, but we'll play out the whole interview, of course, on our digital format and TV later on. But digital audiences, stay on, because we'll be back and continue talking to Aditya on the CDMO piece, the second question, and then talk about the healthcare stocks as well, diagnostics, hospitals, and some of the others. So stay tuned.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own and their independence when it comes to making financial decisions?
Good morning and welcome to Earning Edge right here at NDTV Profit. We're now tracking JK Tyres on the back of their strong Q4 earnings. While revenue grew roughly, it was flat, just a couple of percentage points on the upside. EBITDA as well as PAT grew by roughly 28 and 55% respectively. We're now joined by the president, Mr. Anuj Katoria of JK Tyres. Good morning, sir, and welcome to NDTV Profit. My first question is just on how the Q4 has panned out for you. We've seen while revenues have been flat, EBITDA as well as profitability has been strong for this particular quarter as well as the financial year as a whole. How would you describe the year for JK Tyres?
Yeah, so for the Q4, as you know that we had a top line of 3,714 crores, which was a growth of 2 to 3% on a year-on-year basis. On the EBITDA front, we reported an EBITDA of 497 crores, which is a growth of 28% on a year-on-year basis. And this was basically on account of three things which I would call out. One is that our efforts on premiumization have continued to give us the results. Premiumization efforts were not only in the passenger car segment, that was definitely one of the major areas, but even on the truck and bus radial tires, the premium products, the XM series, the XF series, the XT series have done extremely well. And that has definitely contributed to the overall EBITDA growth. The other thing is that we have also enriched the network that we have. We have added more than 100 plus brand shops, which again has helped us to improve the overall margins. Our operating efficiencies, better levers deployed in our sourcing strategy. So all this put together has definitely helped us to expand our EBITDA margins by around 28%.
Now, my next question is on commodities as well as raw materials. We saw that the company had a benefit on both these counts in the previous financial year. And we've seen that impact come into numbers for EBITDA as well as profitability in this financial year. Now, so the company has repaid roughly 800 crores of debt in this particular fiscal. It's come down to roughly 3,700 odd crores. The net debt to EBITDA has also improved to 1.75%, which was around the three times last year. What is the targeted level for this particular financial year?
So you're absolutely right. The raw material prices, the basket had started going up even in Q4 of last year. We had seen some commodities going up. The trend continues in Q1. In fact, in Q1, we expect that the raw material basket would go up by anywhere between 3 to 4%. For the year as a whole, we expect that it would be somewhere around between 6 to 7% is what we expect. But again, we will have to find ways and means to negate these. We have taken in the Q1, that the quarter we are in, we have started taking price increases. We have also continued or actually hastened our efforts on premiumization. We're also continuously working on our operating efficiencies. So this is an ongoing task. But yes, this year, we expect that because of the increase in the raw material prices, there would be, it would not be as, the situation will be different and there will be challenges. We are sure that with our efforts on the market facing as well as the back end, we should be able to a large extent, negate the impact of the raw material. Our current debt on 31st of March 2024 was at 3,700 crores, down by 800 crores, which is 18%. So this was a substantial reduction. As you know that going forward, we would be also repaying many of the long-term debts that have been taken. But let's also keep in mind that we have further capex plans. We had announced our capex plans a couple of quarters back. 1,400 crores is the total capex plan, which will be executed over the next 2 years, FY25 and FY26. So that also will be requiring the funds. So overall, our plan is to maintain our overall debt level at the same level that we have achieved, somewhere in the range of 3,700 crores. And the financing of the projects and our expansion plans would be a combination of internal accruals and also certain debts that we will be taking further.
Now, my next question is on EPR provisions. Now, this has been affecting all the tire makers in this particular year, and we've seen the company take an impact of roughly 100 to 105 crores for the last 2 financial years. How do you see the EPR provisions in general for the next financial year, and how much of an impact do you see as that as a percentage of sales?
See, the overall average impact would be somewhere in the range of 1.5% to 2%, but then it would be varying from category, and also within the category specific SKUs. We are working on a very granular approach and going about our pricing strategy. Some of them we had started on certain select SKUs we had taken in Q4 of last year also. But we have once again in Q1 reviewed, and again in most of the categories we have taken a price increase. The FY24 we had to take the impact of close to 106 crores. This was the cumulative impact of FY23 and FY24 put together. Because of various reasons and lack of clarity in how does this whole EPR thing operate, and the lack of readiness, the ecosystem was not ready. We had to procure certificates from recyclers and reprocessors. Those things were still not streamlined. So therefore, the industry as a whole could not do much. But going forward, now the clarity is there, and we have already started charging for the EPR as a separate line item, and we will be passing this on to our end customers. This is absolutely in line with the international practices, that even internationally in the markets, the cost of such, the extended producer responsibility or the product recycling cost is definitely passed on to the end user. So we would be also working on the same lines, and actually we have started doing the same starting this quarter.
Now, my next question to you, sir, is on exports. The market has been, it's been strong for you, roughly 16% of revenue contribution. You also have a factory in Mexico. How do you see the export market panning out? Because you've seen geopolitical crisis affecting the market. You're also present in Africa as one of the other regions that you operate in. So what is your outlook on exports in general?
So just to give you a basic understanding, if you start with FY23, the first half of the year was quite good for exports, but then the demand practically tanked in Q3 and Q4. And that trend continued into FY24. Q1 and Q2 were very sluggish, but we saw some improvement in Q3, and the Q4, the last quarter that we closed, was quite good for us. Demand has started coming back across categories, especially the demand for the truck and bus radial from the Americas, whether it is in the North American market or even the LATAM, was quite subdued. This was mainly because there was a buildup of inventory in the system out there, and most of the distributors and the large dealers were carrying stocks. But since then, they have been able to liquidate their stocks to a large extent. And again, the offtake from these distributors, we see that this would again get initiated. So this is good news on that front. And we are also trying to see how we can, participate more in the demand that is there in other markets, whether it is in Europe or Middle East, African countries, Southeast Asia. So we are actively exploring all the markets wherein we will be able to get better exports, not only for the TBRs, but also in the passenger car radials. So overall, we feel that going forward in FY25, the overall demand from various markets put together should be better than what we saw in FY24.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks.
Benchmarks recover from lows to trade in green. Sensex trades above 74,000, while Nifty crosses 22,500. Realty, FMCG and IT emerges as bright spots across sectors. On the other hand, media and metals trade with cuts. Paytm's loss widens to over 550 crores rupees in March as the company writes down value of investment in Paytm Bank. And BEL slumps over 4% as the company's net profit falls 25%. Other expenses rose to over 500 crore rupees in Q4. More than a week after the Ghatkopar hoarding collapse, the death toll from the incident has touched 17. Hello and welcome. This is the FNO show. I'm Agam Vakil. In this show, we take you through all that has happened in the futures and options space. A very quick look at the markets and how things are panning right now. Again, there's some bit of flatness in the overall session, at least as far as the Nifty is concerned, which continues to trade above the mark of 22,500. And the Bank Nifty, on the other hand, is showing a little bit more weakness at the moment. It's down around 0.6%. And that's essentially what's actually weighing down on the indices as well. To very quickly take a look at all the constituents of the Nifty and see where there is a pull and push with respect to the Nifty at the moment. Well, it's been a mixed day of trade, but while Reliance Industries along with HUL and Infosys are advancing and providing some amount of impetus on the upside, we have well, ICICI Bank and SBI weighing down on the indices, and not just the Nifty but the Bank Nifty as well is what we can make out from here. Well, move on. Let's move on and talk about the broader markets then. And broader markets, there is a little bit more volatility, as you can see, because it's essentially the mid cap and the small cap indices, on an intraday graph, they've moved in the red and then recovered a little bit. Currently trending somewhere in the flattish region, and that's how things are panning out. To take a look at what's going on in the future space, let's pull up the Nifty futures and take a look at how things are faring there. The Nifty futures are flat and well, marginally in the green for the Nifty in terms of its underlying. And as far as the Bank Nifty futures are concerned, again, well, what we are seeing is about 4.8% well, increase in open interest, even as the Bank Nifty declines by around 0.6. So overall, there are fresh shots into the system at the moment, and not too much to speak for otherwise. Overall, we just also need to consider how things are panning out as far as the option market is concerned. And for the Nifty, we're looking at that traction where around the 22,500 mark. We have seen a lot of movement in the 22,500 calls, as well as puts, a little bit more writing coming along. And of course, on the higher end, we continue to see a writing around the 23,000 call. And on the lower end, there is a little bit more writing around 22,500. So a lot of factors out there that need to be considered, and well, it's something that we will continue to give you an update on. Well, let's move on and talk about what our experts are saying and thinking about, and what they are making of the markets. Well, we have with us Ajit Mishra of Religare Broking, who's joining us on the show. Ajit, good morning. Thank you so much for joining in. How are you looking at trade on the Nifty, and what's the way forward here?
Yeah, good morning, Agam. So, Agam, we have been seeing that markets have recovered, gradually in the recent, days after retesting this support at 21,800, and we have reclaimed the short-term averages also. And now, with every passing day, we are seeing that traditional buying among the index majors is helping the index to maintain the positive tone. But as you have rightly mentioned at the beginning of the show, that it's been a normal, phenomena these days, that within the index majors we are seeing mixed trend, which is capping the upside also. So the momentum is missing, but the tone is positive, and it will remain so until we break 22,300 in the index. Upside, gradually we can inch towards the record highs. The challenging area which I am seeing right now is the underperformance of the banking. Today being the expiry day also for the banking index, we feel that 48,000 continues to act as a strong hurdle. So in a market like this, wherein we have this, challenges of the alignment between the Nifty and the banking index, stock specific is something that one should position themselves and look for the sectors or themes which are doing well. So metal, realty, auto, FMCG, IT, these are the sectors basically that one should look at.
Let's talk about the Bank Nifty as well. Ajit, what are you making of it, and how would you trade it? Because that clearly is the weaker of the two benchmarks out here.
Certainly. So this 48,000, which we've tried in the initial hour to break, but we couldn't sustain. And if we slip below, let's say 47,600, so that might in fact trigger fresh dip towards 47,200 or 47,000 mark. So for any fresh position, I would rather suggest to wait and let's see whether we manage to hold this 47,600 levels or not in the banking index. And that's the reason why we are recommending to avoid any fresh position in the Nifty as well, though it's trading comparatively better.
Okay, well, that's as far as your benchmarks are concerned. Maybe if we can actually take a look at what's going on coming down to stocks and how things are faring there in terms of change in open interest, all the stock futures which are looking at a substantial increase or a decrease in futures and options space. We will talk about the futures, the list of futures which are actually seeing an increase in a while. Let's pull that up and see where there is in fact a lot more traction there. Overall, of course, we need to remember that it's largely Hindustan Copper which continues to climb. Actually, it's flat right now, but it's marginally in the green. I reckon that's the reason why we are seeing that longs coming through, because we have seen another 33% increase in open interest. Now, Apollotize is the other one, which is also up around 1%, and about a 25% increase there as well in terms of its open interest. Balakrishna Industries, of course, continuing to show strength, as is the case for Metropolis. Page Industries is marginally in the red, wouldn't necessarily call that as a fresh short right now. And in terms of stocks which are seeing unwinding, let's pull that list up as well. And we have short covering for PI Industries and Hindustan Aeronautics. On the other hand, IEX, ABB and Dr. Lal Path Labs looking at a decline in open interest. On that note, Ajit, stocks on your radar at the moment in terms of longs or shorts?
Yeah, so considering that the volatile swings that we are seeing since morning, I feel that defensives are the one which one should focus on if the view is, for a day or two. So ITC is one name wherein we are seeing fresh traction after the base formation around the major averages after the recent dip. And we are eyeing 452 as an immediate target with stop at 434. Another name from the defensive basket from the pharma pack, Lipin, wherein we are seeing attempt of consolidation range breakout after almost 1.5 months of consolidation. 1770 is what we are eyeing in Lipin as a immediate target with stop at 1650.
Okay. That's Ajit's picks, and of course we'll continue to talk about a handful of other counters as well. I'm going to take a look at some of those more active futures and options counters and see what we can make of it. Because we do have some gains in Bharat Electronics. I believe that we have the conference call which is ongoing right now. And when it comes to Bharat Electronics, it's made a new life high yesterday. On an intraday basis, I made a new life high today as well, in fact, but it is still, it's at its current market price is lower than yesterday's high. That said, where it's sustaining about that, mark of around 281, and there's already been plenty of traction when it comes to volumes for this particular counter today in the cash markets. Can we pull up what's happening in the future space and see whether or not there is in fact an addition in open interest there as well? About 1.6% increase in OI there as well towards what potentially could be for more longs. Ajit, a new range for Bharat Electronics. What's the way forward here? Levels to watch. What trade would you take out here, or would you avoid one?
Again, after this sharp move from 220 to 280, I feel that it's time now for the stock to take a breather or consolidate in a range. So fresh buying, because the risk reward is not favorable. Though the stock is already at the record highs and this momentum might continue, but considering that swing that we have already seen, I feel that one should accumulate, not to go long at one go. So accumulate in the range of 270 to 280 zone, which is the current area, and then maintain a stop at 260, which is the gap that we had on the daily chart, off late. So that should act as a support. And upside, again, since the record highs are there, 310, 320 could be the probable targets.
All right. All right, so there you have it. I believe we also have Sneha Seth of Angel One who's joining us now. Sneha, good morning. Thanks so much for joining in. Well, we were talking about the benchmarks. How are you looking at trade on the Nifty and the Bank Nifty?
Very good morning. If we look at index, I think we are seeing some tentativeness on the higher side. So around 22,600, 650 zone, we believe there is a resistance. And on the lower side, I believe 22,300 should be acting as a support. So I believe that is the range for now. Looking at the IBs, which is continuously moving up, it is near 22 now. I think we may see IBs going up above this level as well. And I believe for now, unless and until we don't see an up move beyond 22,600, 650, one should avoid any buying at the higher levels. In case of any declines towards 22,300, 350 zone, then we should be thinking. As of now, I would say that we should stay light and focus on individual counters.
All right, so that's as far as the Nifty is concerned. Sneha, what about stocks on your radar this morning? Any recommendations?
Yes, so I have a two buy call. The first one is Cipla. If you look at this counter, it had a resistance around 1440 odd zone and it has surpassed those zone. I believe we may see an extension of up move from here. So I would recommend buying 1460 call option with a strict stop loss of 9.4 and the target expected will be around 35. Apart from that, Gujarat Gas is a buy. This counter also looks quite good at this juncture. I believe we may see an up move towards, say, 580 odd zone. So I would recommend buying this counter with a strict stop loss of 552, and the target expected will be around 578.
Okay. Okay, before we conclude the segment, just want to take a look at Hindustan Unilever. What it's actually doing is that it's trying to reclaim the levels it saw on the day of its earnings, and that high was about 2,390 odd rupees. Of course, it's not too far away from there. Well, since the day of its earnings back on 7th May, it's been moving within a range. And should we? The question really is that can we expect strength, because that was a big move, and today we're looking at another 2.3, 2.4% advance for HUL, and it's not every day that HUL does such a large move. Ajit, any opinion on Hindustan Unilever at the moment?
So yes, Akam, as we mentioned that the defensive should be in the focus area, so we have recommended ITC accordingly, and we feel that HU is also witnessing sharp recovery now after this days of pause, was the strong swing from 20 to 40 to 2380, and I feel, but yes, there's still a hurdle around 2420, which is a long-term resistance zone as per the moving averages. So that could be the area where it might take a beater. So for any fresh position, I feel 2340 should be a strict stop, and closer to 2420. You should book profit from the trading point of view. Once we sustain above that mark, then there's a possibility that we might see a reversal also in HUL, and it also joins the rally which we are seeing in the other FMCG majors.
Okay. Well, it's a mixed day of trade for the banks. If we can pull out the constituents of the Bank Nifty and see where there is traction, it'll be an interesting one to keep an eye on because of the weakness that we're seeing. So HDFC Bank is marginally in the green, but if you consider ICICI Bank, Axis Bank, SBI, all of them are declining with near 1% cuts. Of course, SBI is down 1.5%. Sneha, your view on something like an ICICI Bank, how are you reading this, and what's the way forward here, your assessment?
If you look at the private sector banks, certainly it is not performing. Though yesterday's session we were seeing some buying attraction in PSU banks, but I think looking at the overall chart structure and looking at the banking index itself, I think this is a pain area for now. I think unless and until we don't see some buying coming in from the banking space, especially from the private sector banks, it will be difficult for Nifty also to move towards beyond, say, 22,700 zone. So I think considering specifically if we talk about ICICI Bank, I think we may see a correction below the recent supports around 11, not 6, 7, not 5. So there are chances that we may, see further profit booking towards 1,080 odd level, and that is the level which should be watched out. In fact, at those levels, if someone wants to, go ahead and take a fresh bet on a long side, then can be a good buying level. At present, I think there will be some pressure.
Okay, there you have it. That's the view as far as the private banking space is concerned. ICICI Bank, of course, down around 0.8%. On the note, I'm going to take a moment to thank both our experts, Ajit and Sneha, for joining us and taking us through their views on the markets. We slip into a short break, and on the other side, we speak to the management of Greenply on the quarter gone by. Stay tuned in.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have one day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on three things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence.
Welcome back. You're watching the FNO show, and we are taking stock of Greenply. The quarter gone by, well, we have Manoj Tulsian, Joint Managing Director and CEO, who's joining us to have a conversation about how things have fared. Manoj, good morning. Thank you so much for joining in. Well, it does seem like a very, very strong quarter coming in. But Manoj, before I come to you, I also have with me my colleague, Puneet Javeri, who's going to also guide us with this conversation. But Manoj, I'm going to start off with your top line growth of around 40% on a year-on-year basis. What's contributed to this, and what could potentially drive growth as we move into the new financial year?
Hi, thank you so much, Agam, for having me on the show. And yes, Greenply quarter 4 has been very, very good. We have shown a robust growth. This growth predominantly is driven by our MDF business, because that's the new line of business which we started during the year. And the plywood business, the existing business, has also shown a good, decent growth of almost 10% during the quarter. So overall, if you really see, the number looks to be very, very healthy. Even in the coming year, since this will be year 2 of our ramp up of our MDF business, we'll again grow on the MDF numbers almost by 60 to 65%. The plywood volumes also we are targeting to rise between 8 to 10%. Keeping both these things in mind, I think this year also we should be able to grow between 17 to 20%. In fact, if you really see, our trajectory of growth in the last 3 years has been somewhere between 24 or 25% in terms of the CAGR, if we take the last 3 years. And we'll continue to do well during the coming year, and the growth momentum will be maintained. We have also signed a JV with Samet. It's a Turkish player on the hardware furniture business. It's more of hardware fittings. And this business also will start showing numbers starting quarter 2. But this business will take time to ramp up, So It will not significantly contribute in the coming year, but yes, from the next year, that will also start showing up.
Well, thank you so much for the detailed response, sir, and good morning to you. I wanted to just deep dive into, I know you covered a lot of businesses, but for plywood specifically, we've seen volume growth of roughly 11% in this particular time frame, but realizations have fallen. Now, I just wanted to get a picture from you on is this mainly because of the fall in the rise in timber prices essentially, and how are you seeing the next 12 to 18 months both on the raw material as well as plywood realizations in general?
So, Puneet, very good question. Actually, this wood panel business itself, and when you look at plywood more predominantly, it has really suffered in the last 3 to 4 years because of continuous increase on the raw material prices. And if you see the window of last 12 months, the same has not been able to, we have not been able to pass that on to the market. In fact, none of the players have been able to do that. It's a very cyclical thing, timber, again, a farm produce. And we believe that possibly in the next year, coming year around H2, the prices of timber will start coming down because the new crop will hit the market. And as and when it has happened in the past, the prices of the raw material timber has dropped significantly. So we believe that that cycle at some point of time in H2 of next year will start working in the favor of the wood panel industry. So that for sure will be a strong tailwind in terms of margin improvement. Otherwise, also, I think we are right now in the plywood business at close to around 8.6, 8.7% margin. And this year, for sure, there will be some amount of pass on which will happen in certain segments within the country, and that may lead to an improvement in margin. So I think a steady state margin of 10% would be good enough in this business, if not more.
What is the current split between the economy as well as the premium segments for this year for FY24, and what's the kind of outlook on going forward? Do you see the share of economy increasing going further as well from here?
So on a value basis, premium is somewhere around 57%, and the economy is around 43% on a value basis. We have seen a trajectory of the value segment improving in the last few years. I think the trend will continue. What we have to see is if the company is growing at, let's say, a 10 or 12% rate on the plywood segment, maybe my premium may grow by 5 to 6%, and the value may actually grow at 13 to 14%.
Understood, sir. And one question on your second division as well, MDF. Now, first ever quarterly profit in just 3 quarters of the business. So many congratulations for that.
Thank you.
I wanted to just understand now that the company's current, of course, because it's a new business, the capacity is slightly lower compared to the market in general. How are you seeing the overall market going forward? Because we've seen a lot of competition in this particular segment as well. So how are you seeing the competition going forward and the growth of the company in this particular segment for the next year?
MDF business, if you really see, Puneet, worldwide, we are nowhere near those volume of business within our country. And this is one business which is, fortunately more on the organized front. So if you truly see, I think this is one business which is growing at a pace of around 15 to 20% annually. Whenever a new capacity comes and hits the market, or if there are too many players who are suddenly coming and hitting the market at the same point of time, you see some pressure on the realizations. But on a steady state, I think a 18 to 20% EBITDA margin business is how we look at MDF going forward. Second, this business will continue to grow. As a country, we feel that our footprints on MDF is very minuscule compared to any of the Westernly world, or if you look at China or other countries. So I think this is one business which will continue to grow. And the margin profile can be anything between 18 to 20% depending on different players and product mix. But this is surely the business which will continue to attract good revenues going forward.
Now, one thing that you also touched upon is the JV on furniture fittings. I wanted to just talk about, I think your initial plan was to invest roughly 40 crores in equity, if I'm correct. I wanted to check if this particular amount has already been deployed in this financial year. And the second question was that you have given a longer term investment guidance of roughly 250 crores. I've also mentioned when you spoke to us last that it's a 800 crore potential for when the whole investment will be done. But of course, this is going to take some time, 3 to 4 years. But I just wanted to understand the next 12 to 18 months, how is the company geared towards this investment and what kind of revenue potential are you seeing from here in the next 12 to 18 months?
So you have put all the numbers right. Okay, so I'll not repeat the numbers. The only thing is, 25 crore is what we have already invested up to 31st March. And this year we will be investing the balance 15 crore, which will be our share of equity into the JV. The rest of the numbers, whatever you have said in terms of the total capacities, the type of margin and everything is something which I will just say that yes, those are the numbers. In terms of ramp up, I think this year, because there has been certain amount of delays which happened in certain additional machines, which we were supposed and we were expecting in early March and April, we will be fully ramped up by, let's say, around July. So we'll have 3/4 of business. Most of the senior management team also has been hired for the same. The mid-level teams are under hiring at this point of time. So all those other things will also get completed, in the next couple of months. And, there is already a go-to-market strategy, which, my head of sales is working on the same. So this year, I will not be able to put a number, but it will not be a big number. Second, this number will not reflect in my top line because it's a 50-50 JV. So what will come into the results of Greenply always will only be the share of profit of JV. So that's where it is today.
Sure, fair enough.
Next year for sure, we might be looking at maybe 100 crore plus from this business.
Right.
Okay. But it's quite early actually, it's too early. Maybe in coming 2 quarters, I will be able to give you very good and decent picture for next year, how it will look like.
Fair enough. Well, look, we'll wait for that. And of course, next year, I'm sure there'll be plenty more to keep an eye on when it comes to your business. But on that note, taking a moment to thank you for joining us and, well, taking us through the quarter gone by as well as what we can expect going forward. And with that, we're completely out of time on this edition of the Afternoon Show, but lost my lineup on the other side. Stay tuned. You're watching NDTV Profit.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure
Hello
everyone, welcome. You're tuned into the small and mid cap show here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at, and the Nifty 50 again just a tad bit in the green, a 0.1% higher as we speak. You know, there's positivity of course, but completely different set of sectors versus yesterday. We'll talk of sectors. Before that, let me just quickly try and cover as to what specific stocks are doing well on the Nifty 50. Let's pull up something like an HUL doing very well, 2.5% higher. Coal India, Reliance Industries up 1.71%. Really pushing markets higher is most likely that Reliance 1.7% gain. In terms of the top losers, Sun Pharma not doing so well. BPCL and Apollo Hospitals are the other two counters which are dragging the benchmark index lower. In terms of where the mid cap and small cap indices are, but before that, let's pull up the advanced decline, see what's happening there. If we can, there you go. The Nifty mid cap is up around 0.25%, but the advanced decline absolutely 1:1. So we'll try and get more perspective on that, but let's pull up the Nifty mid cap, 0.25% higher. The Nifty small cap though down around 0.4%. So that's where the mixed bag is really coming from. The Nifty small cap is where some of the pain seems to be around 0.1% lower. So that one is underperforming clearly. Let's also try and revisit, or rather visit some of the sectoral indices, and within the Nifty Bank of course is down around 0.7%, but really the leaders being Nifty FMCG, Realty and IT notably are some of the leaders. Of course energy also up, but outside of that you look at the losers. The financials are where some of the pain is. Also the Nifty Metal and Nifty Pharma not doing so well in trade. Let me though switch focus. Let's welcome on board our first management for the day. We have Godavari Power and Ispat. We have Mr. Abhishek Agarwal, who's the ED at Godavari Power here. Very unlike the name suggests, quick clarification, it's largely a company which manufactures steel as well as pellets, and therefore more of a commodity kind of a company and play outside of course generation of power. Firstly, welcome on board Abhishek. Good having you here.
Thank you so much and very good morning.
Hi. So quick check just with regard to where your volumes versus value has played a part in the top line expansion. Talk to us about that, and where especially on the pricing front, how are trends really shaping up at the start of FY25? Give us context.
So just to answer your first question, on the volume side, we did get the environment clearance for our DRI capacity 0.45 to 0.59. So that is where a lakh ton of volume were added. And basis that, our steel production, which was about 0.4 last year, is about 0.5 this year. So on the downstream side, there has been a volume uptick about 20%, right from DRI to value-added steel. Pellet, the volume has been a little down compared to last year. And on the pricing side of FY25, as you all know, the iron ore is on the upside. China is again back to 115 levels. And more than that, the domestic demand has suddenly come back into the picture post-Holi, which has driven the market. And all the prices, right from pellet to finished steel, is almost up by 10%.
Take your point, but just to try and give more context here, do you expect pricing to hold up? Of course, there's a lot of news trickling through that, positive news with regard to commodity pricing, but you expect the hold up, and what's the on-ground reality at the moment? What's the sense that you're getting?
See, to be honest, everybody's banking on the government expenditure, where government is focusing on the capital investment in terms of infrastructure, be it railways, roads, or infra. So that is where steel comes into play, and everybody in the steel sector is quite bullish and positive. And with hoping the government continues to spend going forward, I feel the prices will sustain for a longer period.
Sure. Just taking a look at your FY25 guidance, and largely the sense is that iron ore mining as well as rolled products are likely to aid the top line from here where volume is concerned. talk to us about what capacities you're adding and how does this basically add up to your top line? What can we expect in terms of top line growth in FY25?
So going forward, we expect our enhanced capacity for iron ore mining. We're taking it from 3 million to 6 million. So by end of Q2 of this financial year, we hope we get that all the approvals required from the State Department. And once we receive that, we'll ramp up a capacity. So that is why we are given a guidance of 3 million of mining against 2.4 produced last year. And on the pellet side, we have already started the construction of new pellet plant, which will come into production in FY26 Q1. So going forward from Q3 onwards, we expect an increase in iron ore volume, and then going forward, the pellet volume.
Okay, so probably 25% jump in iron ore mining, which is at least my key takeaway from this. How does this aid your top line number? Give us context from that perspective, especially I understand pricing is a variable, but let's assume for the moment that pricing holds up.
So at the current market levels, if we are able to ramp up capacity to 3 million, then we can see an additional top line EBITDA of say about 250 crores. Because currently we do buy some iron ore from the market. So that will completely get removed from the equation and we will become 100% captive going forward.
Got your point. And how quickly do you go from 3 to 6?
So once we have the approvals, I think in next financial year, the total plan is the mining capacity will be ramped up in tandem with the pellet capacity. So hopefully once we get the approval, the mining capacity will be ramped up gradually. And FY26, we can see the full 6 million volume.
Okay, and where does that take your top line therefore?
See, it's difficult to comment on numbers, but if you see today's market level, so probably you can add another additional EBITDA of say, 4 to 500 CR. So 3 additional CR from 3 million and then additional 4 to 500. So all about 7 to 800 CR crores going forward if you are able to mine 6 million going forward.
Got your point. Got your point. That's quite large given the current size. Onto the steel plant, you have a large capex pipeline per se across different product segments, but specifically on the integrated steel, which is roughly 6,000 crore in terms of your expected investment. How quickly do you expect to get environmental clearance for that?
So see, public hearing has already been done. We had the last year of environmental clearance. So once we have all the approvals, we should start the work, I think FY25, end of Q3 or early Q4, we start this construction work.
Okay, and then thereafter 3 years for construction.
Yeah, about 24 months to 30 months we expect. But yeah, you can say roughly 3 years.
Okay, so FY29 onwards, this capacity starts getting added to your full year numbers.
No, I would say FY28, not 29. Yeah, full numbers FY29, but yeah, partial probably in FY28.
Understood. Yeah, I take your point. Okay, understood. And therefore, just in terms of profit expansion, this 6,500 odd crore, or maybe even 6,800 or 6,900 crore, if I recall the exact number, that's the kind of capex plan that you have in pipeline, which you've disclosed in your analyst PPT. What's the sense like? How are you going to fund that? Because currently net zero debt.
See, currently we're sitting on a huge pile of cash reserves.
Yeah.
And with the current EBITDA levels and assuming the market is going to sustain at these levels as well. So a major capex will start happening from next financial year. So most likely everything will be internal accrual. And if required, end of the day, probably we borrow something or we do some kind of raising. But that depends on how the market proceeds. Because it's a commodity market, you also know in 6 months things can change drastically.
Sure. And you continue to maintain everything to come from internal accruals. You believe that such a large chunk of capex will be funded pretty much all through internal accruals?
Yes, we are very confident. And just in case also in worst case scenario also, we have to borrow something from the bank, it'll probably be very short term. It won't be a long term thing. So we're very confident on the internal accrual side.
Got it. So therefore, your balance sheet, roughly your equity size is 4,500 odd crore for context. That will expand substantially over the next maybe 4 years, if I understand correctly, because that 4,500 crore balance sheet will become roughly a 10,000 crore balance sheet, just in equity terms, just taking off the debt and current liabilities. Therefore, are you confident of this happening, and what's the kind of return that you're expecting on this equity?
See, since our iron ore is mindset at zero premium and it's for long term, so basis that we expect a healthy margin of say 20-25% EBITDA going in long term as well.
Okay. Understood. And ROC, if you can give us that number broadly,
See,
the expectation.
probably, 3 years maximum, 2.5 to 3 years, to be very honest. If the market sustains at these levels, the demand persists, and the government spending continues, of course. Again, there's a rider because it's commodity, so it can go anywhere. But given current scenario, we are very confident.
Okay, excellent. Thank you so much, Abhishek. It's been a pleasure interacting. It's been a pleasure breaking this down, and thanks so much for coming in.
Thank you so much.
Right, that was Abhishek Agarwal, who's the ED at Godavari Power. It's time to slip into a very short break. That one's been a multi-bagger on your screen in front of you. That's been a multi-bagger, but time to slip into a very short break. More on the other side. We are going to be joined by the management of Metropolis Health to talk to us about their Q4 numbers and give us context. Stay tuned.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds? While the share of women in mutual funds has risen in the past 5 years, what is heartening to know that more women from the hinterland of India are investing in mutual funds versus urban centers. And the report also showed that the party state of India, Goa, has the most number of women who invest in mutual funds. Goa has the highest share
Welcome back. Thanks for staying tuned to the Smith Show on NDTV Profit. I'm now joined by the management of Metropolis Healthcare. We have Surendran Chamankotal, who's the CEO at Metropolis Health, to talk to us about the Q4 numbers and the way forward. Welcome, sir. Just to get context, talk to us about the value versus volume growth that's come through in Q4, and what are the more sustainable trends that you're expecting, or are these kind of trends sustainable?
Good morning, Harsh, and good morning to all your viewers. Yes, we really had an exceptional quarter in quarter four last year. We have grew the revenues by 11% at a reported level and 15% on the core revenue. And also we had a 25.5% EBITDA in quarter four, which is the best in the last 4 quarters. And EBITDA grew by 15% in quarter four. So overall, if you look at it, there is a exceptional performance on all the parameters across. What has led to the growth? In fact, the 15% growth has been fueled by roughly 7.5% from the volumes and the remaining 7% from the realization. And the realization has come on two what you call attributes. One, of course, was the mix change, which is improved by about 4%, and the remaining 3.5% has come from the price increase that we have done in quarter four, right? So 15% growth in quarter four. And what is sustainable growth? I mean, full year basis, if you look at it, 13.3 is our core revenue growth. And going forward, our reported revenue and core revenue will be same. So hence, anything above 3.3% definitely is a doable number. So we are looking at stretching it beyond 13.3% in the coming year, right? And EBITDA at 25.5% in quarter four. Definitely we are holding this going forward in the year 25 and maybe bettering it by 0.5% or 1%. So that looks like the guidance for the year ahead.
Okay, on pricing, right? That's quite comprehensive. First off, I want to compliment you on that. But on the pricing front, I want to try and understand how FY25 evolves. Because you have guided that there is a need with regard to price hikes, if I'm not wrong. And therefore, will that be expected in FY25? And if so, when in FY25?
See, normally in this industry, what we have seen is that price increase happens once in 2 years, largely to beat the inflation, right? And other price increases, that is the input cost that which goes up for us. So we have done the price increase in January this year. So for the full year, unlikely that this 25 unlikely that we take a one more price increase. But let me also tell you the price increase has two components. One is the B2C price increase and the B2B price increase. B2C is relatively, easier to do because it's done through at our own centers and touch points, direct customer, right? But B2B price increase is very difficult to do relatively because you need to go back to each of your clients, each of your hospitals, labs, and talk about increase in price. And that's also very highly competitive space. So it's not definitely possible to do a price increase in B2B that often. So I'm even not looking at a price increase in B2B in the coming year. B2C, like if the industry permits, if there are opportunities coming up, we may look at it. But otherwise, at this point of time, it's very difficult to comment that we will do another price increase in full year 25.
Okay, understood. Very unlikely, it seems. With regard to expansion plans, how many new centers are you looking to open? And what's the geography target like?
See, if you have looked at Metropolis trends in the past few years, last year, which is 23-24, we have put up 24 new labs. And the previous 2 years put together, we put up similar numbers, some 25, 26 labs. So we definitely, accelerated the lab expansion in the year 23-24. And I clearly see that momentum getting continued to this year as well. So another 25 odd labs should come up during this year. And we are looking at the geography expansion in two different lenses. One is on our strong markets like the West and the South, which go far deeper, right? Go at every district level or beyond that. And for all the opportunity market like North and East for us, we go wider. Pick up strategic locations and put up a lab. And of course, every lab expansion has to be followed by a collection center expansion, or in fact, some of the expansion of the collection centers happen a little ahead of the lab expansion. So we added last year about 550 new collection centers, and a similar number or better number should be expected for this year as well.
Okay, understood. And what does this in terms of top line growth, how does this aid your top line numbers in the overall context of things?
See, if I have to split the 13.3% growth of the previous year into the existing infrastructure that I had, plus the new infrastructure, it will be roughly about 9% from the existing infrastructure, and 4% we get from the new infrastructure that we put up, both the labs and the collection centers put together. And a similar number should kick in for this year as well. So, with our expansion plans on infrastructure being the same as previous year or maybe a little better, so I'm really expecting a 4 to 5% growth only coming from the infra expansion, during this year.
And you'll be happy with an early teens kind of growth even next year?
Well, I think we are aiming for a mid-teens growth for this year, because we have set a very good, situation in Q4, right? I think we are exiting last year with a high, right? And I think we will try to take this momentum forward during this year, and we'll be really aiming for a mid-teen growth during this year, 25.
Understood. Talk to us about the North and East markets. What's the plan? How are you looking to better penetrate those markets? What's the kind of opportunity for you over there versus what you're already doing? Is it replicable?
Yeah, so 2 or 3 things, like in North and East, we actually picked up now 3 states, for example, as our priority areas, because you can't do everything together, right? So we picked up Uttar Pradesh, Uttarakhand as one part of the UP. And then we picked up Madhya Pradesh, right? That's other market that we wanted to grow. And on the east, we have picked up, Assam and Northeast as a market to grow. So this year, predominantly you will find these 3 states getting a lot of attention from our side. And in the strategic locations in these states, we will be putting up, new labs. And ahead of putting up the labs, we will be definitely reaching out to these places, creating our B2B network, channel network to start with, bring up the volume to a certain level, get the brand familiarized in the market, get the reports familiarized with the market, and also get some good contact with doctors, because at the end of the day, our strength is our specialty business. We are very good at, we were very strong and the unique brand when it comes to the science part of it, right? So we will try to use the presence in these places, definitely to serve the routine and semi-special tests, but also use the market opportunity to pick up the specialized sample and then maybe bring it to the nearest reference lab and do the specialty test. So we have plans for the North and East for this year, and maybe we'll extend it in the coming year as well. So they're opportunity market for us, and we will put our best to get the numbers coming from these markets.
Okay, you've guided for margin expansion. So talk to us about what levers you have for that, because you seem to be satisfied with the top line growth overall. Yeah. So what levers do we have now?
So, well, see, we have had 25.5% EBITDA in the last quarter, right? Which is definitely a lot of corrective actions have already been put in place in Q4 itself, by all our cost initiatives, all our optimization initiatives, getting the best productivity from the existing labs and the existing centers, and identifying some of the wastages that we have in the system and correcting it. So we already had a whole lot of job as far as Q4 is concerned, because Q4 at 25.5 is the best quarter last year. And, I would like to definitely see that momentum taken forward into this year as well. So 25.5% and upwards will be the EBITDA guidance for this year.
Yeah, so Mr. Chairman Kotal, I want to try and understand what are the levers therefore available for you to expand that, because as you correctly said, there's a lot already been done with regard to cost optimization. So what can further be improved for you to get there?
So, like I mentioned, we are looking at every OPEX item. See, at the end of the day, this 2 big cost element in this industry. One is the people cost, which is HR cost, and which is the other one is the material cost. These are the 2 biggest costs in this, almost constitute to 50% of your total cost, right? So we are looking at how do we improve the productivity on the materials side, and how do we get a better negotiations from the vendors, when it comes to the material that we buy, and how do we also optimize the utilization of the material. That's one big project that we're actually running. And secondly, we are also looking at, the best productivity from, the people that we have in the organization. We have simplified the structure, prepared guidance for what kind of a resourcing that we should do. at various elements like labs and our offices, etc. So we clearly see an opportunity to optimize on the the HR cost, and it doesn't really go up this year like we had in the past, right? And third thing is we also identified a few centers, few labs where the margins are maybe an opportunity to improve, not at best with the labs that we have otherwise. So in these particular labs, we will find out what is the difference between the rest of the labs, and we will bring in more productivity from these places. So these are the few things top of the mind I can tell you in terms of improving the opportunity on EBITDA.
Understood. And very quickly, what would that improvement number be like? 50 bips, 100 bips? Is that something that one can expect?
That's what I said. We exited with 25.5. Right. So you can expect a 0.5 to 1% improvement in EBITDA during this year.
For the full year, FY 25, full year. So maybe 26 odd to 26.5 odd percent is where the margin number.
Definitely should be a doable number for us this year on EBITDA.
Understood. Got it. Thank you so much, Mr. Surendran. It's been a pleasure speaking with you and getting us all of that perspective on Metropolis Health.
Thank you very much. Pleasure, Harsh.
Right. With that, completely out of time on this edition of the show. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have one day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicate
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and this show is all about your stock related queries. So write to us on any of our social media channels or the YouTube live chat or on the WhatsApp number that will be on your screen. Any long-term queries or short-term strategies, do tell us and we'll get your questions answered by a fundamental and technical guest. But before we do that, let's dive into, before we dive into the questions, let's look at where the markets are currently at. You have the Nifty 50 trading in a very tight range today, almost about 100 points, and it's only about 0.1% up right now, but in the positive. From, you can see that low in the morning trade, but we've come up since then, so above the low point of the day clearly. But you look at some of the constituents of the Nifty 50 as well and see what's pulling the index higher. You have something like an RIL that's contributing about 22 points to the Nifty. You have Infosys, HUL, ITC all in the green. On the other hand, you have banks like ICICI Bank, SBI and HDFC Bank all in the red today. And even Axis Bank. So all the banks that are not doing too well clearly. And let's also look at some other sectors that are trading in red today. You have the auto as well, that's down about 0.2% or thereabouts. You have metals in the red today. We saw a rally in metals in the last 2 days or so, and it's down about 0.7%. So clearly some profit booking happening there. You have the PSU Bank index also down about 0.5%. On the other hand, you have realty doing very well in trade today, up about over 1%. FMCG up about 1.5%. So a good day for FMCG. As well. You have the energy index up about 0.6% as well. Let's also look at the broader end of the spectrum now. You have the mid-cap index, if we can pull that up and see, yeah, it's up about 0.2%. So doing better than the benchmarks for sure. Let's also look at the small cap that's down about down 0.16%, so in the red today. However, positivity on the mid-cap space definitely. Let's look at some of the counters that are moving. You have Piccadilly Agro that's up about 5%. On the upper circuit right now, you have Apollo Tyres as well, that's up about 1% after a bulk trade. You have BHEL that's down about 4.5% right now, and we'll talk a little bit about that in detail in just a second. You have Dollar Industries also down about 5.2%, while Dollar Industries did well on most of the counts. There was net profit that's been that's the area of concern, and that's what the market is taking cues from as well. You have something like a PNC Infratech. If you can pull that up, that's gaining in trade. It's up about 12% up. Now this comes on the back of an announcement that happened only a couple of minutes ago. It emerged as the lowest bidder for 2 road projects worth about 5,000 crores from Maharashtra State Development Corporation. We're seeing that impact play out in the stock. You have something like a Hitachi Energy also down about 2% on the back of fourth quarter results. But let me circle back to BHEL, which is also the focus for today, and I'm joined by my colleague Mihika to tell us about how the numbers were for the fourth quarter and what's the management commentary, what's the outlook like for the company.
Yes, so the Q4 earnings were disappointing ones. Revenue was marginally up 0.4%. The key number was the EBITDA, which was down 30.6%, and this was mainly due to a higher other expenses that stood at 527 crores versus 58 crores a year ago. Margins contracted 400 basis points and net profit fell 25.6%. When you talk about the con call highlights, now the order book of the company stands at 1.31 lakh crores, and around 92,000 crores of these orders were from the power sector and rest from the industrial sector. Now, gross margins were down due to supply chain issues and execution delays according to the company, but they are targeting a 12 to 15% CAGR growth in terms of revenue. And they also mentioned that the government is planning to add 88 gigawatts of power by 2032, and the company is expecting 10 to 12 gigawatts orders from there. When you talk about the brokerages, a mixed bag. Now we have Morgan Stanley, which is retail and equal weight rating at a target of 220 rupees, which is a 31% downside. Q4 FY24 revenues and margins were below their estimates, but they do expect order momentum to continue given the policymaker focus on adding thermal capacity. They do believe that earnings visibility is improving with healthy prospect pipeline. We have Nuvama, which has retained a buy at a target of 400 rupees, which implies a 25% upside. They've mentioned healthy outlook given a 25 gigawatt of thermal total addressable market spread over the next 2-3 years. They've also implied that the old legacy projects expected to be completed by FY25 end. And lastly, they've estimated an EPS CAGR of 88% over FY25 and FY27.
All right, thank you, Mihika, for that. On that note, let me introduce you to the guests for today. We have Lancelot Dikuna, CIO, ValueX Wealth Connect, joining in along with Vaishali Parekh from Prabhudas Leeladhar. Thank you so much for joining in today. Lancelot, I'm going to come to you first on BHEL. You saw the management commentary as well, and there is some concern around the execution of orders. And even though there is this positive outlook that the government is going to continue putting in money into the space, but the execution part of it seems like a concern, and especially with a long gestation period, right? What's your long-term view on something like a BHEL?
So I think, whenever you look at the future of the company and its growth prospects, you also have to look at what is the price that you're investing in that company. And if you consider that valuations, while there will be earnings growth going forward, it is trading at a very high multiple at this point in time. So unless the profitability can significantly improve, it's very difficult to justify, investment at a high multiple as it is at this point in time. So yes, there is no doubt that the company is going to get further orders. Execution capabilities may improve a bit. There has been some short-term disappointment on that front. The question is that, if the valuation is high, is this, it's better to wait out and, wait for a significant correction in the price before the valuations. When the valuations become attractive, then one can look at investing in the stock.
Fair point. Let's dive into the queries now. The first one is from Suresh from Kerala. They're talking about the counter KEI Industries. Vaishali, I'm going to come to you on this one. They bought the counter at a price of 3,890 rupees. It's currently trading well above 4,100 rupees. Vaishali, this has been a doubler in the last 1 year. Do you see more upside from here? And the question is, should you add more?
Well, I would say that yes, it has a very strong uptrend and it has moved one way. So if one needs to add, I think in all likelihood, the way stock is going on, even on the monthly chart and all I'm looking, I think it's ready for a target of 4,600 and so on. But I would say, one needs to be cautious at these levels. 4,000 should be the support and buy near the support.
All right, fair point. The next question is from Mohandas on Crompton. They say they have bought the shares at a price of 392 rupees, so slightly above where it's currently trading at. And so we saw the earnings come out in the last couple of days as well. What's the long-term view on this counter?
I think the long-term view is definitely the counter should see much better growth going forward. And, being in the power industry, you do get some benefits of the electrical side of business growing. And, we will see some growth coming in. But again, valuations are a little expensive. The stocks have moved up, in the near term. So one needs to be a little careful when buying into the stock. And because if you buy it at a high valuation, your returns obviously cannot be that high. So I think at this point in time, it's better to wait for a correction and then look at entering the stock if one wants to add this to the portfolio.
All right, fair point. The next counter is Vedanta. This one's from Subodh, who's writing in from Delhi. They say they bought the counter from a longer term perspective at a price of 322, so quite a considerable profit there. They want to know if they should hold on to the counter or should they maybe book some profits. Lancelot, Vedanta has seen a bit of a turnaround on some parts of the business, right? What's working for something like a Vedanta? Is it the metals rally that's helping it, or it's the company as well that's in terms of longer term outlook?
So I think the metals rally is definitely helping, the outlook becoming a lot better with, metal prices going up and capacities becoming limited in terms of production, global production. You will see probably better prices going forward. However, in all the commodity stocks, these commodities are cyclical by nature. So at this point in time, you're having less capacities and more demand. Prices are moving up, and that is aiding the share price value. But one will also see at some point in time when these prices peak out, and then capacity addition comes in, and that will then bring down prices. So in commodity stocks, it's always better to invest when you're at the lower end of the commodity cycle and look at booking profits when you're at the higher end of the cycle.
All right, let's take a technical check on this one. Vaishali, what are the key levels you should watch out for in Vedanta? Would you suggest somebody who's sitting on a considerable amount of profit to maybe take some money off the table?
I would say so, because it's really given us a run up right from 260 levels to 500. So I would say yes. I mean, the stock can show some exhaustion at these levels. It's better to book some partial profit and look for lower levels again to get into the stock. For now, it can see some profit.
Okay. Next counter is Biocon. This one's from Ramesh, who says they've bought the counter at a price of 330 rupees, slightly elevated levels from where it's currently trading at. From a longer term perspective, this is, I think the holding period here, Lancelot, is 1 year. From a 1 year perspective, should you continue holding on to something like a Biocon?
So I would look at it this way, that, there are a lot of alternative stocks where, which one can invest in, where the upside is clearly more visible than it is with Biocon, because Biocon last year, sold off its major portion of the business in the biologics business, and now is focused only on the biosimilars. And that is a very slow process in terms of, the overseas growth. So returns are going to be a lot muted going forward, and it's going to take a longer period for a recovery. So given that as a background, one should look at maybe either exiting at some point in time and moving into some of the other pharma companies where you can see sustained growth outlook, and the valuations are equally reasonable. So one can look at the other alternatives.
What alternatives would you suggest?
So one can look at, for example, you had Lupin came out with good numbers as well as good expectations about growth in the future from the US markets. So those, companies like that will see where their primary, let's say, market is on the export side, and you are seeing demand picking up from the West. So that these companies would generate higher profits in the near term as compared to Biocon, which will take a much longer period to generate similar profit growth.
Fair point. So switch from a Biocon is what Lancelot is suggesting. The next counter is HDFC Life. This is from Shamik from Kolkata. They say they bought the counter at 610 rupees. It's well below that price. Is it time to sell, Vaishali, is the question. Maybe you should get out of the stock, or should you continue holding on to it? And do tell us if you have a target on this counter as well.
Well, I would say that it's now that he has held on for so long, continue holding, because it is definitely showing signs of reversal. So if 530 levels break, then that damages the trend further on. So that is the time that one should exit. But however, right now, I would say that yes, perhaps take a chance, adding more, so that there is a bounce coming up to 600, 620. So that could lower his cost and help him get out.
All right. It's time to slip into a short break, but we'll be back and we'll take more questions on the other side. Stay tuned.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by CRISIL and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on three things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds? While the share of women in mutual funds has risen in the past
Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. And this one's on Vari Technology. This is from Shimon from Kerala. They want to know if it is advisable to buy this counter. Lancelot, this counter is down 5% as we speak. It seems to be in a bit of a downtrend actually. You look at the last 1 month's returns and it's negative. It's down 25%. Do you think this is an opportunity to buy, or would you maybe pick some other counter within the space?
So I would look at another counter, because this stock has fundamentally a lot of further downside to go because of the high valuations that we are seeing. And it is becoming very difficult to justify these kind of high valuations, and hence when the market sells off or the stock sells off, you start to see this kind of falls. So it is always better to buy a good company at a reasonable price. And in the IT space, a lot of companies have been hit, in terms of because the sentiment for the space has been negative. Valuations have come off in a lot of good companies. So whether it is something like a L&T Technologies or even your TCS, Infosys, you've seen valuations come off considerably. So it's much better alternative to buy into those companies where your valuation is low, the downside is limited, and you could see significant upside when the entire sentiment improves.
Right. The next counter is Devyani International. This one's from Mamta Chawla, who's writing in from Delhi. They say they bought the counter at a price of 175 rupees, Vaishali, above what it's currently trading at. For somebody who's sitting on a loss, and this counter also seems to be in a bit of a downtrend. You look at the 6 months returns, and it's about 15% down or thereabouts. Would you suggest holding on to it, or maybe get out of the counter?
I would suggest can get out, or perhaps because this has made a couple of times taken support at 145 levels. So wait for a bit of a bounce, if not in a hurry. 180 can be a bounce back, but I would definitely ask to get into better stocks.
Okay. The next counter we're talking about is REC. Now, this one's from Vishwajit, who's writing in from West Bengal. They say they bought the counter at a price of 111 rupees. Lancelot, considerable profit for somebody who's bought it from at 111 rupees for something like an REC. Would you suggest maybe taking some money off the table, or do you see more steam left in the longer run?
So you see, REC is in the financing business, and it is basically financing rural electrification. Yes, the government has a big thrust into the space and has provided, and that broadens the opportunity that they have. But at the same time, it is a financing company, and what they will earn is going to be the spread that they generate based on the investments that they are making. So considering that, I think we are going to see spreads narrow down and going forward, and even valuations then become a little high. So one should really take profit off the table especially when you've made so much money.
All right, fair point. Lancelot, another question, and this is we've got multiple questions on this counter on Hindustan Zinc. There is a rally, and what a phenomenal rally you're seeing in this counter. We have somebody who bought it at a price of 422, and that's Vishal, and we have another one, Mr. Hariom, who has also bought the counter at 319 rupees. For people who've been holding on to this counter, and you look at the last couple of days, this counter has been, right now as well, it's up 6%. Do you see more steam left, or that this sentiment kind of maybe fading away considering the valuations of the counter?
I think valuations, if you look at the last 2 months, valuations have, the stock has almost doubled in the last 2 months. So valuations have, gone up significantly. So I think one should be cautious when investing, at high valuations, because while the markets may look attractive going forward, especially for metals, you can always see that at some point in time, these metal stocks will begin to correct. And at that time, companies that are highly valued will see a much larger correction. So I would actually stay away from, buying into at a very high valuation. If one has booked profits, one can, look at cashing out some part of the profits.
Vaishali, do tell us the key levels for Hindustan Zinc as well. What a rally! Should you maybe hold on and wait to sell, or is it a good time to maybe take some money off the table?
I would say, it's wise to book profit at these levels because stock has really run up and it's a perpendicular rise. So I would definitely say that yes, profit booking should not be ruled out, because anytime if the stock topples, we can see a good corrective move. So yes, prudent to book profit at these levels.
All right. The next counter is Gland Pharma. Now, we have the question from Sanjay. They bought the counter at a price of 1,737 rupees. Just very close to what it's currently trading at. We have the con call as well for a Gland Pharma, and we'll look out for the management commentary on this one. But Lancelot, what's your sense of Gland Pharma, what it has done till now, and the outlook for the company?
So I think, it's trading at almost 45 times its earnings, which is a high multiple for a pharma company. Yes, the company is showing, some improvement in terms of the earnings going forward. But when you are going to pay 44 times, I think it's significantly higher than most of the other companies. So one should look at, maybe staying away for the time being.
Okay. All right. Another pharma question. This one's from John from Bangalore. They have bought shares of Aurobindo Pharma at a price of 890 rupees. It's well above 1200 levels. From a short-term perspective, should you continue holding on to it, or book profits, Vaishali?
Well, I think overall pharma sector is once again picking up, and talking about Oro, it's still in an uptrend. So I would say continue holding with a trailing stop loss. We can see a projected target coming to 1260 to 80. So I would say hold on with a trailing stop loss.
Got it. The next counter is this one's okay. The question is from Saurabh from Gurgaon. They're talking about Cyient. They bought the shares at a price of 1,750 rupees, and this is from a 1-year perspective. Lancelot, for a Cyient, would you suggest holding on to it? It's very close to what it's currently trading at, the buy price.
So I think one can hold on to this company because it is in an engineering space, and one can expect that this business is going to grow. Yes, valuations have come off because, like I said, the sentiment for technology stocks has been a bit negative, given the situation happening or unfolding in the global economy. But you're purchasing it at a 25 to 27 times forward earnings. So it's pretty reasonable to hold on to it because you will see growth coming in as the scenario globally improves.
All right. Now, unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Lancelot and Vaishali, for joining in and for answering questions for us. And viewers, hope we were able to take your questions today, but if not, we'll definitely take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides this, lenders also look at several other variables such as income growth, repayment history, bank statements, device data, and behavioral patterns to underwrite a borrower. Underwriting a borrower is basically assessing the risk related to repayment of the borrowed money. To combat over-leveraging, let's first look at what banks are doing and then what fintech platforms are doing. Banks have fine-tuned their credit criteria in terms of how much money they should lend to a particular borrower. They are also recalibrating their co-lending arrangements with fintech platforms. On the other hand, fintech platforms are now migrating towards
Good afternoon and welcome to Earning Edge right here at NDTV Profit. We're now discussing Action Construction Equipment on the back of strong Q4 results by the company. We're now joined by Mr. Saurabh Agarwal, Executive Director at Action Construction Equipment. Good afternoon, sir, and thank you so much for joining us today.
Yeah, good afternoon.
So the results, I shouldn't start discussing because really strong numbers by the company, and I cannot go ahead without talking about the margins at 17% for the Q4. Now, 16% for the full year. Are you showing that you're not a FMCG company? Because the margins have been really, really strong. Could you just talk us through what has led to these strong margins, and do you think this range around the 15 to 16% is the new normal?
I think this 15 to 16% should be the new normal. Maybe even higher than this. Definitely, I would say 16% plus. And see, for so many years, we've been doing work all across our cost efficiencies, our cost takes. And now commodity has supported us, and operating leverage and our utilization levels increasing in the last year has given us this 4-5% or to 500 basis points increase in our margins on a yearly basis. So I think our overall hard work has paid off.
Right, sir. Now we've seen some slowdown in the infrastructure just in general due to elections, and most segments are expecting recovery in the second half, but we haven't seen any kind of slowdown for you. Could you just let us know on what's happening in the industry in general, buyers of your vehicles, and how are you seeing the start of the financial year of 25? If not numbers, just if you can let us know on what's happening.
Yeah, by end of Q4, the momentum was still continuing. It is definitely a little muted ever since the general elections have started. So I would say mid-April onwards. And this was very well anticipated by us also. So we can expect a slightly muted June quarter for our company. But going forward, I think Q2 onward, but especially Q3 onwards, things will revive. Revive, when I say, is go back to the same momentum. That's what our belief is. So there are 2-3 factors that add to it. Primarily, one, we are out of monsoon, so infrastructure activity further picks up. And the festival season starts, the buying season starts even with respect to capital goods and our construction equipment. But most importantly, this year, we feel that Q3 could be really a bigger bumper month, and maybe even the second half of Q2, because from 1st of January, the construction equipment is going from BS4 regime to CEV5. So about 60% of the equipment that we make, the cost is going to increase by 12 to 15% in that bracket. So we expect a lot of pre-buying of the type of crane which are under 50 horsepower to happen. I would feel something in September onwards. So on the whole, things look good. Yes, Q1 will be a little muted.
Well, that's great to hear, sir. I want to talk about the agri segment right now. I think we've seen it's one of the slower divisions on revenue growth of 12%. But volumes have fallen here for this particular. We've seen really strong growth in construction equipment, which has been one of the leading segments for you now. It has finally turned around over the last 2 to 3 quarters. Could you let us know what's happening on agri? How are you focusing on the turnaround of this divisions, and what are the company's efforts on this segment?
There are 2 main things we are doing. First, we focusing more on exports because we feel there is more potential for us to do better than exports. And primarily led by a smaller tractor, which is basically a 20-25 horsepower tractor. So we especially evolved an orchard tractor or a smaller tractor for exports market. And also similarly, 80, 90, 100 horsepower, bigger models. I think 85, 95 horsepower models. So I think that is where we are going to be able to increase our revenue going forward faster than domestic, because domestic market is, I think, already too overcrowded, and with big players, they start to play on pricing as soon as there is a slight dip in the market. So we've chalked out our strategy. Last year, even though the market was depressed overall, we still able to grow about 12% in revenue. So I think we will continue to do about 15-20% here in agri going forward.
And one other segment that you do talk about in your previous conference calls as well as the material handling. So along with material handling and agri, those are the 2 divisions which you wanted to have a turnaround. Now, I feel material handling has seen good growth, 15% of growth this year. Do you think this segment is now at the starting line to run its course and show good growth in this particular financial year as you expect?
Yes, I think our metal handling division had its own share of inefficiencies within the company. So they have been sorted out, and hopefully it will start to perform better than what we've been doing in the past years with respect to metal handling. And in saying this, I would also like to mention construction equipment. There, on a yearly basis, we've been able to grow more than 50%. And I've always said that this is one segment of ours where we can, grow 30 to 50% every year. So again, in this particular year, we are very hopeful that we'll be able to do at least a 30-40% in the construction equipment sector.
Now, last quarter, you did highlight that there is some but slow progress on your orders from the Republic of Ghana. Now, they had defaulted on their payment obligations. Any kind of update that you can give us on this front?
See, for us, unfortunately, Ghana project has not been able to take off because, let's say, the payments or let's say the liability was to be funded by Exim Bank of India. And there is some default between Ghana government and Exim Bank of India, because of which this payment line is not going through. And, obviously, we've been in continuous touch with government of Ghana, the respective department. And so they are again assuring us that it might take some more time. So, but it's uncertain. Maybe it will be 1 quarter or 2 quarters. But I do believe that whenever it happens, it is only going to be a slight booster for us in additional sense, because the margins at which we had planned to earlier establish this plant there, so they will become better because the commodity prices, inflation is a bit in control. So our margin profile improves on the project of setting up the plant there. And then obviously, consequently, we expect 300 to 500 crores of revenue on a yearly basis. But yeah, as of now, it is definitely, we are not aware whether it will happen in 1 quarter or 2 quarters, because it is between the government and the Exim Bank, and even IMF is involved in some sort of a bailout right now with the Ghana. That's what I understand.
Well, thanks for the update, sir. Now, another one thing that was on capacity expansion now. What is the current capacity utilization for the company on an overall basis? And also, I think you had purchased land also at your existing manufacturing facility. Have you already started, expanding the same, and what's the timeline according to you for this particular expansion?
See, capacity utilization for us is well described if I go segment-wise. So because cranes being about 72%. So in cranes, we have about 75% we are doing as of now. And construction equipment is close to 55-60%. Metal handling is about 65%. And agri is about 35-40% utilization. We did make agreements to purchase land, which will go through in Q1 and Q2 of this year. So put together, that's about close to 82 acres of land. But this is for our future expansion plans, because see, as of now, with our capex and expansion, whatever we have done till FY24, we are now capable of doing a turnover of close to about 4,500 crores, with about 2,900, 3,000 crores what we have done last year. So we have this 50% extra turnover buffer available with us as of now. And within the current year, on our existing land, we'll be doing more capex for 1,800 crores. And our capacity by end of December, or let's say Q4, should our ability to generate turnover should increase to 5,500 crores. So maybe in the second half of this year, or Q4, we will start to plan to develop this land further for maybe FY26 or FY27. That's our plan.
It's interesting you mentioned about your revenue, like current capacity will easily give you revenue of roughly 4,400 crores. Now, if I remember, you said that guidance for FY26 is also the same number for revenue. Is the company so basically you don't need any kind of capacity expansion to reach that revenue number? Firstly, does that still stand as of now? And secondly, how much of a contribution in this total 4,400 crores are you anticipating from the material handling as well as the agri segments? If not just a percentage, rough range also, so it's fine.
Yeah, see, it is 4,500 what I mentioned as a figure. So hopefully this year, on a conservative basis, we are looking at a 15-20% growth, but it could definitely be much faster than that. So I would say that FY25 is totally secured with respect to revenue, and maybe some part of FY26 also. There is a possibility that we might exhaust it within FY26, or we might need to expand. But in any case, by the end of this year, we'll be creating capacity to up to 5,500 crores. Because for our business, we've calculated that about 125 crores of capex can generate about 8x, 9x revenue, 800 crores. So we'll be going ahead with the capex, just in case the market grows faster than what we are anticipating. And I think that over the next 1 or 2 years, 3 years, yes, cranes are growing, construction equipment is growing the fastest. So I believe that metal handling and agri, both of them combined together, their contribution to our overall revenue will remain in the range of 15 to 20%. Because cranes will be growing further, and in any case, construction equipment is faster than cranes.
Understood, sir. Well, thank you so much, sir, for joining us today and updating us on across your segments and what the growth has been. Best of luck for your financial year 25, and we look forward to our next chat. But thank you so much for joining us today, sir.
Okay, thank you.
Well, time for a short break. More news and updates on the other side. Stay tuned.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant?
Welcome back. You're watching Earnings Edge right here at NDTV Profit. We're tracking Ask Automotive right now on the back of the strong Q4 performance. Company reported 23% revenue growth, with EBITDA increasing by roughly 71% and profits increasing upwards of 100%. We're now joined by Mr. Kuldeep Singh Rathi, Chairman and Managing Director of Ask Automotive. Good afternoon, sir, and welcome to NDTV Profit, and thanks so much for joining in. I want to start with the Q4 earnings and the various divisions that the company is present in. Wanted to get a sense of the top 2 revenue contributor for the business, which is the aluminium lighting divisions as well as the ABS systems. How the revenue has slightly changed. Can you give us some contribution of how it will be going forward? And
we have done pretty well as far as the whole year is concerned, and as well as quarter on quarter is concerned. And as far as the 2 verticals that you have asked for, the first vertical of the brakes, where we are the market leaders for the last more than 20 years, enjoying 50% market share of the whole country, where that, since we have that dominant position with each and every OEM and in this sector, so this segment will grow as per the growth of the industry, according to the growth of the industry. But our new segment of the aluminum precision solutions, that is going to grow at a much faster pace, and like this year also it has grown at 28%, simply because there is huge potential because of the lightweighting, because of thermal management, and new opportunities coming in the EV segment, because in EV this segment is going to grow by 30 to 50% more, because of the lightweighting. Plus, we are seeing huge opportunities on the exports front also, where we have outperformed last year.
So for aluminium precision business, I wanted to know what kind of customers do you cater to, and what's the top revenue contributor? It's become the top revenue contributor now. So what kind of customers do you cater to here?
We are one of the fortunate companies which is supplying to each and every two-wheeler OEM in the country. And not only that, when the EV players came, we are supplying to more than 80% of the organized EV segment. So there is a huge growth there also. Plus, as I said just now, even in exports, we have taken very important breakthroughs in the automotive as well as the non-automotive segments.
Well, the company in its presentation has also highlighted that the EV revenue has gone up from just 11 crores a couple of years ago to 120 crores now. How are you seeing this segment in the next fiscal? Because you saw some of the largest OEMs in two-wheeler space, as you mentioned. For EV specifically, do you see revenues mainly from these, or is this going to change going forward now?
This is broadly in the EV segment from the two-wheeler segment only. And we'll grow now as per the growth of the industry, plus more and more products we are taking the breakthrough in the lightweighting division.
If you could give us a qualitative guidance for the EV segment specifically, because out of the total revenues of roughly 3,000, as you mentioned, is roughly 120 crores now. Now we guess that this is going to be a much stronger than the traditional business. How are you seeing the contribution going forward?
I'm afraid that we are not in a position to give guidance on the EV segment, because we'll grow as per the growth of the industry. And the growth of the industry is dependent on so many factors, like the FAME 2 subsidy was a little bit reduced, and now the new EV policy is coming. So as soon as this new EV policy, uniform policy, which was in the news one day before, so when that comes, I think many things will depend on that. But we see that EV segment will grow at a much better space, because the contribution of the EV space is still very, very low. It's just hardly 4% of the total.
Now, for the aluminum content that goes in the EV scooter, which is the higher by roughly like 30 to 50%, firstly, is that correct? And of course, the revenue will also rise with the increased components. But what are the margins for the segment in this? Because the company doesn't provide a diversification of the margins. What kind of margins are you seeing with the higher content per vehicle?
See, the margins will remain the same, but the EV content, as you asked for, is that the EV segment, because of the lightweighting requirements, because they want to reduce the lithium consumption, and that is done only with the lightweighting of the vehicle. So for lightweighting, aluminum is the best material, and so there is in general 30 to 50% extra consumption of aluminum in the EV segment. So that is where we'll gain, because we have already, as I said, we are already supplying to 80% of the segment.
And margins will be in the similar range to the ICE vehicles?
Once the volumes go up, the margins become almost similar. It's a competitive industry. But the good part is when we are utilizing our existing capacities more and more. Like we set up a new plant in Karoli, as you must have seen, with 380 crore investment, and now it is fully productionized, So once we utilize this, like in Q1 itself, will become EBITDA positive, and in H1 will become PAT positive in that plant, new plant. So in our line, as the economies of scale come, the margins overall improve.
As you rightly said, the company is also setting up a new plant in Karnataka, which is roughly a 200 crore capex. Where do you see the commissioning of this particular plant, and what segment is this going to cater to going forward?
No, this new plant will be setting up in Bangalore in South. This will be our third plant in the South, and this is on the extreme demand coming from the customers from the South. This plant, on an investment of 200 crores, will be operational in Q4. And this is broadly, it will cater not only some normal friction material, the brakes part, otherwise the aluminum and the cable division it will present.
I also want to talk about the new segments and the divisions of the company. You have gotten PV orders from the likes of M&M as well as Maruti. You also have another JV for the passenger car products. If you could highlight what's the PV story of the company, how do you see this segment going forward?
As I said, that with this very, very strong presence and growth in the two-wheeler segment, now we have started looking at the passenger car segment, where we took two breakthroughs. One was from the Maruti powertrain, business. That was the casting business that we got the breakthrough. And similarly, in the casting business, we got a breakthrough from the Mahindra three-wheelers also. So in addition to this, in the passenger car segment, we have taken orders from Aptiv, which will further supply our the heat sinks to Stellantis and the Ford Motors. So I think we are taking breakthroughs, and slowly, because we have very little presence in that. So this presence will keep on increasing in the times to come.
Now, would this business also have like a similar growth compared to the traditional businesses, like like the EV business? Will it be a faster and higher segment growth?
See, the growth may look higher because the percentages are too small. I think, export also, we were 3.6% last year, and this time we are doing 4.9%. So that way it looks higher, 54%, but the overall, in the revenue, the composition is less.
Now, another division which is upwards of roughly 10% of revenue contribution is in the wheels segment, and you also have another partnership in alloy wheels, which you recently announced. Now, the company is present in multiple businesses and not just limited to components. What's the ideology going forward into alloy wheels? Because it's a very competitive space. And the revenue and margins also likely to be under pressure. So how are you seeing in this space, and what kind of contribution and revenue are you seeing from this?
So see, the thinking of the company is very clear. Whatever line we start or we venture into, we go with the right technological backup, and which has to be world class. So what's happening is this two-wheeler alloy wheels, especially for scooters, this is getting made in the country with gravity die casting traditionally. But we have tied up with a company in Taiwan, which is supplying to the best Gogoro there, which is OE to Gogoro, and which is making these scooter alloy wheels with high pressure die casting. This further gives some light weighting to the alloy wheel and provides advantage in the light weighting, especially for the EV vehicles it will provide for the scooters. And I think if this technology, we are going to provide the alloy wheels with the high pressure die casting technology. And this will also give us the first mover advantage in the country.
Well, my last question to you, sir, you have the new plant of Bangalore, which you spoke about. Apart from this, any other capex and plan for the next couple of years?
This kind of capex of 200 to 300 crores will come every year because our asset turnover ratio is 1:2. And because we are growing pretty well, and whatever is the growth numbers here onwards, I think that kind of capex will be required. But the good part is we are generating a lot of cash, and our debt levels are very much controlled. As you see, debt to equity is also pretty low, and debt to EBITDA is also 1.06, hardly 1 year EBITDA numbers.
Well, thank you so much, sir, for joining us today at NDTV Profit and speaking to us so candidly. We wish you the best for the next financial year and look forward to our next conversation. But thank you for joining us today. Well, that's all the time that we have on the show. Thank you so much for joining us, and stay tuned to NDTV Profit.
Hi, I am Ashish Chauhan, MD and CEO, National Stock Exchange of India. As we all know, vote is an important right, but it's also an important duty for every citizen of this democratic country. On behalf of all my colleagues at NSE, all my brokers at NSE, and all their employees, we urge all Indian citizens to go ahead and vote in this election so that we get the government that we want. We firmly support NDTV India's initiative of Pledge to Vote and urge every Indian citizen to vote in this general election. Thank you.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides this, lenders also look at several other variables such as income growth, repayment history, bank statements, device data, and behavioral patterns to underwrite a borrower. Underwriting a borrower is basically assessing the risk related to repayment of the borrowed money. To combat over-leveraging, let's
Welcome back. This is Earnings Edge. I'm Agam Vakil. Let's take a quick look at the markets, which are in fact at the moment flat, with the Nifty advancing by around 0.2%. A lot of the activity has once again shifted towards the broader markets. Let's pull up the small cap and the mid cap indices and take a look at how things are faring. And while these indices are flat, there is plenty of action in between and within. But I'm going to take a look at some of your key movers as far as the benchmarks are concerned. And we have Cipla, which is the top Nifty gainer at the moment. That's up by around 2.7%, followed by Hindustan Unilever. And it's not every day that you in fact get to see Hindustan Unilever, well, move up by around 2.5%. Remember, a few days ago when Hindustan Unilever did come up with its earnings, we saw a sharp up move there. And on that day, we did see a recent high, and it does seem like Hindustan Unilever is looking to take that high out. So it's going to be important to keep an eye on, but to see whether or not we in fact see some bulls initiate fresh long positions in Hindustan Unilever. But that said, let's shift focus to earnings then, and we are talking about Maharashtra Seamless. At the moment, the stock is under pressure, of course, I reckon that to a certain extent, this is going to be attributed to the earnings, for the quarter gone by. Well, to address that, we are in conversation with Mr. Saket Jindal, Managing Director of Maharashtra Seamless. Saket, good afternoon. Thank you so much for joining in. I just want your assessment of the quarter. Of course, we've seen a dip in terms of revenues on a year-on-year basis, but I reckon a lot of that will have to do with the pricing of commodities as well. Can you take us through your observations as to what has led to the performance for this particular quarter?
Right. The performance, as you said, the top line has reduced a bit because of less exports. And the sluggishness in export was due to the competition from other countries like Ukraine, and also increase in freight due to the Suez Canal disturbances. So I think the exports will pick up in the near future. And secondly, the demand in domestic industry is still intact, and the infrastructure demand from ONGC and other downstream sectors, and also from boiler segment. So that will be stable in the future. So we expect to maintain the production levels and also capitalize on the export demand in the future.
So Saket, can you tell us about what the contribution of exports is to the total revenue pie, and going forward into FY25, assuming that there will be an improvement, will that pie, the piece of the puzzle, increase when it comes to exports?
Right. So I didn't get your question correctly.
We just want to know, firstly, what is the contribution of exports to your overall revenue, and can we expect the contribution of exports to increase in FY25?
Yeah, definitely it should increase, because the last year was very low exports compared to the previous years, if you see. And the last year was very sluggish. So I think we'll come back to the previous levels at least. And this year it should be much better than last year exports.
What is the contribution of your exports at the moment to your top line?
Earlier, we used to maintain 25 to 30%, but the last year has been very low, I think less than 10%.
Right. Saket, what I'm also observing is that we're seeing an improvement in your margins, and, to a certain extent, the EBITDA per ton for both Seamless as well as ERW have also remained largely stable. So I reckon there is no challenge when it comes to maintaining your operating margins. Would it be a correct assessment?
I think we can maintain the margins. It's a reasonable level. And sorry. So it's a reasonable level of margin, and it's competitive, and we should be able to maintain it.
Right. So in that case, when it comes to the top line, considering there is a resolution when it comes to shipping and of course exports in general, what's the way forward? What kind of overall consolidated growth can we expect for the company when it comes to the revenue going in?
I think the production levels we can increase by 10% at least. So naturally, the revenue also will increase to that extent.
And to what extent does pricing matter? Are you expecting any big changes in the pricing environment, or do you expect that to remain stable?
I think it depends on the raw material, and largely the raw material should be stable. Sorry, any fluctuation we will adjust in our prices.
Okay, and I'm assuming that if we do in fact see a change in raw material prices, an increase perhaps, that will also be passed on in its prices accordingly, right?
That's right.
Okay, in that case, if you could give us a picture on your balance sheet at the moment, are you actually looking to deploy funds towards capital expenditure in the upcoming year, and what sort of a number, if so, have you earmarked for it?
Yeah, there is no clear figure as of yet, but definitely we have plans for capex, and some of the avenues is, one is premium connections for oil and gas, high pressure application. Second is cold drawn pipe, and that is for smaller dia requirements for heat exchangers and other applications. These are the two projects we plan, and also finishing facilities for line balancing so that we increase the production of our main mill.
And as we move into the new financial year, what are the areas of focus for the company? What are the factors that investors can look forward to?
Yeah, so looking forward, we want to deploy our funds in maybe some diversified expansion, where we are looking maybe renewable project or any other acquisition opportunity which is matching with our core competence or integrating our operations. So we are constantly vigilant and want to consolidate or even diversify.
All right. Okay, well, Saket, we leave it at that. Thank you so much for joining us and taking us through what we've seen the quarter gone by, as well as what we can expect going forward. So that's the management of Maharashtra Seamless, telling us about all that is in store. I'm going to once again very quickly take a look at how things are panning out as far as markets are concerned, because, on the whole, it's turned out to be not as much of a volatile day. There was a little bit of an attempt for the Bank Nifty to make a recovery, but that hasn't come through, that hasn't come to be. So I reckon that we're going to have to wait and watch on that one. Of course, at the moment, it's the Bank Nifty itself is trending near day's lows, and currently at around 47,600. Remember that there is now a considerable amount of resistance building on an intraday basis around 47,800 and those specific calls. But it wouldn't take much to actually take them out, because that means still just about less than 0.5% up move. What, however, may become a little bit more of a problem zone would be the mark of 48,000. Now that's where we could see a little bit of a problem. So that's something that we will keep an eye on. But on that note, we slip into a short break, and on the other side, we get you more management. So stay tuned to NDTV Profit, and we'll keep bringing you more.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on three things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds.
Hello and welcome back to NDTV Profit. Now we have the management of Updater Services with us. Just to give you a sense of how the company fared in the Q4, the revenue was about 10.5% up, while EBITDA saw about a 26% growth, while margins saw about a 78 basis point of improvement, and net profit about a 150% of jump here. But to discuss more, we have the management, the Chief Managing Director, Raghunandana Tangirala with us. Hello and welcome to the show.
Hello, thank you for having me.
My first question to you is on the revenue growth that we are looking at. FY24, the revenue was about 16% up, while Q4 about 11% of growth we have noticed. What is the sustainable rate or revenue growth that we are looking forward in FY25?
Yeah, I had called out this earlier. We are looking anywhere between 15 to 18% growth in revenue, and also in terms of our profits or PAT.
Absolutely. And now, if I want to take your margins into consideration, you have specified that you're looking for about a 25 to 50 basis points of improvement. Well, this is on the back of the improving mix that you're seeing on the BSS side. So can you elaborate over here how the margins are different between the two segments?
Sure. BSS historically and also going forward would be about between 12 to 13% margins blended. And the IFM segment would be in the range of 5-6% margin. We would want to increase this mix, that means more of BSS. This could happen organically and also inorganic. If you would remember, we had raised money for inorganic, which we would be definitely, we've targeted 2-3 companies. Probably in the next couple of quarters, we will do that. So our share of BSS would go up. That is the high margin business.
Absolutely. And can you mention what is the kind of share we are looking at? Because if your current mix, it suggests about 67% comes from the IFM. So what is the kind of mix that you're looking for?
Yeah, today we are at about 67 or 65-35. We would want to make it 60-40. 60 from IFM, 40 from the BSS.
Absolutely. And in the BSS vertical, if I want to delve deeper into it, in which BSS segment, in which vertical are we looking at this growth coming in from and higher margins going forward?
Yeah, if you look at largely our BSS segment consists of lead generation or the sales enablement services. Then we have airport ground handling concessions. We have also supply chain audit services. So we would look at in these three spaces for acquisition and also organic growth.
Absolutely. Now, over here, if I were to notice the employee expenses, they have shifted higher in the fiscal compared to last year. I wanted to understand what is the reason for this, and is this expected to continue forward as well?
Good question. Yeah, it did go up if you look at last quarter, and it could remain the same percentage this first quarter. This is because of our ramp up in business. We invest a little more in the ramp up phase, that is quarter one, quarter two, because of people and investment into that. This will kind of even out in the second and third, fourth quarters. So it would come down actually if you look at it, but it would look like it is higher by a marginal percentage now.
Sure. So next 2-3 quarters, we expect them to go down. But now I want to shift the focus again to the recent acquisitions that we've made in the past. That includes the Athena and the Denave. I wanted to understand from you, how is the performance shaping up over here? And you are also increasing your stake going forward. So just wanted a breakdown on these two.
Yeah, Denave would become 100%, I think, anytime now because when the results are out. So Athena would become 100%. Today we are about 57%. The stake will go up to 76 this quarter. And eventually next year we will get 100%. Now, yes, both Athena and Denave have been flat last quarter. We see pickup happening in the first and second quarter. Both would, okay, to just put it simple, both segments will grow between 15 to 18% on a full year basis.
15 to 20% growth from both the segments coming in from you. You mentioned
15 to 20% growth, both segments put together on a full year basis.
Oh, all right, on a full year basis. Now you mentioned about other inorganic growth opportunities also. Wanted to understand, is this going to be from the B2B side as well, or is it from, we can shift focus to the residential real estate market? Where are we seeing these inorganic growth opportunities coming in from?
The inorganic would happen only in the BSS space, which is a higher margin space. It will not happen in the IFM space. We have always remained B2B. So, but we could look at, the residential space in the IFM space. We could look at if it is a high-end market residential. But so far, we don't have any residential. We could look at it. But to answer your question, the inorganic will happen only in the BSS space.
So BSS space it is. And do you plan to raise funds to make these sort of acquisitions going forward?
If you remember, we had already raised about 80 odd crores in our IPO. So organically, the business also throws up about 100 odd crores. Even last year we did that. So it could be between the acquisition, between the money which we have accrued and what we have raised, about 80 crores for this.
All right. And now I want to ask you about the airport ground services you've just initiated over here. What is the kind of outlook that we should expect from this business going forward?
Yeah, airport ground handling is a concession. We have a 10-year concession with these airports. We currently have about 22 airports. We have airports like Ayodhya, Tirupati, Pune. We have 22 B and C airports. All this will start kicking in from the second quarter of this year. And we look that we are very bullish on that because the airport and aviation business is growing at about 20%. We think we will also grow much higher there in the airport business.
Absolutely. Thank you so much for joining, and we'll stay tuned for more such performance coming in from updater services. Thank you once again for joining.
Thank you. Thank you for having me.
Now, one management to another, we are now joined by Narayan Kamakodi, MD and CEO of City Union Bank. The bank has reported a 17% jump in its net profit for March quarter based on improved recovery from slippages. Welcome to the show, Mr. Kamakodi. Let's start with the new gear going forward for the bank.
Absolutely, and whatever observations have been given in the after financial year 31st March 2022 and 31st March 2023, everything has been taken care of, and due compliance has been already given to, and whatever we are moving forward is with a clean slate.
No concerns on provisions made for FY24?
Yeah, absolutely. We have on best effort basis, like say the almost we have done everything, and it had been subject to audits also. The automation of NPAs had been through, and subsequently all required provisions as suggested had been taken care of, and we have done it with like say all 100% sincerity in terms of fulfilling the regulatory guidelines.
And what's the growth guidance that we are looking for FY25?
See, basically, like there are 2-3 things which had happened in the last couple of years over and above that, as suggested during the last year. The implementation of the digital lending processes and streamlining, all these things have started. And our bank, particularly the old generation banks like us, we never had a separate sales vertical per se, and those things have also been taken care of. So the required investments have been made, and it's actually a work in progress. And almost we are reaching a stage where the results for whatever investment we have done has to come out. So we are into the threshold of getting into the growth path after completing probably the last leg of the implementation of those processes, and we should be getting into that. Actually, we are not giving any specific guidance because, last couple of times we gave some numbers which we are not able to achieve. So once we cross a double-digit number, which we are expected to have that in the next few months, once we cross that and declare, we will be in a position to give you much more pointed numbers and all for the thing. But what I have to clearly say is that, almost whatever corrective steps that need to be taken on business front, on compliance front, on technology front, almost all the investments and the processes have been completed. And you have to appreciate even during that period, we have been improving on our efficiency front, particularly the ROAs had shown improvement, and the recoveries and credit cost recoveries have improved, the credit costs have come down. The overall ROA numbers we are able to hold up despite having a lower growth by improving our efficiencies in different front. This is one factor which you need to appreciate while looking into the overall performance.
So mid-teens to 20% loan growth, would you expect?
That is for which we are working in the sense that, as you have seen, the traditionally, we had held that all our loans we were given for creation of the business assets, and we had kept ourselves out of consumption. If you had a chance to look into the credit growth of the system, bulk of the growth, a significant portion of the incremental growth of the system had happened in the consumption and retail, be it housing loan or be it car loan. To some extent, people have taken path through the unsecured also. So some sort of course correction and all needed to be done, for which changes in the systems, changes in the people, processes and all were needed, and we had put them in place, and they are almost in the last leg of implementation and all. And once that, the engine starts firing, you will start seeing the growth improving to the industry level growth rate. But at this level, all our direction in terms of growth is towards achieving the industry level growth rate, and we will be able to see that numbers firing once the new engine starts firing, which is maybe a few months away. And once we demonstrate the growth in 1 or 2 quarters or milestone, then when I say a number, you also will have better confidence in accepting that. We expect the double-digit growth should happen sooner than expected, for which every effort is being put to achieve that. You might have seen the quarterly growth in the last quarter had been 5%, and normally the first quarter used to be a little bit slower for us, but this time, the speed is relatively better. So all these things are pointing towards that we should be having much better growth rate in the current financial year.
So the provisions are low now. Is this expected to remain sustainable? And what about the slippages and credit cost?
Yeah, you might have, if you had a chance to look into our previous year's figure, we had a slippage of about 1,300 crore in the financial year 23, which has come down to about 1,010, 1,020 crore in the financial year 24. We expect there will be further reduction in the slippage in the current year. The recoveries have also, stabilized, and they are staying at about 1,300 crore, both live NPA and technically written off NPA recoveries put together. And that's why the net credit cost for us giving, looking into the numbers is only 20 basis points as what we have given. So, we for the current year, we expect the slippage ratios will be falling further. And our, sooner, we have almost reached the, less than 2%. Towards the end of the current financial year, we should be having somewhere between 1 to 1.25 or something like that in terms of net NPA percentage is what we, for which, where we have visibility at that point of time on as is various condition basis.
On cost to income, where should it be exit by FY25?
See, year as a whole, you might have clearly seen our annual cost to income ratio is about 47 and the fourth quarter result is about 51. For the entire financial year 25-26, we expect the cost to income ratio to be between these two numbers. As I had explained in the analyst call yesterday, we have taken certain upfront expenditures currently, particularly on our digital lending technology side and also on, building the team and salary and other things where we have taken certain expenditures upfront, and they are yet to give their output. Once we start receiving the, output from these investments, whatever we have made, which we expect in the output should start coming in the next couple of quarters, we should be able to see good improvement in the cost to income ratio, which should end up for year as a whole somewhere in between our 24 financial year 24's total year cost to income ratio and the fourth quarter cost to income ratio, which is between 47 and 51.
Also, ROAs are expected to improve. Where should they be at exit by FY25?
Yeah, it will be definitely positive compared to where we have ended the financial year 23-24.
And the BPS, is that to be better than Q4 FY24?
I don't want to give any exact number. I will give you only directional basis. You will start seeing the improvement.
Well, that's all the time we had for today. Stay tuned to NDTV Profit. We have lots more lined up on the other side.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides this, Lenders also look at several other variables such as income growth, repayment history, bank statements, device data, and behavioral patterns to underwrite a borrower. Underwriting a borrower is basically assessing the risk.
Benchmarks trade near the day's high as heavyweights RIL, Infosys, ITC pack gains. Nifty above the 22,500 mark. Realty, FMCG and IT emerge as the bright spots across sectors. Paytm's loss widens to over 550 crore rupees in March as the company writes down value of investment in Paytm Payments Bank. And BHEL slumps over 4% as the company's net profit falls 25%. Other expenses rose to over 500 crore rupees in Q4. More than a week after the Ghatkopar hoarding collapse, the death toll from the incident has now touched 17. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's have a quick look at where the markets are at first. The Nifty 50 is currently above the 22,500 mark. We're marginally in the green and up by about 0.1%, a little bit more than that actually, but a quiet day. Keeping that aside, most of the stocks in the Nifty 50 are in the green, but a few in the decline. Let's have a look at the key constituents of the Nifty 50. What's leading is Cipla, Coal India, Hero Moto. They're all up by about over 1.5%. What's contributing to the Nifty 50 is the RIL. It's contributing nearly over 40 points to the Nifty 50. Infosys, HUL and ITC are the other top gainers. What's not performing well is a whole bunch of stocks in banking. ICICI Bank, HDFC Bank, SBI, Axis Bank are all in the red and together they're dragging down the Nifty 50 by almost about 90 points. Let's also have a look at the sectoral indices. The Nifty Bank, of course, not having a particularly strong day. It's down by almost about 1%. What's also down is Nifty Finance, Nifty Metal, Nifty PSU, all of those down by about anywhere between 0.5% to 1%. What's performing well is Nifty FMCG. That's up by over 1%. It's actually up by 1.3%. But IT, Realty, Energy are some of the other sectors that are in the green. But let's also have a look at the broader markets. Those are fairly flat at this point as well. The Nifty Small Cap 250 is actually marginally in the red, but just by about 0.1%. The Nifty Mid Cap 150 is in the green by a little bit under 0.25%. We'll come back to some of these stocks and discuss more about them. One of them is BHEL, that's under pressure after its Q4 earnings. Net profit fell by 25.6% and the management in the con call said that the provision of 1,037 crore rupees has impacted the profit and loss. My colleague Mihika joins us with more details on that stock. Mihika?
Yes, so the Q4 earnings were disappointing ones. Revenue was marginally up 0.4%. The key number was the EBITDA, which was down 30.6%, and this was mainly due to higher other expenses that stood at 527 crores versus 58 crores a year ago. Margins contracted 400 basis points and net profit fell 25.6%. When you talk about the con call highlights, now the order book of the company stands at 1.31 lakh crores and around 92,000 crores of these These orders were from the power sector and rest from the industrial sector. Now, gross margins were down due to supply chain issues and execution delays, according to the company, but they are targeting a 12 to 15% CAGR growth in terms of revenue. And they also mentioned that the government is planning to add 88 gigawatts of power by 2032, and the company is expecting 10 to 12 gigawatts orders from there. When you talk about the brokerages, a mixed bag. Now we have Morgan Stanley, which is retail and equal weight rating at a target of 220 rupees, which is a 31% downside. Q4 FY24 revenues and margins were below their estimates, but they do expect order momentum to continue given the policymaker focus on adding thermal capacity. They do believe that earnings visibility is improving with healthy prospect pipeline. We have Nuvama, which has retained a buy at a target of 400 rupees, which implies a 25% upside. They've mentioned healthy outlook given a 25 gigawatt of thermal total addressable market spread over the next 2-3 years. They've also implied that the old legacy projects expected to be completed by FY25 end. And lastly, they've estimated an EPS CAGR of 88% over FY25 and FY27.
All right. Thanks a lot for that, Mehika. The stock BHEL is down by almost about 5%. Another stock that's, of course, in the news is Paytm. After the company's earnings were released earlier today morning, the stock has reacted on the back of that. It is down, but not by so much. It's down by about 1/3%. Now, my colleague Pragati joins us with more details about the earnings. Pragati, tell us a little bit about what the earnings look like. Were they in expectations? And what are the expectations going forward?
Right, so Paytm's numbers came this morning and they were weaker than expected. Now, we must remember that this is the first quarter of Paytm coming out with its numbers post RBI's crackdown on Paytm Payments Bank. So naturally, the impact was expected on many fronts and the numbers are showing that. For instance, the net loss has widened to 551 crore rupees. The EBITDA loss has also widened to 223 crore rupees, and the revenue has been down 20.5% on a quarter-on-quarter basis. This is the first snapshot of the main numbers where we are seeing the impact of RBI curbs. Two important takeaways I have for our viewers here. One, the Paytm wrote down the value of its entire investment in Paytm Payments Bank, which was worth 227 crore rupees, and this they have shown as an impairment provision in this quarter. The step was taken because there was some uncertainty to the restart of certain businesses, and anyway there's an embargo placed on Payments Bank because of RBI's action. The next thing is the company's commentary or the guidance that they've given on the Q1 FY25 numbers. Paytm has said that while there has been a financial impact or the impact of numbers in this quarter because of RBI's crackdown, the full impact or the entire impact is expected in Q1 FY25. So in terms of numbers, Paytm expects an incremental EBITDA impact of 100 or 150 crore rupees in Q1 FY25 and a revenue of rupees 1,500 to 1,600 crore in the first quarter of FY25. We'll bring you more updates as and when we have them.
Thanks a lot for that, Pragati. And now from Dalal Street to Wall Street, that is gearing up for NVIDIA results later today. Remember, the stock has actually rallied 93% in 2024. My colleague Rishabh Bhatnagar joins us with what he makes of the stock of stock that's the talk of the town. Rishabh, over to you.
There is only one talk and stock of the town, and that is NVIDIA. We've seen it grow, we've seen it triple in 2023. It's already been up by about 92% this year, and why wouldn't it be? It is at the heart of all the artificial intelligence developments that are coming out of the US, now be it Google, Meta, Microsoft, OpenAI, for all matters, everything is powered by NVIDIA chips. Now the CEO has constantly been in touch with the chiefs of all these big tech companies. He has been been in their good books because he is a very, very important person and a very, very important company at this point in time. We've also seen that the market cap of NVIDIA has ballooned past $2 trillion this year. And with this, obviously, comes a windfall in the revenue and the profits that it is expected to book. the profit and net income is expected to be up more than fivefold to roughly $14 billion. Now, that is a massive, massive number coming in from NVIDIA. Google, Amazon, Microsoft, all these big tech companies are altogether expected to shell out $200 billion in capex purely for AI, and a large chunk of this will go to NVIDIA. So this is the stock and the talk of the town, and it is expected to be so going ahead as well.
Absolutely. AI clearly continues to be the theme of the season, as does NVIDIA. Clearly a lot more action packed up even in the year to come for that stock. But with that, let's slip into a short break. Do stay tuned. We will be back with what's expected from Battleground Delhi.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by CRISIL and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38%.
Hello and welcome back. You're watching Market IQ on NDTV Profit, and now it's time for NDTV special election coverage. Today's focus is on New Delhi. The oldest constituency in the country is not only witnessing a rise in temperatures but also a heated battle between the AAP's Somant Bharti against the BJP's Bansuri Swaraj. My colleague NDTV's Vedanta Agarwal brings us a ground report.
The big battle for the heart of the national capital. The strategically important New Delhi constituency has seen stalwarts like Atal Bihari Vajpayee, Lal Krishna Advani and Ajay Markan contest from it. It is the oldest seat in New Delhi. It houses the power corridors of India. A victory in New Delhi means a key to the seat of the world's largest democracy. The throne of power, the core of our republic, the thrust of Indian democracy. This iconic boulevard has seen it all, defining mandates, alliances rising to power, governments falling, and prime ministers running the country from here, the center of New Delhi. One of the capital's 7 constituencies, New Delhi is home to over 14 lakh voters, including high-profile electors like the President, the Prime Minister, judges and senior leaders who form one of India's most educated electorates. It was in the late 1970s, when the Janata Party was on the rise, that Atal Bihari Vajpayee wrested the all-important seat from the Congress soon after the emergency. His closest confidant and India's former Deputy Prime Minister L.K. Advani contested from New Delhi soon after in 1989 during the peak of the Ram Mandir movement. From Ajay Markan in the early 2000s to Meenakshi Lekhi holding the fort for the BJP in the last decade, it has been a direct contest between the BJP and the Congress until Delhi's Aam Aadmi entered the fray. Despite Kejriwal's back-to-back electoral victories in the state and local polls, his party has yet to dent the BJP's prospects in the Lok Sabha. This time, it's a battle between lawyers. The Congress and the Aam Aadmi Party are in alliance in Delhi, and New Delhi is being contested by the Aam Aadmi Party. From the AAP is a man who fought for the Anna Andolan in the courts, Supreme Court lawyer and a sitting MLA from New Delhi's Malviya Nagar, Somnath Bharti. The task is cut out for the party heavyweight to defend his boss in prison and broom up his party's tattered image in the run-up to the polls.
This time the election has a different color altogether. The way the election took place in 19 and 14, this time the reasons, the purpose, the focus is entirely different. The way BJP crushed opposition, the way they took away the rights of Delhi government, the way they tried to demolish the democratic fabric of the nation, all will be addressed in this election. So people of Delhi want accountability from central government. All these members of parliament of BJP in last 10 years, they did not say a word. When rights of people of Delhi were being snatched by central government, they did not say a word. BJP understands. Ajit Pawar, whom Honorable Prime Minister himself accused of 70,000 crores loot, he is in BJP. So BJP has a new washing machine. So now he's pure. Chhagan Bhujbal, who was jailed and remained in jail for 1 year on charges of corruption, he joined BJP. Now he's pure. You know, Suvendu Adhikari, Himanta Sharma, a number of people. So new washing machine in the market. BJP, which is to purify people, people do see कौन काम करता है, कौन नामदार है, कौन कामदार है.
In a radical political move, the BJP has unseated 6 of its 7 contentious sitting MPs from Delhi. From hate speech accused Parvesh Verma and Ramesh Bidhuri to the controversial MP Gautam Gambhir, the BJP's big Delhi leaders have all been dropped. From New Delhi, the BJP has fielded a fresh face. BJP veteran Sushma Swaraj's daughter, 40-year-old Bansuri Swaraj. A political debutante, Bansuri Swaraj is a lawyer like both her parents, boasting of an illustrious legal career.
There is no question of legacy. I can tell you that the people of Delhi have unwavering faith in Modi ki guarantee. Whether it was abrogation of Article 370, whether it was construction of a grand Ram temple in Ayodhya ji, whether it was bringing 33% reservation in favor of women in both Vidhan Sabha and Parliament by passing of the Nari Shakti Vandan Adhiniyam. These are all promises which were enunciated in our manifesto, and they have been absolutely fulfilled. These are union elections. Yes. And therefore, I think the voter also, the perspective is broader. We're talking about women-led development of a Viksit Bharat. So, of course, my vision resonates with his.
The fact that most of the sitting BJP MPs were removed, how do you look at that? Do people here, you see, were sort of disillusioned by the MPs of your party, your predecessors?
No, not at all. Not at all. हमारी पार्टी में टिकट कटते नहीं हैं, टिकट मिलते हैं और हमारे यहाँ पद नहीं होते, दायित्व होते हैं.
Delhi has nearly 1.5 lakh first-time voters. And among them are thousands of young students in one of the country's biggest coaching hubs in New Delhi's Rajendra Nagar. In election season, this nerve center of UPSC aspirants is bustling with politics.
अगर हम कंट्री वाइड बात करेंगे तो इसमें नो डाउट जो प्राइम मिनिस्टर कैंडिडेट होते हैं, चूँकि ये लोकसभा का इलेक्शन है, उन्हीं के नाम पे वोटिंग होती है. लेकिन अगर आप मेरे व्यू की बात करेंगे तो आप अपने कंस्टिट्यूएंसी और प्लस जो आपके जो भी प्रॉब्लम्स हैं रिगार्डिंग कंस्टिट्यूएंसी जो भी प्रॉब्लम्स हैं उस चीज़ को भी ध्यान में रख के वोटिंग करनी चाहिए. अब जैसे कि एज ए स्टूडेंट वी आर फेसिंग अनएम्प्लॉयमेंट.
पॉलिटिकल लीडर हर रोज़ मतलब पार्टियाँ बदल रहे हैं. जैसे कि आप देख रहे हैं कितनी पार्टियाँ बड़ी बड़ी पार्टी के लीडर जो जैसे महाराष्ट्र में लीडर हो गए, राजस्थान में लीडर हो गए. मतलब ये कुछ ट्रांसपेरेंसी और एक लीडर की कुछ अकाउंटेबिलिटी नहीं बची है. वो एक इलेक्शन में इधर, एक इलेक्शन में उधर. आजकल जैसे कॉन्स्टिट्यूशन बॉडी की जितना वो गरिमा गिरती जा रही है, तो एक सोसाइटी का जो सोसाइटी बन रही है रिलीजन के बेसिस पे या कास्ट के बेसिस पे, ये पिछले कुछ सालों में या 1-2 डेकेड में बढ़ा है अभी. क्योंकि अगर आज देखो, आज के टाइम में अगर कोई अपनी कोई बात रखना चाहता है, अगर कोई प्रोटेस्टर है या कोई और भी है, अगर वो अपनी बात रखता है तो उसे एज ए एंटी नेशनल घोषित कर दिया जाता है उसी टाइम. वो मेनली पार्लियामेंट में जो हो रहा है, पार्लियामेंट की प्रोसीडिंग अगर हम भी देखते हैं तो पार्लियामेंट की प्रोसीडिंग में अगर उसका वो देखे कि कितनी एफिशिएंसी है, वो एफिशिएंसी आ ही नहीं रही है.
I feel cleanliness is the first thing they should think about. I feel the streets are not very clean. All these dogs here, it's very scary. The cost of living is very high. Since I'm from Tamil Nadu, I see the cost of living is very high, almost double.
From deadly pollution to toxic landfills and the sanitation mess. Even as Delhi grapples with these long-standing issues, it is left without a chief minister. The arrest of Chief Minister Arvind Kejriwal ahead of the big general elections has left the Aam Aadmi Party without its star campaigner and biggest face. The contest for the coveted New Delhi seat is a prestige battle, both for the Aam Aadmi Party as well as the BJP. Many political pundits say that the BJP, which has unseated 6 of its 7 sitting MPs here in Delhi, is nervous of the Aam Aadmi Party, which has defeated the BJP both in state elections as well as municipal polls. But these are national elections. Can the big message of brand Modi, national security and Vishwaguru trump local issues like sanitation and air pollution? That is a big question. In New Delhi with camera person Kanan Patra, Vedant for NDTV.
And moving on, the Ghatkopar hoarding tragedy continues. More than a week after the hoarding collapse, the death toll has now touched 17. My colleague from NDTV, Radhika Ramaswamy, joins us with more on this. Radhika, what have you been picking up?
That's right. That's the unfortunate news coming in. One more person has died in the hoarding collapse incident. This is a 52-year-old man who was undergoing treatment in KEM hospital who has succumbed to his injuries. Now the death toll has increased to 17. Earlier it was 60. Now one more person dying. Now the death toll stands at 17. 10 more people are still hospitalized and several have been discharged at this point. Hundreds were rescued from that collapse site over a period of 3 days. We know for a fact that NDRF fire brigade officials were carrying out rescue operations in that particular collapse site. Extremely challenging rescue work was going on for few days, and now the death toll stands at 17. Yes, at this point investigations are going on. SIT, a 6-member SIT has been formed to investigate this case. They are looking into Bhavesh's transactions, financial transaction, the contract signed between Bhavesh's advertising agency as well as the government railway police officials. So that is being examined. His house was raided, documents collected, his bank accounts being examined at this point. So SIT formed by Mumbai Crime Branch. Of course, Bhavesh is the only individual who's been arrested for culpable homicide. In fact, he's been sent to police custody till May 26. Police is interrogating him to understand how the contract was signed and who he was in touch with and how he managed to get this contract despite all the rules being violated. As far as authorities are concerned, nobody from GRP, BMC or state government have been arrested. It is the GRP, Government Railway Police, who had granted permission to Bhavesh to erect that particular hoarding. The hoarding was in violation of rules. It was way above the permissible limit of 40 feet. It was beyond 100 feet. Still permission was given. BMC says no clearance was given by them, no permission sought from them either. BMC, of course, sort of washing its hands off, saying that it was GRP land and it was GRP that had given. Of course, GRP on its part saying that it has initiated an internal inquiry. So all in all, blame game happening among the authorities. Some last-ditch effort by BMC pulling down hoardings across the city, which has been violating norms and not allowing more hoardings to come up in the city. However, too little too late as far as actions by authorities are concerned. But the fact remains, Bhavesh arrested, also a history sheeter, managed to get that particular contract in violation of rules. Nobody from state government authorities, GRP or BMC, has in fact been booked in this case. Unfortunate though that one more person has died. Death toll now stands at 70.
And while several parts of the country continue to grapple with heat waves, many districts of Tamil Nadu continue to receive sharp showers, including Kanyakumari, Coimbatore and Shivaganga. And the Regional Meteorological Center has issued a red alert in 4 southern districts of Tamil Nadu. NDTV's Sam Daniel joins us from Chennai with the latest on that.
Heavy rains continue to pound several districts of Tamil Nadu, particularly in southern, western and delta areas. In fact, the Met has given very heavy rainfall to extremely heavy rainfall alert to districts like Kanyakumari, Theni, Tirunelveli and Tenkasi districts, both for today and tomorrow. Heavy to very heavy rainfall is also expected in districts like Virudunagar, Tirupur, Coimbatore, Nilgiris and Dindigul. In fact, over the last 21 hours till 8:30 this morning, Trichy has received 12.9 centimeters rain. Thundi in Ramanathapuram has received 9.6 centimeters rain and Salem 7.7 centimeters rain. Fishermen continue to stay away from the sea for the 5th day, and the Met Office has advised fishermen involved in deep sea fishing to return to the shore before 23rd, as they expect a low pressure over the Bay of Bengal on the 22nd, which could actually turn into a depression on the 24th. Authorities are not taking any chances. The Tamil Nadu government has deployed 296 state disaster response force personnel in several districts, including Kanyakumari, Coimbatore and Nilgiris, to make sure they would be on standby to be able to swing in action if the situation turns out of control. Tourists visiting the hill resorts of Nilgiris and Kodaikanal have been advised to avoid, and if they still choose to travel to these areas, the authorities have asked them to exercise abundant caution.
And that's all that we have on the show for today. Do stay tuned to NDTV Profit for more coming up. Thank you for watching.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Hello and welcome to the Mutual Fund Show on NDTV Profit. I'm your host, Neeraj Shah. As always, it aims to bring you actionable insights from the mutual fund industry, or it aims to bring you some thought processes into, or at least thought processes of experts, so that we can imbibe the best thought processes in our minds to make the best of the mutual fund investing. On the show today, we're joined by Neil Parag Parikh, Chairman and CEO of PPFAS AMC, or PPFAS Mutual Fund. And it's a pleasure to have him, simply because almost every guest and every advisor who comes in and recommends a flexi cap fund has PPFAS flexi cap fund in their recommendation list. And Neil, that must make you a proud chairman and CEO, but also the onus of responsibility of performing the way you guys have performed over the last so many years. Thanks so much for taking the time out and speaking to us today.
Thank you, Neeraj, for having me. Yeah, it feels really good, and it feels like we've come a long way, you know, like the last 11 years, and it was not a very easy journey in the beginning, and obviously the last few years have been good, so quite happy with that.
Yeah, as you should. Neil, before I get to the conversation that we want to do, I'm throwing this out of the blue at you, but can I please ask you a question that comes up nowadays when we talk to experts who recommend, and then the conversation that comes in as a question is that PPFAS for a history of years now, for a number of years, has performed on a fabulous XIRR returns. But the question that now comes to a lot of people's mind is that it was possible for the fund to perform so well because of, aside of course, all the practices that you guys have, also maybe because the size of the fund wasn't as large and you had a fairly large ability to invest into global companies. And now both of those, in some sense, are slightly different as opposed to what it was maybe 5 years ago, because the size of your fund is very large, and your global exposure, because of the restrictions that have been put in, cannot be maybe as much as it used to be. And please correct me if I'm wrong here. So what would you say to something like this?
Yeah, thanks Neeraj, for that question. So just let me take the foreign investment first, and then we'll go to the size. We've been PMS. We had a portfolio management service, or a PMS, from 1996 to 2012. And that was an all India portfolio, you know. So we've been used to having 100% Indian portfolio also. The reason we got into international stocks is not necessarily to get more returns, but to balance the portfolio and lower the risk of the portfolio. For example, you don't want to take country specific risk. When we want to get some of the country specific risk out of here, in the sense that if there's a demonetization event or a war event in India, at least some of the portfolio is safe, which is outside the country. So in that way, it reduces the risk of the portfolio. Also at that point, and even today, we feel that there are some opportunities where there are no equivalent companies in India. So if you want to buy a Google or an Amazon or a Microsoft or a Facebook, there are no equivalent in India. So you have to look outside the borders for that. So surely the international exposure has come down from 30% to 14%. 14 odd percent since the 7 billion market, the cap has been hit, and we are not allowed to send more money abroad. But our experience is also on to manage 100% Indian equity. So I don't think that's a really big deal. The way we look at stocks is the same. If it's global stocks or Indian stocks, the way we value them, the way we look at them is the same. So I don't think that's too much of a thing. Obviously, we hope the restrictions are lifted and we can again get back to investing some of that money into global stocks if valuations are attractive. So I don't think that's much to do with there. And on the size of the fund, look, our size looks big because we manage like pretty much one equity scheme. I mean, there are two equity schemes, the Flexi Cap and the Tax Saver. But essentially the Flexi Cap fund is the biggest one, and it's quite large. So it looks large because we're managing only one scheme, but all the restrictions on the cap on how much stocks you can buy, up to 10% is at a AUM level, not at a scheme level. So if you were running, say, 15 or 20 schemes and we light one stock, it had to be divided across all those schemes, So that's why it looks big. So here we can do everything within this one fund, so our best ideas are not very diluted, one. Number two, as long as the market continues to grow and gets deeper and we grow at the same pace, I don't think there's anything to worry about in terms of size. Well, there's only one thing that changes with a bigger size, obviously, is some of the flexibility of investing in smaller cap stocks and taking reasonable exposure to those. So for that, I think what we had said earlier is that we'll have about 25 to 30 stocks in the portfolio. That's a comfort level. But because the size of the fund, and that because we can't take meaningful exposure to small cap stocks in the portfolio, we'll have a longer tail. We'll probably get more small cap stocks, but with a smaller percentage. So I think if anything changes, that what will change. We have a slightly longer tail.
Neil, would you believe that having a larger size is a disadvantage? Don't say a no just because you have a larger size. I'm really trying to ask you an academic question. Would a scheme having a very large size be at a small disadvantage versus a fund with a smaller size, precisely because of the reason that you mentioned, that the ability to take larger exposures or exposures to smaller stocks becomes a bit constrained?
Yes, definitely. The flexibility definitely for the smaller cap stocks go down, but but we can actually invest pretty reasonably in the large cap and the mid cap space. And obviously, if the foreign limits increase to about to where they were, we can go up to 35% there. So again, the small cap would be around 15-20% at max of the portfolio, on the higher side, So on that, only on the small cap, I feel there'll be a little less flexibility, and we'll have to get more stocks. Other than that, I don't think there's any other difference as such.
Been a thought in the minds of the AMC to launch a small cap fund? Is there been? I mean, just trying to think out loud.
No, there's no. We don't have any immediate plans of launching any other fund actually right now. So we prefer a diversified strategy. I think if there are opportunities, again, the flexibility should be with the fund manager. Wherever there are opportunities, he can go there. It should be I think the way we look at it is like a Swiss Army knife, right? It's one device with multi-functionality, and that's exactly how we look at our fund. And we thought that, we want to take the confusion out of the investor, so you give the money to the fund manager, and if wherever there are opportunities, we can go there and get those opportunities, in whichever market cap or outside the country also. So it's a one-stop shop kind of a thing, and that's kind of the way we like to run in a diversified kind of a strategy.
Okay. Neil, generally, and maybe in your case specifically too, but generally, how would you explain the strategy to hold large amounts of cash? The opinion out here is divided firmly. For some fund managers, their call is that we are not given the mandate to hold cash, we are given the mandate to be fully invested. And in some cases, people say that why shouldn't I take the advantage of making a tactical call? Both arguments could hold true. My question is largely around the size of the cash that a fund house or an AMC builds out. How do you explain that strategy?
Yeah. So the preference for us is also to be almost fully invested. And for us, being fully invested is about 97, 98% invested. We'll always have 2-3% cash for meeting redemptions or for those purposes. Again, we don't force ourselves to invest, and we don't chase stocks if the valuations are not attractive to us. Again, if there are no opportunities, then we are happy to hold some cash and deploy when the time is right. We are okay to have some short-term underperformance during frothy times, but I think the main thing is to protecting the downside is something that's very, very dear to us. I think we don't want big blow-ups in the fund or big negative drawdowns in the fund, and holding some cash when times are a little frothy makes sense for us. It's held us in good stead over the last 20 odd years, so I don't think we'll change that anytime soon. It also gives the fund manager the flexibility, he doesn't need to be under pressure to keep investing if there are no opportunities, so I think this has worked well for us, and we'll continue to do that. Again, having said today, we are having about 15% cash in the portfolio, so that means about 2 or 3 ideas. If you get 2 or 3 ideas and have 4-5% allocation to those ideas, then the cash is kind of done, so it's just a matter of that. We don't have cash position for the sake of having cash position. Oh, if the market is this high, then we'll have this % of cash, or on some PE levels or something like that. It's a residual position if there are no opportunities there, and we're not in a hurry to deploy things if there are if sometimes they are frothy.
Okay. The other question would be the leeway that should typically be available to a fund manager to deviate from either the framework set by the fund house or the performance of the peer set. Typically, I mean, because people tend to sort fund houses by the returns that they've given in a year, the comparison would eventually end up happening with the better performing or the best performing funds. How much leeway should a fund manager have?
Yeah, so let me just start with the 4 or 5 things that are important for us when we invest in a stock, or the framework, or the framework that we use. One is that we want to partner with good promoters or minority-friendly promoters. We're partnering them for a longer time, and they need to have that track record for that. So that's the key thing is honest management. Secondly, we want to partner with businesses and not just merely purchasing stock, just a stock that'll go up or down, so we're not trading, we're investing it for a long time. And for that, we need to see if the future performance or the future business prospects are good, the return ratios have been good. So those are the things that are important to us. Secondly, thirdly, our preference is for cash rich and low debt businesses. We've seen in downturns, the cash rich companies can really make acquisitions and really ride the storm and actually grow. So we like cash-rich companies. Fourthly, some competitive advantage or a moat is important, because that will give it pricing power. If a company doesn't have pricing power, I don't think there's much money to be made in those stocks. So we prefer companies which have good pricing power, and that only happens if the competition is less in that space. And lastly, they have to be available at a good valuation, a good decent valuation that we feel is right. So on your question, the leeway part of it, so let me just give a bit of a cricketing analogy for that. So a captain or a coach doesn't tell Virat Kohli how to bat. They tell him to go out there, express himself, bat with freedom without any added pressure. So that's one thing. So for similarly for us, when we are telling investors to stay invested for 5+ years, and then we are kind of gauging performance of the fund or the fund managers on a short period, that doesn't work right. So I don't want to give them short-term pressures on performance as such. We also, if you're telling investors to be invested for a longer term, the fund managers also should get that much time to perform. I think that gives clarity to everyone. I mean, I think having a shared vision for the fund between the management, the fund managers, senior people, it gives clarity to people. They can do their job in an effective way without any extra pressures or confusion. And that's exactly why the cash position is also helpful. I mean, if we are going to be wanting to be number one in every 3 months, 6 months, 1 year kind of performance, then you will probably take excessive risk, and you'll probably not make logical decisions. So sometimes the logical decisions to just hold some cash if the opportunities are not there, and we are optimizing for the longer term. We're not trying to maximize for the shorter terms, and that's our strategy. And I think being on the same page with the fund managers really helps us, and that's how we do it. It's just having a shared vision, a shared value system, and a shared philosophy of managing funds. And I think that will more or less work for us, over the longer term if we're able to do that.
Well, your long-term investors thus far are certainly very happy with what you've done, Neil. I hope you can keep up the good work for a really long period of time. But thank you so much for taking the time out and being with us and talking to us about this. This is much appreciated, Neil, simply because, as I said, almost every second advisor who comes in has a thing or two to say about PPFAS when it comes to portfolio construction, the PPFAS FlexiCap Fund in particular. So it's great to get your thoughts out here. Thanks for the time.
Thank you, Neeraj. Appreciate it. Thank you.
Not at all. Well, time to slip into a quick break. In fact, wrap it up on this leg of the MF show. But earnings conversations continue. Sanjay Kirloskar, CMD of Kirloskar Brothers, joins us on the other side.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be...
Hello and welcome. One stock that definitely has been in focus this week is Kirloskar Brothers. The company came out with its Q4 results a few days ago. Now we have with us the management, the chairman and managing director, Mr. Sanjay Kirloskar, to discuss more on this. Hello and welcome to the show, Mr. Kirloskar. I'll start off with my first question now. You've given a double-digit growth outlook for your top line in FY25 compared to a 7% growth in FY24. Can you explain to us what are the key products and services which are going to be driving this top-line growth going forward?
Sure. The name of the company is Kirloskar Brothers, so very few people know what we do. But we make pumps from about 0.3 kilowatts to 30 megawatts, and also valves up to 4 meters in diameter. We make turbines, hydro turbines from 0.3 kilowatts to about 10 megawatts. So, we operate in about 8 sectors, marketing sectors, which we call irrigation, power, water, and oil and gas, marine and defense. These are lumpy businesses. By this we mean that the orders don't come in every day. They come in once in a while and usually have long delivery times. This is driven by spend on infrastructure by the government or public sector undertakings. And of course, we know that in both power and refinery space, we have large private sector players. What we call our daily business is made up of made-to-stock retail business pumps, industry, building and construction, and after-sales service sectors. Here we get orders every day, and we supply pumps with ultra-efficient IE4 and IE5 motors. They give huge benefits to our customers. We work through dealers and distributors for these sectors. Our retail business caters to our diverse conditions, which has the widest range of products. You may be interested to know that our small pumps as well as our small and medium pumps business is, we are the only company in India which has a cash and carry business model because we get paid before the product leaves our factories. Our expectation is that looking at the rise in orders received last year and the inquiry funnel, we should achieve double-digit revenue growth. We're seeing good prospects across all our sectors, especially building and construction, industry, as well as retail. We are seeing growth in infrastructure development and energy sectors, and associated services, which are the main contributors to top-line growth. In fact, we are seeing increased demand for all our product sectors.
So a positive scenario for all the product segments that we are looking at. You've given a clear picture on how the different segments work over here, but I also want to understand the overall domestic and the international growth. How is it looking over there? Can you share your outlook based on these two markets?
Yeah, in our domestic market, our products are an integral part of infrastructure development. And our customers' base is very wide, as the names of our sectors suggest. We see that the demand is growing up, both in government as well as public sector spending for an infrastructure like irrigation, water supply, and power. Oil and gas, defense, as well as private sector capex for building and construction, for industry, pharma, chemical industries, cement, steel, etc. We expect double-digit growth in most of the domestic market segments. So we are seeing growth both domestically as well as internationally. We sell to about 130 countries around the world, from India as well as from our international subsidiaries. As you may be aware, we bought Britain's oldest pump company way back in 2004, and have made it now the largest pump company in the UK. Through this, we set up a factory in the US. We also have packaging and manufacturing facilities in Netherlands, South Africa, and Thailand. Most, if not all, these companies already have an order board which is more than their last year's revenues. So, as far as business is looking forward, the outlook is, quite good. We have something like a 3,000 crore consolidated order backlog. We expect further order inflow from all our markets. Of course, this number does not include our retail business, but keep in mind that certain large orders will have an execution timeline of more than 18 to 24 months. So I believe we will. Yeah, I believe we'll continue at the same growth rate of about 17% in order booking that was achieved in last year. There's large pumps and valve orders for infrastructure projects that we get from large EPC contractors. As we remove bottlenecks from our factories through CapEx, we expect to deliver on our customer expectations. Capital expenditure made last year was for smoothening the supply chain, as well as increasing the capacity of our foundries. We are one of the few global pump companies that have in-house foundries. And we are capable of casting different materials. In fact, we offer over 109 different materials to cater to the different liquids that our pumps need to pump.
Absolutely. So I was just coming to your order book over here, your order book about 3,000 crore. You mentioned that the timeline for this is about 18 to 24 months. I also wanted to understand what is the kind of order inflows that we are looking for next year.
No, like I said, last year we grew at about 17% over the previous year, and I expect that the current year also, we will be growing at the same rate, if not higher.
All right, so the growth momentum remains similar over here. Now, I want to shift our focus on the margin side. So we have seen an increasing focus now on the made-to-stock orders compared to the made-to orders and the engineered-to-order products over here. So can you help us differentiate between the different margin profiles of these three?
Sure. Our made-to-stock business contributes to about 50% of our turnover. And here, we deliver pumps, other than the retail business, we deliver pumps without any kinds of accessories like prime movers, couplings, or base plates. And the material cost of these products, since they're made in-house, is far lower. We also have set up what we call authorized pump original equipment manufacturers. We popularly call them APOEMs. They basically are large distributors who, stock pumps in hundreds or thousands of numbers. And through this, we are able to test and deliver pumps, standard pump sets with prime movers to our customers almost overnight. So as usual, we are setting up industry standards, which will probably be followed by our competitors. Margins are higher for made-to-order and engineered-to-order pumps if supplied without accessories and drivers. However, these margins look lower on packaged products, as you cannot keep the same margins on bought-out, the bought-outs like motors or engines or couplings or other things that are supplied with pumps. Further, margins on made-to-order and engineered-to-order pumps supplied under the public tendering process tend to be lower. Government likes to buy on L1 basis, but depending on specifications and competitors, these margins get affected when we meet such specifications.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome back to NDTV Profit. You're watching Earnings Edge and I'm your host Mihika Barve. Now the first company that we do have in focus today is Gulf Oil Lubricants. Now the stock has been buzzing in trade after posting a strong set of Q4 numbers, and the highlight was the net profit, which is up 40% year on year at 87 crores. Now to put the numbers and the going forward outlook in perspective, we are joined by Manish Gangwal, who is the Chief Financial Officer at Gulf Oil Lubricants. Good afternoon, Mr. Gangwal.
Afternoon.
Yes. First, I would just want to ask you on, your perspective on how the quarter went by. Give us some color.
Yeah. So as you mentioned, it was a fantastic quarter for us in terms of all top line growth and profit growth, EBITDA growth, and we have seen a complete, good demand pickup in the lubricant space. Market is back on track with a lot of demand coming from all sectors, including infrastructure, mining, agri segment has done well. So overall, all-round demand conditions are improving and robust. And of course, margin-wise, it was a very stable quarter with the margins, our EBITDA margins tracking at 13.5%. And overall, that resulted into a PAT growth of 37% for the quarter. And even for the full year, it is a 33% growth. So overall, good quarter, good year also on a whole. Highest ever revenues, EBITDA and profits for us ever for the full year as well.
Yes. Mr. Gangwal, my first question to you would be, what were the total volumes for the quarter and what's the outlook going forward?
So on the core lubricant side, we have delivered 37,000 KL volume. Again, that's the highest number we have done in a quarter. Of course, same to the similar to last quarter. And then we have a category called AdBlue, which is a urea solution product for BS6 vehicles. That has also done well in this quarter again, and that's another 37,000 KL volume. So both put together, we have done nearly 74,000 KL volume in the quarter. And we believe that the core lubricant sector will continue to grow at 2 to 3%, nearly upwards of 3% now, that the demand conditions are improving. And at the same time, we have the trajectory and our internal targets of growing 2 to 3x the market. So we continue our efforts to deliver 2 to 3x industry growth, and we have been always doing for last 10 years. If you see our track record. So we are looking at good volume growth as well as revenue growth and profit consequently.
So in numbers, does that translate into a single digit or a low double digit volume growth year on year for the fiscal 25?
So our objective would always be to reach near to the double digit. Depends on the industry. If the industry grows at, let's say, 4%, we obviously try to do double digit volume growth. If the industry grows at 2 to 3%, then it will be a high single digit. But the revenue growth is definitely double digit is what we are targeting. So there is a value component because we are premiumizing our products, and there is a lot of focus now on each vertical to have more of premium products in their category, especially in the automotive segment. We have launched many new products which are towards the top end as well as towards the value range. So we are launching new products continuously, and in car segment we have launched new SUV products because, as we know, 50% of the sale now of new car is SUVs. So we are going segment by segment and trying to premiumize our product as well. So confident of a double-digit revenue growth.
Got it. Now, EBITDA margins of 13.49%, and this is at the higher end of the guided 12 to 14% range. When does the company expect to, maybe hit or cross the 14% range? Would it be this fiscal? And are you all maintaining the same EBITDA guidance?
You see, our endeavor is always to move to the higher band. That's the endeavor, because as I mentioned, our focus on premium products continues, but we want to continue our volume growth trajectory as well. So depending on the tailwind and the margin stability, because crude is a very volatile commodity and there are geopolitical situations, but we follow the margin management strategy, and definitely the aim is always to move to the higher band. Now it's only a matter of time, and that is very difficult to tell at this stage, but we would definitely like to exit next year in the next band of 14 to 16%.
Yes. Okay. So 14 to 15% in the next financial year. But now, given the company's focus on premium products, I want to understand how much currently do the premium products contribute to total revenues, and does the company have a set target going forward?
So basically, in each segment, we have got premium products, especially in the automotive segment. We don't have a particular target as such, but the internal focus and the entire guidance to the sales team across different verticals is to focus more on the premium products, and that's giving us good results. A lot of our programs are linked to pushing premium products to the next level.
Okay, but could you say maybe like around 15 to 20% of any segment, the 15 to 20% should come from premium products for any segment that you all do have premium products in?
So we want to actually grow. We have a growth target that our premium products should grow at least twice of what our overall growth is. Okay. So that is what we are aiming at, without having a product mix percentage. So in each category, we have our different targets of growing the premium products.
Okay, and what is the current B2B versus B2C sub-segment, wise breakup in terms of your revenue mix?
So every quarter, close to 55% is B2C for us, and 45% is B2B, and this quarter was also similar, 55%, 45%.
And is that a mix that the company is happy with, or do you all expect a shift?
No, so our focus continues to grow both the segments equally, and obviously there is in B2C there is a OEM franchisee workshop business also, so that is doing well for us. Except the OEM factory fill business, all the segments have done well for us, and so that is why our aim is to grow both the segments, B2B and B2C both. B2B we have a lower market share, so obviously our efforts are to grow that more.
Okay. My next question is during the passenger car segment. The company stated that they do see that as a growth driver, especially in the SUV market, given the new products launched in Q3. What's the current share of, the passenger car segment or this auto segment in terms of revenues, and what's the outlook on this segment looking ahead?
So overall, while we have a good market share across automotive products, in passenger car we have a slightly lower market share. And that is where our aim has been to launch new products to complete the portfolio, and then work with the channel partners to grow that segment more, work with OEMs. And we have recently entered into OEM tie-up with Kia, which is is a growing passenger car OEM. So like that, our focus is to continue to increase our market share in passenger car. We have slightly around only 4% market share as of now, while our overall market share is close to 6-7%.
Got it. And in terms of the motorcycle and diesel engine segments, what's the current market share that the company is enjoying?
So overall, in both the categories, we have close to 8-9% market share, and that is quite healthy. And we continue to focus on these two categories. In fact, both these categories have done well, and partially also they are linked to the rural economy, and we have seen that rural is coming back. In the last quarter, we have seen that the rural, for us also, the growth from rural has been very good, and motorcycle, is a very has a large demand in rural. So overall, our focus on motorcycle oil and commercial vehicle also is equally high, and we have done well in both the categories.
To ask you in terms of new product launches, does the company have any in the pipeline for fiscal 2025?
So as I mentioned, we have just launched SUV products, specifically focused for SUVs. Plus in the tractor segment, we have launched new products. We are the pioneer in long run in commercial vehicle as well as tractor oil. So first 1,000 our product in tractor segment segment was launched by Gulf. So our focus is to grow these categories, and in motorcycle range and all, we have launched some of the value range products as well, as the market demand is there for them.
Got it. My next question is on the outlook of exports. Now, historical contributions suggest around a 5% to revenues. What's the demand outlook in terms of exports? Are there any segments that the company is seeing higher growth in terms of demand from the export segment?
So we have grown our export to now 25 countries plus, and there has been a double-digit growth in exports in the last quarter. Overall, we export our Gulf branded products to the neighboring countries, but at the same time, we are now tying up with Indian OEMs whose automobile are globally being exported. And on the back of these OEM tie-ups, we are increasing our export portfolio. And for some of the two-wheeler OEMs, we are sending their co-branded products or their genuine oil products to more than 20 countries. So the export remains our focus in terms of tying up with Indian OEMs and going abroad with them.
Got it. And is there a certain target that the company expects in terms of percentage of revenue mix that they want to grow the exports, or they see exports growing at in the next 2 to 3 years?
No, so India is not a very, India is a crude, import country largely. So, and Gulf as a brand has a global presence across various countries. We have 20, our parent has 20 blending plants. So we focus more on our OEM products, and we want to grow the segment in line with our OEM growth plans.
Also, sir, you mentioned OEM tie-ups, which made me remember a point. Now, in the Q4 highlights, there were weaker growth in the OEM factory fill, which led to lower offtake. Could you maybe give us more perspective on what the challenges were?
So OEM factory fill is the first fill when the vehicle leaves the factory. That's where they use the lubricant, and it is linked to the OEM production plans. If the OEM cuts their production plan, then our factory fill, offtake goes down. And that's what happened in Q4 and continuing from Q3 actually. Some of the OEMs which are mainly commercial vehicle OEMs for us, and they have cut down on their production to some extent in the last 2 quarters, and hence our factory fill volumes were in the negative territory. If that was not there, we could have grown our volumes even higher. So overall, it is linked to the OEM production plan.
And has there been certain recovery in these? In the demand and in the production of these OEMs? Like, would we expect better offtake in the next 2 quarters?
So at least the April month has been healthy, is what we can say. So definitely we hope that once the elections are over, the demand picks up and the production also picks up for them, and then for us the demand comes back.
Got it. And Mr. Gangwar, my next question is on the capex incurred in FY24. What was the total capex incurred, and what's the guidance for FY25, and how would this be allocated?
So usually we have a 20 to 25 crore of capex in our normal lubricant business, and we did nearly around that 25-26 crore this year also, last year. And our aim is to continue to be in that range, because we have enough blending capacity. What we have to keep adding is some filling lines and some storage capacity, etc. So 20-25 crore is our capex guidance for the current year as well.
Got it. And my last question would be, where does current capacity stand, and does the company plan to increase this capacity in FY25?
So as I mentioned, we have sufficient blending capacity, and we keep augmenting our filling capacity, and overall we generate a lot of cash. So in the last year as well, we have seen our cash flows. We have generated close to 348 crore of cash from operations. So overall, we have sufficient cash. If we need to augment some more capacity, we will be happy to do that.
Yes. Thank you so much, Mr. Gangwar, for joining us, and we wish you all the best for the future.
Thank you.
Yes. Well, viewers, that was Gulf Oil Lubricants Management for you, giving us a perspective on what lies ahead for the company in terms of growth as well as, volume offtake. But on that note, it's time to slip into a short break. But do stay tuned. We have lots more lined up on the other side.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left. I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be...
Hello and welcome to NDTV Profit. One stock that is under pressure today is VA Tech Wabag. The company came out with its Q4 results yesterday. The revenue about 0.8% up, while the EBITDA was about 6.5% up. Margins though have improved to 12.4% compared to 11.7% in this quarter. But to discuss more, we have the Chief Managing Director, Mr. Rajiv Mittal, joining us. Hello and welcome to the show, Mr. Mittal.
Good morning, Anushi, and good morning to your viewers.
All right, my first question to you is, on one side we have seen an increase in our profit margins, but on the other side the revenue this quarter has remained flat, while if we look back to the previous few fiscals, the revenue has actually gone down. So with our projection of about 15 to 20% growth in the coming period, what are the key growth levers that we are looking at to improve the scope going forward?
Thank you. And first, I think you must know that as a company, there are two things which we should look at when we look at our revenue. One is the strategy which company has adopted 3 years back, saying that construction portion from our business we are steadily going to reduce, which is what we are doing every year, and already 30% of our business is gone purely EP, because we are a pure play engineering company and technology company, and we only want to go for technology projects, not so much of construction projects. And construction used to be like pass through, and it will only dip the margins. So we, last 3 years, we are taking more projects which does not have a construction portion or has a very small construction portion. That's number one reason. Number two reason is the divestment we have done last year of 2 of our subsidiaries in Europe, because they were not growing and it was just flat. It's basically Switzerland and Czech Republic, and which revenues were there last year. And this year, these revenue numbers are not there. This is the reason you're seeing a flat top line. Actually, it's not flat. We have grown, but you don't see that in the numbers reported.
All right, so shift in the technology side we are looking at compared to construction. But now my second question is on the order book. The order book stands at about 11,400 crore. Want to understand from you, how much are we planning to execute it this year? And can you also give us a breakup between the EPC and OM projects for the execution in the orders that we look?
Good. See, 11,500 crores, if you go by our past history, we would typically execute about 30% to 35%. So that is what we will execute. about more than 50%, I think, is our O&M here, and 50% is our EPC projects. The order book which we have will give us easy visibility of next 3 years number. So it also gives us a predictability and visibility of the numbers for the next 3 years.
So I'll stick to this. I want to also understand, now that we have a strong order book in place, what is the kind of order inflow growth that we are looking at for this fiscal year, considering there might be some election impact that we can see in the first half?
Yeah, very true, and that is exactly the reason. We are an Indian multinational. We are very active in Middle East geographies, Africa, Southeast Asia, and a part of CIS countries, which is basically the growing region for us. So that is the reason when the election came in and the code of conduct came in last 2 quarters, this quarter and last quarter, we have shifted more our resources into the other geographies. And that's how we have seen a great transaction happening, and this is a traction happening in the Middle East and also in Africa. And we have submitted about $1 billion bids in these 2 regions alone. So we are seeing a very strong order pipeline as far as international is concerned. Now, as the election is almost out of the way, we see from second quarter, the decision making will start, and the next 3 quarters will also see a good growth in the India region also.
Absolutely. So you have mentioned that the Middle East is quite a strong outlook for you. But I also want to shift focus to the Russian markets. You had some, in the previous few conference call, you had mentioned strong growth prospects here in the terms of desalination projects. I want to understand what is the progress that is happening over there.
See, you know, we had a project almost 2.5, 3 years back, one of our largest projects in oil and gas, where we are doing a very unique technology project. Again, it's an EP project and almost close to about $200 million project. This project is substantially complete. The engineering is done, procurement is done. We are now delivering the equipments which by H1, most of these deliveries would be completed. And then it's in the client scope to do the construction, installation. We will only give supervision. So we expect in the next 4 to 5 quarters, this plant will also be erected and commissioning would start. But our substantial portion will be finished by H1, which by September end, we should finish this project.
So by H1 it is, but now I want to move on to the balance sheet side a bit. So we have seen the receivables have remained on the higher side. When can we expect this to go down, and can you just share when can we expect this to go down and normalize going forward?
See, if you're saying balance sheet, you should see the balance sheet together with current and non-current receivables. If you see current and non-current receivables put together, working capital has not gone up. Yes, into the current receivable, working capital has gone up, and simple reason is we have received some large projects in the last fiscal year, which was 400 MLD desal plant in Chennai. We had a Bangladesh World Bank funded project. The Chennai project is funded by JICA. And then we had a Mumbai Sidco project. These all projects came in during the year, and most of the engineering works get done. And towards the last quarter, some of the supplies and construction has happened. Because these are multilaterally funded projects, this has to go, like in case of JICA, it has to go to Japan, LC. It takes time, and normally about 3 to 4 months cycle from us doing the work, getting approval, sending it to Japan, sending it back to India, and getting the cash. It takes about 3 to 4 months. So our expectation is you will see already in next quarter, this receivables will start coming down, and by end of this financial year, we will be back to our normal days of 80, 90 days of working capital.
Sure, Mr. Mittal. Now, also, I know that one of your key strategies is to remain asset lights. I wanted to talk about the HAM assets that you have, the monetization side of it. What is the progress on that front? If I'm not wrong, you had mentioned that in one of the HAM assets was to be monetized in this in these 3-4 months itself.
Very correct, Arushi. We are asset light. Last 27 years in India, we have remained asset light, and you will be happy to know we are celebrating our centenary year. This is 100 years of Waba. Is this year we are celebrating that. And throughout this 100 years, we have remained asset light. We have never owned assets. Now, some of these Namami Gange projects where HAM has come in as a leader in water sector, we wanted to take part. But good news is, out of the 4 projects we had, 3 are already monetized. And the 4th one should get done in next 1 or 2 quarters. So we are right to our strategy, and happy to say our balance sheet will be one of the lightest in this sector, and it will remain so for future also.
Well, that was the final question. But before I let you go, just in one line, can you outline what is the strategy going forward?
See, strategy, and especially being a centenary year, we want to give it back. Water business is so satisfying because we are serving the people. We quench the thirst of the people, and also we quench the economic thirst. So we are both doing the human part, where we are supplying them water and take care of the environment. On the other side, water is also fueling our economy by providing reliable, affordable water to the industry. We are ensuring a good growth of GDP of the country.
Well, thank you so much. We look forward to future interactions with you and the results coming forward. Thank you once again for joining.
Bye.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, 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 And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Good afternoon and welcome to India Market Close here on NDTV Profit. Quick check on where the markets currently are at. Let's look at the benchmark itself, 1/5% higher on the Nifty 50, and let's pull up the heat map, see what's buzzing. But the texture, the flavor is largely on the defensives. Look at pharma, look at FMCG, doing fairly well today. You have a Reliance Industries silently, which has gone up 2% odd, which is driving likely the index itself higher. We'll come to that. But even a Coal India is doing fairly well, 2% higher. What's not doing well? You're seeing BPCL, SBI, Hindalco, some cool off after yesterday's strong rally in metals. And you're seeing a mixed trade coming in here. So you're seeing some PSUs, a little bit of private sector bank, which you can see ICICI and Axis also out there. Largely, that's what's at play. Let's quickly switch over to the contributors and see what's basically leading the index higher. There you go, Reliance Industries, 43 points out of the 51 net, which the index has gained in the day today. So clearly, Reliance is the one which is pulling its weight. But outside of that, Infi and HUL also doing fairly well. Mind you, FMCG is probably the top gainer in terms of sectoral indices. We'll come to that as well. But even ITC pulling its weight, 1% plus higher. And of course, we have ITC's numbers expected tomorrow. So that's the other big one. What's not doing so well? Private sector as well as PSU banks. That's where the drag is. Financials is dragging the index down. Just between these four, you can see nearly 40 points. More than half of the negative contributory is coming just from these four. So that's the pocket which is clearly not doing well. Let's pull up the sectoral heat map and see, try and break the sectors down. The top gainer definitely being FMCG, 1.4% odd, but Realty and IT also doing fairly decently in trade. As expected, Bank, Finance and PSU Bank are three of the top four laggards. Metals, I'm not so sure we can complain because we saw a 4% rally in the Nifty Metal yesterday. So a bit of a cool off largely would be warranted, at least that's the sense. But that's broadly the texture of the market. Let's pull up the mid cap and small cap end and see what's happening there. The mid cap definitely staying afloat, largely in line with the benchmark. The small cap, if you can see, is on the negative, slightly lower, around a 1/10% or thereabouts. The advanced decline for a large part of the day has been even Steven, and that's what it still continues to be at. So we bit in favor of the declines, but nonetheless even Steven, that's the texture. Last off, let me pull up certain stocks which are in focus, both on the back of numbers as well as on the back of news. And let me pull up the news worthy ones first, because numbers, there is a numbers galore which we can keep talking about, but specifically on the back of news, First off, a clutch of infra stocks. PNC Infra winning an order of 5,000 crore, HG Infra 4,100 odd crore, GR Infra 2 orders worth 4,100 odd crore. All three of them are doing very, very well in trade. PNC up 15.5%+, almost 15.5 odd percent. The other one also on the back of an infra win, a project win, Wellspun Enterprises today has won an order as well, so 6% that one. Aptus Value, certain blocks happening, nearly 4% higher on that one as well. Switching over to earnings as well as to brokerage notes, BHEL, that's the one in focus, 4%, almost 5% now lower. But GSFC otherwise on the back of a poor set, 8% down. Dollar Industries also down nearly 8%. You also have the likes of a GET&D, which has done very well in terms of its numbers, almost 5% higher. JK Tyre up 5%, we spoke with management. Metropolis 2, we spoke with management, 3% plus higher, and we'll probably break some of these down with Neeraj as well as our guests through the show. Torrent Power also doing fairly well. Paytm, my apologies, Torrent Power down nearly 3%, but Paytm doing fairly well, 4% higher in trade today. The numbers came in as slightly okay, nothing outstanding. It was expected to be a tepid quarter, but I think the one-off of 227 odd crore in terms of a write-off and the impact on P&L, if we net that off, seems to be a wee bit positive, and that's probably kept the stock up and away, 4% higher. You also have DB Corp, which is up 4.5 odd percent. And I want to also mark out some defense counters. We've spoken about PSU enough, but defense also we've spoken about enough, and another good day for defense stocks, 3% higher on HAL and 2.5 odd percent higher on BEL. Neeraj.
Well, it's a day that seems to be marked by some bit of profit booking to the high-flying names, be it metals, be it ABB and the likes, and some others. Let's get in Jay Bala, founder and chief market technician of cashchaos.com, to speak about the technicals. In a bit, we'll get in Vinit Bulinchkar, HR of Ventura Securities, to speak about the fundamentals as well. Thanks so much for joining in, Jay. What's your sense about the texture of the market? Constructive until June 4th and beyond? Or are you cautious right now?
Yeah, good to be here, Neeraj. Constructive on the market as long as the market can hold about 21,770. But it's long due for the markets for a significant correction. But there's no point preempting the markets. We are strict followers of price action. So mildly bullish, continue to be. The market is very tired. It's pretty obvious. Likewise, banking index, the Nifty Bank Index, as long as it can stay above 46,500, they can stay constructive there. But within the banking space, the private sector banks are looking more vulnerable than the public sector banks. So these are the broad parameters. Probably 50,000 mark print is probably missing on the Nifty Banking Index. So probably that's what the market's attempts are on. The resistance for Nifty is about 22,800, and if 22,800 gets taken, probably the next peak will be about 23,250.
Okay, and within this construct, then Jay, what are the stocks that you're recommending? Let's get out of the way first.
Yeah, I'm going on the cash stocks. No, I'm not going on the derivative space for the moment, because that's more conservative. I like two stocks from this space. One is Federal Mogul Goetz. It's developing a very significant pattern on the medium to long term. I'm anticipating the stock to break out above 422. If it does that, it has potential to scale 700. And the stop loss for that should be about 352. This is a inverse head and shoulders pattern that's building on the monthly time frame. So it's got 700 might be a conservative target if 422 gets taken out, and I'm anticipating that to get taken out. And the next one is CAE Automotive. That's also, after a flat consolidation, today has broken out above 505. So that's an important breakout for it. I think it's heading for 625 in the near term. So a stop loss at about 465, 468 will make sense for this trade.
Okay. An Autoang which has done well, but interesting choices and staying away from derivative positions currently. Let's get in Vinit Bulinchkar, as well on this conversation. Vineet, great having you. It's been a while. Thanks for taking the time out. Good seeing you. Vineet, are you constructive until June 4th, or are you of the opinion, or are you kind of staying on the sidelines? You don't mind buying maybe 4 or 5% higher, but you'll do it once the verdict is out, or are you all guns in already?
So the prudent strategy would be to buy post 4th June. But, we've seen substantial, uh, market commentary stating that, whatever we've been doing our channel checks and talking to people in the political lobby, it seems foregone that the incumbent government will continue for the next 5 years. And keeping that in mind, I think, taking small positions which are hedged would be a better way to, participate in the anticipation of a good result, favorable outcome for the Modi government. And that would be the way to play it out. Beyond 4th June, if the present incumbent were to come in, then we think that, it will be a fantastic next few years, because, what we are seeing now is that, the infrastructure emphasis which is there is going to kind of constrict the time in decision making, which will lead to faster turnaround of projects. And that will lead to accelerating the GDP, and eventually, the multiplier effect will play in.
Okay, Vineet, Harsh also joining in. What are those pockets you're looking at? You spoke about seeing some interesting pockets pre-4th of June.
So I think FMCG is a very strong play, very quite defensive. So, there you don't lose out. And the kind of results that companies have declared is fantastic. If you look at the banking portion, which is, not focused, which is not exposed to the infrastructure side, like Janasangh Bank or, the smaller Aptus Housing and the other players, I think they will be doing relatively well. So, if you want to go with a strategy which is not impacted by the results to a certain extent and has got lower cuts on the downside, then going with the consumption theme, which is just, started emerging and buying has started happening in that, is the safer way to play it out. See, right now you are seeing the PSU rally very fast. So, a lot of the expectation has already been built in. But there are some pockets like real estate, consumption, SFB banking, which are doing really well, and they will continue to do well. And they, in my opinion, they are below the radar stocks where you will get significantly higher percentage returns.
Okay, all right, thank you for that, Vineet. I want to quickly switch focus. GSFC is the one which has seen a solid tumble, 8% down in trade today. Weak set of numbers overall, seeing nearly 90% lower when it comes to your EBITDA number, and that stock taking a bit of a tumble. Now, of course, the profits have also fallen, but we spoke with the management on what's impacted margins in Q4 and outlook going ahead into FY25. Listen in.
Along with the lower subsidy level versus higher input cost, we also had the Red Sea crisis that delayed the shipment of inputs in the Q4. So the production and sales, everything were affected. But we are hopeful to get back the ground in this current financial year, and 20% growth, volume growth we expect in the fertilizer volume.
Okay, so of course GSFC in focus. Jay, let me come to you with regard to this one on charts. What's the sense like? 8% lower today. What should one do?
Yeah, see, this was already indicative on the charts. It's been an underperformer for 2024, and we see markets as to how many steps a particular stock takes for a traversal. So, this stock has come down in 5 steps, and quite obviously it's got rejected from 250, which is a significant Fibonacci retracement level. It's got one more lower low due below the Jan 2024 low, but post that, the medium term starts to look better. So it needs to go below the lowest clock for 2024. After that, the corrective structure will be complete, and then we can look for medium-term bullishness to resume.
Okay. Vineet, it seems to be a common script for fertilizer companies this quarter. I mean, the subsidy amount going away, the upsides on the pricing being capped, but the raw material prices increasing, that margins have gotten hit across the board. Is it an avoid the pack for the time being, or are there exceptions to that rule?
So I believe that the worst of the quarter in terms of input cost increases due to freight costs are done with. And I am actually contemplating buying into these stocks at lower levels because if the Rafah crisis were to resolve, then you will suddenly see a sharp fall in the Red Sea freight rates. And we've already seen part of the one leg of the geopolitical struggle where the Iranian president was assassinated, in that accident. So I believe that there would be some kind of resolution happening, but I won't say that everything will play out immediately. It's a wait and watch, but definitely the valuations look lucrative from a long-term point of view, and value buying is emerging out.
And that's interesting. And I think Vineet makes a telling point because GSFC also mentioned that the margins will inch up. It will not go substantially higher, but it will inch up. And he mentioned the Red Sea crisis and how that had hit the JFM quarter, which is a Jan, Feb, March quarter, very, very badly. It'll be interesting to see how this shapes up. What we'll do is we'll take a quick break. Like we discussed, there are a few high flyers which are taking a bit of a step back to their metals, for example. Is it just a pause, or have they done enough already? Or FMCG is the other one, right, which has done really well today, or relatively well today, because there has been some mention about how the rural pain might be bottoming out. Maybe we'll try and get somebody who tracks FMCG very closely on the side of the break as well. Stay tuned.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures.
Welcome back to India Market Close here on NDTV Profit. Quick check on the Nifty FMCG. That's where we left you before the break. 1.4% higher on the FMCG. Let's pull up the constituents, see what some of those are doing, and far and few in terms of losers, at least today. United Breweries, Colgate, Radico, Khaitan, but outside of that, look at what Procter & Gamble and HUL are doing, 2.5% on HUL, 3+% on P&G. Tata Consumer also almost 2.5% higher. So clearly seeing good traction. And for that, to break this down a little bit further, what trend is playing out, what's really keeping the markets really interested in FMCG, I have with us Kaustubh Pavaskar, who's the Deputy VP Research at Sharekhan by BNP Paribas. Welcome, Kaustubh. Good having you here. Quick check. Talk to us about what's playing out, especially of late with regard to FMCG. Of course, rural being the key. But do you expect rural to start to play out in FY25? And if so, how quickly?
Yeah, hi, good afternoon. So if we go through commentary of most of the FMCG company for post the Q4 results, we have most of them have indicated that rural did much better than urban in this quarter. So they have already started seeing green shoots in the rural market. So if we consider last 2 years, rural has been lull. So the base will first come into play, and post if monsoons are good and post-election budget, if government provides some kind of incentives to the rural market, I think that should drive the overall consumption in the rural market somewhere from maybe from Q2 of FY 2025. So we should start seeing good pickup in volumes in rural market or demand from Q2 of FY 2025. We have already started seeing rural doing much better than urban for some of the companies, and I think that should continue. The recovery will be slow, but if monsoons are good, there are some kind of incentives in election. I think the recovery should be much faster, maybe from Q2 of FY 2025 or second half of FY 2025.
Okay, I take your point, Kaustubh. And in this market, pockets of value, what do you believe is the best play at this point, both in terms of value and in terms of playing this rural theme?
Yeah, so we have seen there have been underperformers in this space. For example, HUL, Dabur, both these stocks didn't do well for last 1 year, and obvious reason is that the volumes have been very low for these companies because both these companies have 50%, almost 50% of their revenues coming from the rural market. So if we specifically want to play on the rural theme, I think if the recovery is there, if we start seeing recovery in the rural market in terms of volume, and there is a pickup in the volume growth of both these companies, I think these two stocks should do exceptionally well. I think they would be one of the key beneficiaries of the recovery in the rural market. Barring that, we have seen companies for last 1 year doing a lot of organic and inorganic initiatives in terms of acquiring companies, bridging their portfolio gaps, adding new products into their portfolio, playing on the premiumization strategy, expanding their distribution reach. So under this theme, we believe that Tata Consumer Products, Godrej Consumer Products, these are two of the stocks which will do definitely well in the coming years. And these are, both these are our preferred pick in the FMCG space, along with the rural theme, which we expect to start playing in, maybe from Q1 or Q2 of FY 2025.
Okay, thank you so much, Kaustubh, for all of those views. It's good having you and good having that perspective. But Vineet, let me come to you. What's your sense when it comes to rural recovery? I'm sure you have a view as well, both with regard to rural recovery as well as how to play it and valuations.
So I think, two plays which are very interesting in Marico and Godrej Consumer. So they're not only hedged with the Indian markets, but they have significant geographical diversification, which makes it very good place. And we've seen both of them do extremely well in most of their geographies. About 80% of the geographies are firing. India was a laggard for some time, and that is now, almost 40-50% of their business. which is now coming back in a very strong way. So rural growth back means we will see 2 to 3 years of better growth, because next year or this year also we are seeing a favorable monsoon expectation, and I suspect that this sector being completely out of favor is going to surprise the market with some very stellar returns.
Okay, and when do you expect rural to come back, Vineet?
It's already doing it as we speak.
Okay.
So if you've seen the results of Godrej Consumer and Marico, they are very exciting.
Got it. And what should one expect from something like an ITC? It's been largely flat over the last 12 months or thereabouts. Results expected tomorrow. What should one expect?
So I think they'll be in line with the rest of the pack, and this might be a good time to accumulate ITC.
Okay.
Okay. Watch out for, therefore, some of these FMCG names in that regard. And whether or not the true blue uptick in rural in a meaningful way comes about, I think time will tell. This quarter, like I think both our experts suggested, some of the companies have been able to show that. Jay, have any of the FMCG names stood out for you as either a trade or a positional trade?
Yeah, if you recall, I think 2 weeks back we had a call on HLL for the short term. But as a sector, the FMCG index has potential to scale fresh 52 highs past 60,000 mark. But I don't think it will be led by HLL or ITC clocking fresh all-time highs. It'll be more like a counter-trend bounce, and the laggards like Dabur, Godrej Consumer, and other names which have been underperforming, Britannia and Nestle, they might push the index to higher levels with HLL contributing to the weights. But fresh 52-week highs are possible for the index coming from the smaller players which have been laggards. So I like the Dabur and Marico this for a trade at this current levels. But it's just a trade, not an investment. I think post 60,000, I'm expecting a major top for the FMCG index.
Okay, so all of those, of course, in focus. FMCG, the top sectoral gainer. But I want to switch focus to some infra names, because yesterday we had a slew of announcements coming through on exchanges suggesting good infra wins. We had GR Infra. They were the lowest bidder for the Pune Ring Road project, worth roughly 2,000 crore, and the Wardha Expressway Road project worth 2,400 crore, so nearly 4,000 odd crore worth of wins just yesterday for that one. HG Infra also, two MSRDC projects worth 4,100 crore, PNC Infra 5,000 crore. Now, it's not yet the 4th of June, Vineet, but we are seeing a slew of wins. We also had Welspun Enterprises come out today, lowest bidder for construction of multimodal corridor in Maharashtra, 1,900 crore project, 3 years execution. Vineet, your sense on some of these companies, as well as what one is looking at in terms of valuations, because the sense is that a lot of infra projects will be put out for bidding post the 4th of June if the same government comes back. And therefore, you will have that sector specifically in focus.
Yeah, so we are very positive on infrastructure, and there are many drivers to infra, different roadways, water projects, sewage. So I think all these three stocks that you mentioned have got good levers of growth. They've got their order book to sales is also very high. On a SOTP basis, though we don't track them, very finely, but we believe that these order wins are definitely good for them. In line with that, we like Welspun Enterprises as well as IRB Infra. Welspun Enterprises, because they have got a reputation of closing projects faster than the stipulated time, and secondly, they are sitting on a lot of a couple of oil discoveries, which once they get notified, will see a substantial bump up in the valuation of these stocks. So if I were to play a stock which I think is having a lot of and this optionality in that, Welspun Enterprise is definitely the go-to stock. And the other one, as I mentioned, is IRB, which is one of our top picks. Recently there was a deal between the promoter sales happening, where the government of Singapore sold out to Ferrero. And, the internal valuation was about 120, 130 rupees. That was not taking into account some of the arbitration matters that were there for the Bombay-Ahmedabad way. So I think IRB Infra is a great stock. And since we have worked in detail on that, we have a lot of conviction around that. And we think the stock can close to double from these levels.
Okay, close to double from these levels. Anything interesting you're picking up on charts? If you can talk to us.
Yeah.
Jay, sorry. Yeah.
HG Infra is the one go-to one for me. Even given the fact that it's doubled in the last 1 month, it's got massive upside potential from here on too. The momentum is extremely strong. So for people who are already long, that's the place to be. But for fresh longs on the space, you have to wait for a pullback here. It's, as I said, last 1.5 months, 1 month, it's doubled from literally from 900 to 1600. So it needs a little bit of pullback, but post the pullback, it's got further higher highs to come through. But this is the most interesting stock for me in this space.
A lot of stocks flying around, right? I mean, just looking at names which have gained a bit. So there is stocks which are hitting fresh highs or 52-week highs include GE Power, which is up in the session today, hit a 52-week high. There is also stocks which are gaining in the last few minutes of trade and therefore deserve a mention. So one is of course Keynote Financial, which is fine, but there is strength that we're seeing in stocks like Cyber Media and a few others. But anyways, a lot of stocks flying around, and we'll talk about some of these on the other side of the very quick break. We need to slip into one. As we hit the break, hear out Anuj Kathuria, who is president of JK Tower Company, talking about factors aiding the Q4 and the trends in demand.
Three things which I would call out. One is that our efforts on premiumization have continued to give us the results. Premiumization efforts were not only in the passenger car segment, that was definitely one of the major areas, but even on the truck and bus radial tires, the premium products, the XM series, the XF series, the XT series have done extremely well. And that has definitely contributed to the overall EBITDA growth. Because of the increase in the raw material prices, there would be, it would not be as, the situation will be different and there will be challenges. We are sure that with our efforts on the market facing as well as the back end, we should be able to a large extent, negate the impact of the raw material.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. All right, back with India Market Close right here on NDTV Profit. PNC is built on the gains, 13.3%. And then there are some insurance names like GIC, which is up about 9.7%. There is strength in New India Assurance. Both of them, I think, coming out of the numbers today. We should pull up those stocks. So I don't know if the market is reading that maybe these stocks could do better in the quarter, but there is some clear uptick and strength out there. Not in PNC, that's not the result, boy. PNC is strong otherwise, but GIC and New India are both of them which have done certainly very well for themselves in the session today. There's also strength, by the way, I must say, in Paytm, Harsh.
Yes.
5% higher.
Yes.
And this is despite a quarter which, on the optically, a lot of viewers would be thinking that why is the stock doing so well when the numbers have looked so shabby on the PAT front?
Yeah, so Neeraj, there was a loss of roughly 550 odd crore. Well, stock ballpark here, 550 odd crore loss.
Yeah.
The expectation was that loss would be roughly 450 crore. So ideally, the street ought to be a bit disappointed, if at all, with the numbers. But there was a one-off where they've written off Paytm Payment Bank as an investment in their books. So out of the 210 odd crores, they've pretty much written off the entire investment in Paytm Payment Bank. Mind you, Paytm owns roughly 49% in Paytm Payment Bank. So it's actually an associate company of Paytm, but the entire investment has basically been written off, and that's probably impacted the profit after tax number, not probably, has impacted the profit after tax number, and therefore if adjusted for that one-off, the losses aren't as bad as the street was expecting. That is one. And the other possible rationale that I can pull out of the bag is, and more of a question than a rationale, has it really bottomed? That's a question we can probably pose to Vineet.
Yes.
So Vineet, why don't you help us with that?
Let's give him the tough questions. So whatever we can't figure out at all, Vineet Bolinchkar, we throw it to you.
I would not want to wager on this.
Sorry, Vineet, you don't have an option. You are the guest, so...
so I think that the model is broken. The business model is broken, and very difficult to plow back, the way they have done. So until they do not convince me with a better business plan, it just stays out of my radar.
Okay, that's a fair call too. By the way, just before we get to Agam, max numbers on your screen as well. EBITDA at 382 versus 340, that's about a 12% uptick. I don't quite know what the expectations were on this one, but it seems that they've come in largely in line. In fact, that profitability is extremely flattish. But remember, some of these companies who don't necessarily focus, again, only on the bottom line numbers. I think we'll wait for some of the other numbers to come. Okay, we've got the bigger one out here on the screen, Sun Pharma. Flashes on your screen. Let's stick with this for a moment. Agam, just hang on. We'll get to you in a moment from now. But Sun Pharma numbers on your screen. and revenues at 11,983 crores versus the estimates of 12,233 crores. So that's one. Varsha will be miking up any moment to talk about these numbers as well. Net profit at 2,655 versus the estimate of 2,441. So the net profit number looks okay. The revenue numbers are marginally below. I would suspect that margin performance could have been okay for the business to clock, unless there are one-offs, of course, but margin performance may have been okay or better than expected for the bottom line number to look in so strong relative to the, you would call it a flattish top line performance on that base really. A 200 crore miss on 12,000 crores of revenues isn't quite exactly a very large miss, but yeah, let's wait and watch. You know, this morning, in fact, let's first get a view on the numbers as well. Vineet, and then we'll get to Jay as well, because the stock is a bit all over the place as it would be when earnings get released. Vineet, we just have these two numbers as of now. We don't quite have the margins as yet, trying to figure it out. But any initial thoughts on these numbers?
I think trifle disappointment out there. Would have expected them to do better. And I expect that the stock will sell off given the headlines.
Yeah, well, margin numbers look possibly, like I said, margin number possibly, Harsh, will look much better than what the polls would have been. But as Vineet said, maybe disappointing on the top line front. I don't know if the stock does come off materially on this one or no. And are there some supports there? And Jayabala, could you tell us if Sun Pharma, independent of earnings, if the chart suggests anything?
I'm bullish on it. I think the move, the top it saw at about 1640, it looks like an incomplete move. The only doubt is the pullback from 1640 has been a bit shallow, but this happens in a very bullish stock. Most of the times, the price structure pulls back much lower than anticipated. That's the only uncomfortable point for me. But if the stock were to take out 1560 on a closing basis, I think fresh all-time highs are coming for Sun Pharma.
Okay, so Jay believes on the chart, Sun Pharma looks okay. Vineet rightly points out that on the fundamental side, the stocks have just come off a little bit. And Vineet, come in on a stock like, or a business like Sun Pharma or some of the others, right? We know rev limit has been a key reason why these businesses have done really well. And we know that rev limit at some point of time in 2026, if I'm not wrong, comes to an end. Market tends to discount stories 6 months, 9 months in advance. Why is it that these businesses should trade at 35, 40 times, wherein Teva, the original guy who put out rev limit, trades at 7, 8 times?
So that's what I'm saying. The rev limit is over discounted, and the stock should sell off because of that. Very simply.
Okay, so that's the longer term call as well that Vineet is taking, that maybe, so in which case, Vineet, it might not be just a Sun Pharma view. It might be a view extended to maybe a Reddy's as well, maybe to some others as well.
Okay. Those who are banking on rev limit.
Those who are banking on rev limit. Okay. The margins are at 25.8% versus our estimates of, or the Bloomberg estimates of 26.4. So actually I stand corrected on the margins as well. They've come in slightly lower than what the Bloomberg estimates were. But long story short, it seems to be a quarter which is not either creating dramatic upsides or any material downsides for Sun Pharma, at least on the face of it, as per the current numbers. The question only is, can some of the details, is the devil in the detail for Sun Pharma? Let's wait and watch. For now, just bobbing between the red and the green, ever so marginally. Let's see how this one behaves. So, well, that's the view on Sun Pharma. Anything on the healthcare space, by and large, Vineet Bolinshkar, that you may have coverage on where you like? You don't like some of these generic companies which are banking on rev limit. What about some of the others?
We like Eris Life Sciences.
Why so?
I think they've got a very differentiated model. And they bought portfolios, they've built value, and they've done very large deals. And we think that this stock can double over the next 3 years.
Okay. Well, that's Eris Life Science. Harsh, I don't know if you picked up something else.
Yeah, there are some one-offs, Neeraj, around 101 crore in terms of exceptional items. It's been netted off actually. There are quite a few. And I believe it's a recurring theme because there are intangibles which Sun Pharma tends to write off. Also certain forex gains, losses, which appear as part of exceptional items, which is probably impacting the bottom line number. But outside of that, it looks like an okay set, and the stock also reacting in tandem with that, Neeraj.
Yeah, 0.5%. Let's wait and watch how this one were to shape up. This is a big newsmaker or the big earnings of the afternoon, but clearly, suffice to say, from the looks of it, no major excitement created by Sun Pharma. Okay, well, that's on Sun. Let's move on and talk about some of the other things as well. In a bit, we'll get in our researchers to talk about BHEL, because that's the other big one of the morning that we have to talk about. But as we speak, something that's picked up pace, if I'm not wrong, is Phenolics Industries. So that should come up on your screen. Macrotech has had some good moves today. So that one is the other one. Okay, maybe Phenolics Cables is the one, which is up about 9% or 9.5%. So that one will come up on your screen. Phenolics Cables, 9.5% higher. Macrotech about 6% higher. There's some strength in solar industries as well in the session today. And Clean Science, about 5% higher too, at about 1400. So pretty interesting moves that we're seeing in some of those. Jay, I don't know, did we talk about the insurance companies, the general insurance companies, not the life insurance ones, but GIC, New India, they both look very strong today. And maybe a couple of smaller ones too could be chipping in. Anything on the charts for some of these?
Yeah, both GIC and New India, they have a very similar pattern. They have got a significant corrections from the February highs, and they are trying to reclaim the all-time high. But the pattern looks a bit unconvincing for fresh all-time highs. But there might be 7 to 10% short-term upsides. So I like them as a trading bet with a New India in particular, the stop at about 220.
Okay, well, that's on Sun Pharma, and that's on, some of the insurance firms. And clearly, some of them have done really well for themselves in the session today. So do watch out for the insurance plays as well. By the way, it's not just an afternoon that is marked by gainers and which are doing well, but the clutch of losers. We've spoken about GSFC already. We will speak about BHEL in a point of time. But there is a bit of a pullback that's happening in the commodity names today. So Hindustan Copper is down about 4.5%. Hindalco is down about 1.5%. A couple of others too have come off. Vineet, this whole conversation around how the spends in China, in the US infra, etc., might all lead commodities higher, and it is. Aluminum was up 4% overnight as well. Is there more juice left in some of the non-ferrous metal names? I mean, Hindustan Zinc has been a crazy mover, but there are some others as well out there.
So, what has been happening is that in the mining space, specifically to precious metals and base metals, there has been underinvestment over the long time. And, while the current demand supply is in favor of the, on the demand side, the reserves are not coming out as fast as you would like to. And today, to get a new mine onboarded, at commercial production, it takes anywhere between 10 to 15 years. So, we are going to be seeing a very long, drawn-out bull market in the base metals along with precious metals. And one more thing, adding to the, bullish prospects, is the fact that, base metals are also now being seen as a investment bet along with the precious metals. So what we are going to see is some skewed demand on the back of supply, and this is going to lead to the base metals moving higher. I believe that Vedanta and Hindustan Zinc have a very long way to go, because our prospects on silver are very, very bullish. And along with that, I think the group has got its act together, and hence we think that these stocks will do really well.
Okay, so keeping our eye out on some of those commodity plays, Vineet definitely seems comfortable with those. But shifting focus on to BHEL stock, taking a bit of a knock in trade today. The stock has been in whipsaw since the last month or so. We've seen 270 and 330 on this counter. But point being, the street also seems, in terms of analysts, also seem to be on the fence on this one. Some, or rather not on the fence, but quite widely divided in that sense on this one. We have Anushi as well as Mihika who are going to tell us both views from a bull case perspective and from a bear case perspective as to what are thoughts that analysts are putting out with regard to BHEL.
Who wants to start first?
I'll go first. I'll start off with a bear case scenario since the stock is not doing well today in trade. Now, again, if we look at BHEL in general, what the street was expecting in terms of the profitability, the revenue, it was not quite there. The margins were down, the revenue remained more or less flat, and even if you have to look again, the earnings miss was on expectations, but even gross margins. Now, despite Q4 being better in terms of the gross margins over here, 6 years of a straight decline in terms of gross margins that we are looking at, and revenues have remained flat. So this does not paint a good picture. We are seeing some supply chain issues as well.
But you know, you have to see that Q4 gross margins were up 205 basis points on a year-on-year basis. EBITDA margins were down, yes, but this was due to a change in accounting policy. Hence, margins may not be comparable on a year-on-year basis. Furthermore, management has also stated that the company did see supply chain issues and execution delays, but going forward, it expects this to be the bottom and does see a turnaround going ahead.
I'm so glad that you brought up the execution delay point, because my second point is about the order book. Now, order book stands at about 1.3 lakh crore. This is not small. 1.1 lakh crore has been its trajectory since the last 5 years. So, if we take that and take the basic book to bill ratio, that stands about 5 times. But somehow this is not reflecting in the revenue growth that we are looking at. FY24, the revenue more or less remained flat. Even if you take last 5 years in consideration, the revenue has gone down about 5% on a CAGR basis.
I get that, but you can't deny that a 1.3 lakh crore order book is a significant potential for future revenues. Furthermore, in the Q4 call, management did state that the company is targeting a 12 to 15% CAGR in terms of revenue. The management has also stated that the older orders of the NTPC will be executed in FY25 and the company will get cash from these commission projects in the next quarter.
Okay, so you have mentioned about the 12 to 15% of CAGR that we are looking at. But just take this into account. Order book of 1.3 lakh crore this fiscal. 1.3x of a growth over year. Even Kotak believes that such a big jump in the order book. But if you're just taking 12 to 15% of growth, that kind of looks modest. So again, your execution over here remains on a watch out. Why is this still a concern going forward for the business? And this has been the problem in the past as well.
Okay, but the old legacy projects are showing signs of execution pickup and expect completion by FY25. Furthermore, Nuvama has also revised its FY26 EPS estimates higher by 7% given the execution of the low OPM legacy orders.
So low OPM orders, higher order book, NDPC, again, long gestation orders. Now, despite you are seeing that there's some going to be slow orders which will, be on a better trajectory going forward, but the long gestation orders cannot offset these slow orders going forward. Again, what was a concern for the business was its vendor base. So they have faced challenges with their vendors. So even if they are to improve their vendor trajectory going forward, the concern remains on improving their vendors, getting better at execution, but on the other hand, compromising their margins. So it's again a battle between your profitability, which they're already struggling with, or the execution, again, an area they're already struggling with.
But that could be a short-term picture. You have to look at the long-term picture. Now, the government is planning to add 88 gigawatts of thermal capacity by 2032, due to which that the company is expecting 10 to 12 gigawatts of orders from the government itself. Furthermore, Nuvama has also stated that the total addressable market for the thermal space is at 25 gigawatts over FY25-26 versus just 9.6 gigawatts in FY24, which could help the company gain more market share. Furthermore, let's not forget the defense order book outlook and its potential. The sector is not only booming, but also has a government push, and the company has already submitted certain bids to the army regarding air defense guns, as well as for the marine gas turbines to the Navy.
Okay, this I have to agree with you. The defense is very strong. even the order trajectory you've given remains on a quite strong levels. But again, what is my concern over here is the current order book concentration in the power sector. About 65% of our mix is still in the power sector. So even if you want to take defense and the industry sector in general, there is still a long-term plan for this going forward over here. And let's not forget about the valuations that the company has. Quite expensive, 371 of a PE multiple, which is comparing it with the recent rally, it has over like 280% of a jump in the stock price. Again, the picture is about valuations versus the stock rally that we've already seen.
Yes.
Okay, very interesting views coming in.
Who won?
I guess you should decide that. I wanted to ask you for your views on this one.
Today the bear wins, without a shadow of a doubt, no matter how strong the bull view was.
Purely on valuations.
Purely on, yeah, if you look at valuations, for a lot of stocks this might be the case, but yeah, I mean, egregious valuations for BHEL really, for all the fanfare that people may have. Choppy EBITDA performance all through and through. Yes, a lot of promise. It's been there for a while. I don't know. I fail to understand what do people see in this 1.05 lakh crore market cap.
Yes.
This is crazy.
Yes. Vineet, your views with regard to this one, because execution seems to be the key here. You believe that execution can happen, and maybe just to add a little bit, do you believe that there is enough pressure from the government in any case, given the power deficits, that we need, or BHEL really needs to ramp up with regard to execution, just from a demand supply kind of to plug those mismatches?
So, I will draw your reference to two pieces of news which took place, one yesterday and one a little while back. Yesterday, Vietnam asked Foxconn to go slow on low-end manufacturing because of the power outages that they're facing. And if you talk about AI-based Google searches, it takes 25 times the power of a normal Google search. So the data centers are going to be the new energy guzzlers, and it is estimated that in the US, the demand for power from the data center and green power is going to equal that of EV. So we are going to be having shortages not only on transformers, but also on renewable energy eventually. So when you have these kind of shortages come, what do you need? You need, the fossil fuel and that age-old dependable coal-based plants coming up. So to that extent, with India putting up their plants and India becoming the manufacturing center for the globe, I think we are going to see a lot of power situations, crisis come about. And that is when you will appreciate the worth of BHEL and the orders that they are sitting on. Let's talk about the other two businesses which you mentioned, defense and marine turbines. So most of the turbines that India was getting, gas turbines, we were getting them from Ukraine, and Ukraine has obviously been bombed out of oblivion. And so, as an energy security, if you want to have gas turbines, where do you go out, reach out to? So I think that is a very interesting play that BHEL is doing. So it's a natural extension for them to move from power turbines to gas turbines. And, it is estimated that gas turbines could become the kind of the, like you have base load guarantees, because gas is very, very abundantly available globally. So, on a longer term basis, gas turbines are really, really going to come in vogue. Defense, as you know, if you get an order from the army, and since India is indigenizing everything, and also we are exporting now, I think that it could be a great optionality out there. And as far as the power business is concerned, I obviously spoke to you about. One thing which is an invisible on BHEL, which often tends to be overlooked, is that they have a land bank which is the envy of the world.
Yeah.
So I think keeping all these factors in mind, there will be whipsaws in BHEL, but every dip, any deep hit that comes into the market is a buying opportunity.
That's a long and very valid point, but clearly bullish on BHEL, Vineet. Thank you for that. You know, it's election season. My colleague Tamanna got a chance to speak to Ian Bremer from Eurasia Group on what his expectations are from the ongoing elections in India. Here is what he had to say. Listen in.
The assumption as per pollsters, at least before the elections began, is that we're going to have continuity, policy continuity, perhaps a third term in all likelihood of the Modi government. The question is, by how much? Now you need 273 to form a government. Does BJP get more than it did last time on its own? What's the number you guys have?
Eurasia Group is pretty consistent with where Modi and the BJP landed last time around, so it's 305 plus or minus 10 seats. My interest is not in the exact number. My interest is that of all the elections in the world this year, India, the largest democracy that is going to the ballot place, India also one of the countries with the smoothest transition, right? There's not a lot of uncertainty about the legitimacy of the system. It is seen to be free and fair and transparent. And Modi, who has been in power now for 2 terms, is almost certainly going to be in power for another term on the back of pretty strong economic performance and consistent reform. That is, in the grand scheme of things.
Well, of course, catch this conversation a bit later on, but markets closing. Well, Jay, if you are here with us, we'll just take a final thought from you post-market close. Please stay on, but this is how the markets are shutting shop, about 0.4% for the Nifty. We'll do a quick market close, really, not dwell too much on it, but I think the index is ending well, and this should actually please the street that we are ending with the tick at almost the highest point of the day, and the broader markets also have performed well, so not bad going. So good going really for this, and just get the Nifty 50 top gainers and losers and the Nifty 500 top gainers and losers as Harsh joins me. We won't dwell too much on this, just the close picture to show you what's happened, and Cipla HUL on a bit of a defensive bent, Reliance participating, and let's get the Nifty 500 out here on the top gainers and losers just to show you what's happened, Harsh, and not surprising that some of the infra and insurance names feature in this list.
Oh yes, GIC and New India, but yes, PNC Infra. We've spoken about a whole host of these names, including IRB Infra, where we've got views, and you know, you have Rainbow Medical again. Rainbow Children Hospital down around 5.5%. BHEL we spoke in detail about. So tons of stocks that we've spoken about today, already featuring here.
Most certainly. Jay Bala, before we thank you, and we have very little time, but just if you are there, would you believe the momentum continues for tomorrow?
I think it continues for tomorrow. That's not a big thing. What happens after the elections, that's the big question. It's no brainer as far as tomorrow is concerned. In fact, I had a buy today, sell tomorrow call on Schaeffler India, but we couldn't give it because we had other things to cover. And just as an aside, I think copper is set to drop about 10%. So, it's just a near-term pullback, but still got higher highs to come through. So caution on metal names.
Caution on metal names, warranted as well. Vineet Bolinchkar, Jay Bala, thanks so much for joining me, gentlemen, on this show today. Really appreciate your time. And with that, it's a wrap on this leg of India Market Close from Harsh and me and the team that put this show together. Thanks so much for tuning in.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Hello and welcome. Thanks for tuning in to the Small and Mid Cap show on NDTV Profit. I'm Harsh Saita. We're joined by two managements today. The first one is Godavari Power and Ispat. Extremely interesting company from a perspective that it's less of a power play and more of a commodity play for those who weren't aware of it, of course. Even though the name is Godavari Power, we have Mr. Abhishek Agarwal, who's the ED at Godavari Power here. Very unlike the name suggests, quick clarification, it's largely a company which manufactures steel as well as pellets, and therefore more of a commodity kind of a company and play outside of course, generation of power. Firstly, welcome on board, Abhishek. Good having you here.
Thank you so much and very good morning.
Hi. So, quick check just with regard to where your volumes versus value has played a part in the top line expansion. Talk to us about that, and where, especially on the pricing front, how are trends really shaping up at the start of FY25? Give us context.
So, just to answer your first question, on the volume side, we did get the environment clearance for our DRI capacity 0.45 to 0.59. So that is where a lakh ton of volume were added. And basis that, our steel production, which was about 0.4 last year, is about 0.5 this year. So on the downstream side, there has been a volume uptick about 20%, right from DRI to value-added steel. Pellet, the volume has been a little down compared to last year. And on the pricing side of FY25, as you all know, the iron ore is on the upside. China is again back to 215 levels. And more than that, the domestic demand has suddenly come back into the picture post-Holi, which has driven the market, and all the prices, right from pellet to finished steel, is almost up by 10%.
Take your point, but just to try and give more context here, do you expect pricing to hold up? Of course, there's a lot of news trickling through that, positive news with regard to commodity pricing. But you expect the hold up, and what's the on-ground reality at the moment? What's the sense that you're getting?
See, to be honest, everybody's banking on the government expenditure, where government is focusing on the capital investment in terms of infrastructure, be it railways, roads, or infra. So that is where steel comes into play, and everybody in the steel sector is quite bullish and positive. And with hoping the government continues to spend going forward, I feel the prices will sustain for a longer period.
Sure. Just taking a look at your FY25 guidance, and largely the sense is that iron ore mining as well as rolled products are likely to aid the top line from here where volume is concerned. Talk to us about what capacities you're adding and how does this basically add up to your top line? What can we expect in terms of top line growth in FY25?
So going forward, we expect our enhanced capacity for iron ore mining. We're taking it from 3 million to 6 million. So by end of Q2 of this financial year, we hope we get that all the approvals required from the State Department. And once we receive that, we'll ramp up a capacity. So that is why we are given a guidance of 3 million of mining against 2.4 produced last year. And on the pellet side, we have already started the construction of new pellet plant, which will come into production in FY26 Q1. So going forward from Q3 onwards, we expect an increase in iron ore volume, and then going forward, the pellet volume.
Okay, so probably 25% jump in iron ore mining, which is at least my key takeaway from this. How does this aid your top line number? Give us context from that perspective, especially I understand pricing is a variable, but let's assume for the moment that pricing holds up.
So at the current market levels, if we are able to ramp up capacity to 3 million, then we can see an additional top line EBITDA of say about 250 odd crores. Because currently we do buy some iron ore from the market. So that will completely get removed from the equation and we will become 100% captive going forward.
Got your point. And how quickly do you go from 3 to 6?
So once we have the approvals, I think in next financial year, the total plan is the mining capacity will be ramped up in tandem with the pellet capacity. So hopefully once we get the approval, mining capacity will be ramped up gradually. And FY26, you can see the full 6 million volume.
Okay, and where does that take your top line therefore?
See, it's difficult to comment on numbers, but if you see today's market level, so probably you can add another additional EBITDA of say, 4 to 500 CR. So 3 additional CR from 3 million and then additional 4 to 500. So all about 7 to 800 CR crores going forward if you are able to mine 6 million going forward.
Got your point. That's quite large given the current size. Onto the steel plant, you have a large capex pipeline per se across different product segments, but specifically on the integrated steel, which is roughly 6,000 crore in terms of your expected investment. How quickly do you expect to get environmental clearance for that?
So see, public hearing has already been done. We had the last year of environmental clearance. So once we have all the approvals, we should start the work. I think FY25 end of Q3 or early Q4 we start this construction work.
Okay, and then thereafter 3 years for construction.
Yeah, about 24 months to 30 months we expect. But yeah, you can say roughly 3 years.
Okay, so FY29 onwards, this capacity starts getting added to your full year numbers.
No, I would say FY28, not 29. Yeah, full numbers FY29, but yeah, partial probably in FY28.
Understood. Yeah, I take your point. Okay, understood. And therefore, just in terms of profit expansion, this 6,500 odd crore, or maybe even 6,800 or 6,900 crore, if I recall the exact number, that's the kind of capex plan that you have in pipeline, which you've disclosed in your analyst PPT. What's the sense like? How are you going to fund that? Because currently net zero debt.
See, currently we are sitting on a huge pile of cash reserves.
Yeah.
And with the current EBITDA levels and assuming the market is going to sustain at these levels as well. So a major capex will start happening from next financial year. So most likely everything will be internal accrual. And if required, end of the day, probably we borrow something or we do some kind of raising. But that depends on how the market proceeds. Because it's a commodity market, you also know in 6 months things can change drastically.
Sure. And you continue to maintain everything to come from internal accruals. You believe that such a large chunk of capex will be funded pretty much all through internal accruals?
Yes, we are very confident. And just in case also in worst case scenario also, we have to buy, borrow something from the bank. It'll probably be very short term. It won't be a long term thing. So we're very confident on the internal accrual side.
Got it. So therefore, your balance sheet, roughly your equity size is 4,500 odd crore for context. That will expand substantially over the next maybe 4 years, if I understand correctly, because that 4,500 crore balance sheet will become roughly a 10,000 crore balance sheet, just in equity terms, just taking off the debt and current liabilities. Therefore, are you confident of this happening, and what's the kind of return that you are expecting on this equity?
See, since our iron ore is mindset at zero premium and it's for long term, so basis that we expect a healthy margin of say 20-25% EBITDA going in long term as well.
Okay, understood. And ROC, if you can give us that number broadly, the expectation.
Probably, 3 years maximum, 2.5 to 3 years, to be very honest. If the market sustains at these levels, the demand persists, and the government spending continues, of course. Again, there's a rider because it's commodity, so it can go anywhere. But given current scenario, we are very confident.
Okay, excellent. Well, thanks so much, Abhishek, for all of that perspective. It's time to slip into a short break. We'll be joined by the management of Metropolis Health on the other side. Stay tuned.
Co-powered by Canara Bank. Together we can.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will.
Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome back. Thanks for staying tuned to the Smith Show on NDTV Profit. I'm now joined by the management of Metropolis Healthcare. We have Surendran Chamankotal, who is the CEO at Metropolis Health, to talk to us about the Q4 numbers and the way forward. Welcome, sir. Just to get context, talk to us about the value versus volume growth that's come through in Q4 and what are the more sustainable trends that you're expecting, or are these kind of trends sustainable?
Good morning, Harsh, and good morning to all your viewers. Yes, we really had an exceptional quarter in Q4 last year. We have grew the revenues by 11% at a reported level and 15% on the core revenue. And also we had a 25.5% EBITDA in Q4, which is the best in the last 4 quarters. And EBITDA grew by 15% in Q4. So overall, if you look at it, there is a exceptional performance on all the parameters across. What has led to the growth? In fact, the 15% growth has been fueled by roughly 7.5% from the volumes and the remaining 7% from the realization. And the realization has come on 2 attributes. One, of course, was the mix change, which is improved by about 4%, and the remaining 3.5% has come from the price increase that we have done in Q4. Right, so 15% growth in Q4. And what is sustainable growth? I mean, full year basis, if you look at it, 13.3 is our core revenue growth, and going forward, our reported revenue and core revenue will be same. So hence, anything above 3.3% definitely is a doable number. So we are looking at stretching it beyond 13.3% in the coming year, right? And EBITDA at 25.5% in Q4. Definitely we are holding this going forward in the year 25 and maybe bettering it by 0.5% or 1%. So that looks like the guidance for the year ahead.
Okay, on pricing, right? That's quite comprehensive. First off, I want to compliment you on that. But on the pricing front, I want to try and understand how FY25 evolves. Because you have guided that there is a need with regard to price hikes, if I'm not wrong. And therefore, will that be expected in FY25? And if so, when in FY25?
See, normally in this industry, what we have seen is that price increase happens once in 2 years, largely to beat the inflation, right? And other price increases, that is the input cost that which goes up for us. So we have done the price increase in January this year. So for the full year, unlikely that this 25, unlikely that we take one more price increase. But let me also tell you the price increase has two components. One is the B2C price increase and the B2B price increase.
Hello and welcome. You're watching an NDTV Profit special. Now the RBI has just updated that the board will transfer 2,10,874 crore rupees as surplus to the central government. This is for the accounting year 2023-2024. The figure is definitely higher than was being anticipated and is a bonanza for the government. My colleague Vishwanath Nair joins us to tell us a little bit more about what this figure means for the government going forward. Vishwanath?
Right, Pallavi. So as you said, 2.11 lakh odd crore worth of surplus transfer by the RBI to the government. Now remember that how it works typically is that on the RBI's balance sheet, after adjusting for any kind of expenditure that the RBI may incur, after adjusting for a specific contingency risk buffer that the RBI calculates, on which I will discuss a little bit further, whatever surplus remains that the RBI returns to the government in the form of a dividend that the RBI pays to the government. Essentially, this money becomes an important sort of revenue stream for the government. Remember that for FY24, during the February budget, the RBI, the government had estimated a revised estimate about 1.2 lakh odd crore. So compared to that, this is significantly about a little over 100% higher than what the government itself had anticipated in February. So that's a big bonanza for the government, of course. And remember that I talked about the contingency risk buffer. That is a risk buffer that the RBI maintains depending on how much it earns. In 2019, that risk buffer had been brought down to 5.5% from 6.5%. Then later on last year in 2022-23, it had been raised again to about 6%. Now, this time the RBI has brought that figure to 6.5%, which is where it was originally. And according to the RBI, that 6.5% is the appropriate level of contingency risk buffer that it needs to maintain to contain any kind of financial volatility that the financial system may face in the future. So even after adjusting for a higher risk buffer, the RBI's surplus transfer is significantly higher than what was anticipated by the government itself. And that's obviously going to play a big role in the way the budget for FY25, which the restated, the full year budget, which will come out in July, how that is planned will depend on this figure.
Right. All right. Thank you so much, Vishwanath. Let's quickly also go across to our guests. I first have with me Teresa John from Nirmal Bank. Teresa, hi.
Yeah, hi.
Thank you so much for taking time out and joining us on such short notice. We've just seen the figures being released and it's clearly well above expectations. What are you making of the figure for the transfer?
Right. So we were expecting, in the upper bound around 1 to 1.1 lakh crore. This is significantly above that. And this is despite the, I think, as Vishwanath was mentioning, the RBI has actually increased, the contingency risk buffer to 6.5% from 5.5% during the pandemic. So despite higher provisioning, under the contingency reserve, they have made a higher transfer. So one thing that we have, when you look at the RBI balance sheet, is the foreign security part of the RBI's balance sheet has actually grown quite significantly over the last year, and the interest rates on the foreign securities are also higher because global interest rates remain elevated. So it's possible that that could have contributed in a substantial way to the higher dividend. And possibly, there were sort of higher mark-to-market losses, both on the foreign securities portfolio as well as the rupee securities portfolio. So this year, I don't think there'll be any mark-to-market losses on the rupee securities portfolio because your domestic yields have actually moderated when you see from March 2023 to March 2024. On the foreign securities, we were anticipating some mark-to-market losses because global yields have continued to rise, but probably that was lesser than what we and most of the market were expecting. So that could be I think, the two elements of surprise. We'll have to wait for the RBI to actually release its annual report to know whether our guesstimates are correct. But these could be, probably the reasons why the RBI dividend is actually high.
Okay, all right. I also have with me Vivek Kumar, economist from Quant Eco Research. Vivek, hi. Thank you so much for taking time out.
Hi.
So,
Thank you for having me on the show.
Absolutely, our pleasure. So, I do want to ask you, the figure is higher than what even the government had budgeted for. What does this mean in terms of fiscal implications? Does it have any impact at all on the fiscal deficit which we will see for FY24?
Well, of course, yes. The figures were kind of comparable between what the government had budgeted for FY25 and what they received in the previous financial year. The numbers were roughly comparable, so broadly you could say that about 85 to 90 odd thousand crores were expected from the RBI as far as the budget estimates are concerned. So the actual outturn is way beyond that. There is almost a 1.2 lakh crore, I would say, bonanza vis-a-vis what the budget had estimated, and that would translate into a GDP figure of roughly 40 basis points. So from an FY25 GDP perspective, this would give you a 40 basis points of cushion or 0.4 percentage points of GDP cushion to your fiscal deficit arithmetic. Essentially what it means is that if other things remain where they are, the government's fiscal deficit will not be at 5.1. It can potentially go down all the way to 4.7, assuming other things remain absolutely unchanged. So in some sense, what it gives is a lot of cushion. The government can now have a lot of wiggle room to play around with some of the assumptions that it has on the expenditure side as well as on the other revenues front. Even if, let's say, there is some shortfall on account of taxes, on account of other sources of revenues during the course of the year, this itself will make good and probably deliver much more. And this also gives some extra room for the government to spend. Mind you, there is also a talk of the government considering reducing its GSEC borrowing program. This talk has emerged after the recent GSEC buyback plans had not met any eager response from the market. There was very tepid response. And the RBI did curtail the T-bill borrowing program for the Q1 by almost 60,000 crores. The expectation or the rumor in the market is that if possible, the government could also consider lowering its GSEC borrowing program. So a figure like this definitely will add much more rumor, much more muscle behind this rumor. And the possibility of an actual cut in GSEC borrowing remains now a very live option.
Hi, Teresa, this is Vishwanath. I just wanted to ask you a question with regard to where we are in terms of the number itself. Is it largely coming because of forex gains or the forex holdings increasing significantly in value? We have seen the dollar strengthening most of FY24. What's your assessment looking like?
No, so the foreign security. So basically, if there is any mark-to-market gains, that is not kind of recognized in the P&L of the government. So that doesn't. The value of the securities doesn't really benefit if there is a mark-to-market gain, and I don't think there is a mark-to-market gain on the foreign securities portfolio, mainly because the yields have continued to rise. So if yields are rising, then you actually have a mark-to-market loss. But the interest rates, have actually gone up. So last year, if you see the average yield, interest income was around 1.5% on the foreign securities. This year, probably, we were assuming it to go up by around 50 basis points, very conservatively. But it's possible that you would have earned even, say, maybe 2.5 to 3% because global yields on average have been, closer to 4%. So it's possible that the interest income on the foreign securities is higher, and even on the rupee securities, it could have been slightly higher than what most was expecting. And the second is the provisions probably could have been, so last year there were a lot of mark-to-market losses, both in the foreign and the rupee securities portfolio. This year the mark-to-market losses could have been lower than what it is last year. So those could, and then so we were expecting slightly lower FX and other gains, but probably it may have remained around the same levels as last year. So those could have been the factors which contributed to the higher dividend itself.
Right, Teresa. Vivek, one last question to you before we let you go. Just trying to understand where the gaps are. You mentioned that there might have been certain shortfalls in certain planned revenue for the government. I think specifically with regard to the divestment, because that's where you've seen the least amount of action for the government itself, right?
Right. Yes, that's true, because this is until year, and typically, at least during the phase of the election, it's not practical to assume that there will be any divestment happening. So clearly, but not that the divestment target is lofty. I guess overall, now what this gives you is that enough room to compensate for any potential loss on the revenue side. It also gives you room to expand your expenditure. If you don't want to do anything, the best way to do is to cut back on your borrowing plan. So essentially what it will do is, from an interest rate perspective, it will lead to lower long-term interest rates. We've already seen short-term interest rates coming up in the last few weeks. Now this will have an impact on the longer-term interest rates across the yield curve.
Okay, all right. Thank you so much, Vivek and Teresa, for taking time out for us. Of course, our quick takeaways, one of the key takeaways from the conversation was that there will be fiscal implications because of the transfer being higher than was anticipated even by the government. The fiscal deficit as a percentage of the GDP could be substantially lower than what was initially targeted by the government. We'll continue to bring more updates on this. Thank you so much for watching NDTV Profit. Stay tuned. We have a lot more coming up for you.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of
It's a big bonanza for the government from the Reserve Bank. The central bank will pay a record 2.1 lakh crore rupees from its surplus. This is the highest ever transfer from the RBI. FMCG stocks on a high thanks to the RBI again. The broader market remained volatile and range-bound. 305 seats plus or minus 10, that's the number political scientist Ian Bremmer is expecting the BJP to get. He also told NDTV Profit in an exclusive interview that currently India is the only stable story in the world. Paytm woes continue. The company will slash more jobs and sell more assets. This on the back of weak fourth quarter numbers. It's a meme stock frenzy on Wall Street. All eyes are on the chip maker Nvidia's first quarter earnings, which are expected to zoom over last year's figures. The heat wave in the north and the heavy rainfall in the south, the Indian Met Department issues a red alert for multiple states over the next few days. And Norway, Ireland and Spain formally recognize Palestine as a state. Israel recalls its ambassador to Ireland, and Norway says Israel will not remain silent in the face of those undermining its sovereignty. Good evening and welcome. You are watching NDTV Profit and I'm Nupur Talwar Suri. Our top story this evening, the RBI has announced that it will pay a record 2.1 lakh crore rupees dividend to the government from its surplus. Now, this is the highest ever transfer from the RBI. In fact, let's go across to my colleague Pallavi Nahata, who joins us now on the broadcast. Hi, Pallavi. Pallavi, obviously, this is way above the expectations. What do you make of it?
Right. So as you've mentioned, the figure 2.1 lakh crore rupees is the highest ever transfer by the central bank to the central government. This compares with a figure of 87,420 crore rupees that was transferred in the previous financial year. Now, the risk provisioning under the contingent risk buffer has been maintained at 6.5%. What the biggest takeaway from the news is that there will be obvious implications on the fiscal deficit that the government was targeting. Given that the figure is almost higher by about 1 lakh crore rupees from what was anticipated by the government, there is a chance that we will see fiscal deficit for the financial year FY24 actually come in lower than what the government was targeting. And we spoke to a couple of economists as well when the news broke. This was pretty much in agreement with what they have said as well. There are, for greater clarity on what permitted the central bank to transfer the amount to the central government, we'll actually wait for the annual record of the RBI to come out. But we're definitely going to be watching out for what is the fiscal deficit figure that's coming in. Of course, the figure also means greater flexibility to the government, greater space for maneuvering in terms of how it wants to strategize regarding its expenditure going forward as well.
All right, Pallavi, thank you very much for that. So Pallavi taking us through what this could mean for the new government that will be in place soon. Thank you, Pallavi. Now, let's move on and take a quick look at the markets first. The benchmark and the broader markets ended the session in the positive territory. Sectors traded mixed, with realty and FMCGs outperforming metals and financial services, showing a weak performance. Cipla, Tata Consumer Products, Hindustan Unilever and Coal India were the top gainers on the Nifty 50, while the laggards included Shriram Finance, Apollo Hospital, Hindalco and Hero MotoCorp. Let's also now take a look at the top 5 multi-bagger stocks. If you had invested 1 lakh in these multi-bagger companies in 2019, you might have earned a lot of money by now. My colleague Agam Vakil takes you through which these stocks are.
Now, if you would have invested as much as 1 lakh rupees back in 2019 on any of these 5 mega multi-baggers, you would have been sitting on gains of anywhere between 31 lakh rupees to a whopping 1.2 crore rupees. Let's start by taking a look at the the number one on our list, and that's Lloyd Engineering. In fact, that 1 lakh rupees has precisely become 1.17 crores in returns, and this is largely on account of the turnaround following the company's sale of the consumer durable business, and of course, even as it comes out of a lot of its challenges, which has actually led to about top-line CAGR over the last 5 years, about 45%. The next one on our list is Adani Green. Now, this is where your 1 lakh rupee investment would have turned into nearly 43 lakh rupees. The revenues, of course, have grown all the way from 2,500 crore rupees to nearly 10,000, with an installed capacity also nearly doubling to about 442 gigawatts. From there on, we move on to the third stock on our list, and that is PG Electroplast. And this one, of course, caters to the consumer durable segment. Again, turning around a lot of the aspects of its business, where its revenues have moved well over 4 times, currently standing at around 2,500 crores. And again, this one also has made a way into the relatively newer technology areas in which it caters to. Moving on, number 4, we have something like a Ratan India. This auto ancillary company also looking at staggering gains over the course of the last 5 years, with revenue moving from 14 crores all the way up to nearly 5,400 crores. And again, a lot of that substantial gain has come on account of the newer segments that the company has catered to. And the final one on our list, last but not the least, Jai Balaji. This one has been a turnaround of sorts, because it actually had gone through a lot of challenges with respect to NCLT. And in fact, over the last year, it's moved from a loss to a substantial profit, and looking at a considerable improvement in its operational numbers as well, where in this case, your investment of 1 lakh rupees would have turned to nearly 32.5 lakh rupees. Now, these are the top 5 multi-baggers when it comes to the last 5 years. We wait and watch as to what holds in store for the next 5.
Well, the Eurasia Group's Ian Bremmer is expecting the BJP to win 305 seats in the current Lok Sabha elections. While speaking to NDTV Profit's Tamanna Inamdar, he added that the Eurasia Group is optimistic about India's growth. Listen in.
The assumption, as per pollsters, at least before the elections began, is that we're going to have continuity, policy continuity, perhaps a third term in all likelihood of the Modi government. The question is, by how much? Now, you need 273 to form a government. Does BJP get more than it did last time on its own? What's the number you guys have?
Eurasia Group is pretty consistent with where Modi and the BJP landed last time around, so it's 305 plus or minus 10 seats. My interest is not in the exact number. My interest is that of all the elections in the world this year, India, the largest democracy that is going to the ballot place, India also one of the countries with the smoothest transition, right? There's not a lot of uncertainty about the legitimacy of the system. It is seen to be free and fair and transparent. And Modi, who has been in power now for 2 terms, is almost certainly going to be in power for another term on the back of pretty strong economic performance and consistent reform. That is, in the grand scheme of things, a very stabilizing message.
But you guys do have a number.
No, as I said, 305 plus or minus 10 is the number.
Okay, so 305 plus minus 10 is the number. Now, what does it mean for a third term and a political stable situation for India in terms of how the world is seeing India? I mean, right now for us, the conversation is about how India's the third largest economy sooner than later, how we are now a global power to reckon with. Is that something we're telling ourselves, or is the world also seeing it that way?
Oh, the world is definitely seeing it. The world has seen that India has underperformed for decades. India has this incredible demographic weight around the world, and they also, of course, have, very strong intellectual capital and so many STEM graduates, and so many American CEOs come from India, Silicon Valley, right? And not just in the United States and Canada, all over the world. And yet India as an economy has underperformed. And now not only do we see Indian growth picking up, do we see India becoming the 4th largest economy in the world likely next year, the 3rd largest economy in the world probably by 2028. That's a big deal. But also, India, as it becomes more powerful, defining itself in terms of friendship with the rest of the world, as a bridge to engage in stronger, more stable relations, as a leader of the global South, as stronger relations with the US, with the West. Canada's an exception. They haven't managed that well, but the rest of the G7, they've managed very effectively. And even stabilizing to a little degree, a limited degree, the Indian relationship with China in recent days. So I think not only is India seen as a more positive story, but India is also not perceived as a threat to the global stage. It's seen as a constructive part of a global economy that doesn't have many good stories like that today. So that's the reason why the West is paying attention.
And here's a quick programming alert. You can catch the full interview tonight at 7 p.m. So do watch that one. Now, moving on to Paytm, according to a Bloomberg report, the fintech unicorn has signaled job cuts and trimming of its non-core assets. This is mainly because of the RBI's probe into the company's financial arm, Paytm Payments Bank. The restrictions imposed by the regulator dealt a huge blow to Paytm's reputation and possible switch of customers to rivals like PhonePe. In fact, more on Paytm. This comes at a time when Paytm's parent 197 Communications loss has widened to 550 crore rupees in the fourth quarter. Pragati joins me now to break down the numbers for us.
Paytm's numbers came this morning and they were weaker than expected. Now, we must remember that this is the first quarter of Paytm coming out with its numbers post RBI's crackdown on Paytm Payments Bank. So naturally, the impact was expected on many fronts and the numbers are showing that. For instance, the net loss has widened to 551 crore rupees. The EBITDA loss has also widened to 223 crore rupees and the revenue has been down 20.5% on a quarter-on-quarter basis. This is the first snapshot of the main numbers where we are seeing the impact of RBI curbs. Two important takeaways I have for our viewers here. One, the Paytm wrote down the value of its entire investment in Paytm Payments Bank, which was worth 227 crore rupees, and this they have shown as an impairment provision in this quarter. The step was taken because there was some uncertainty to the restart of certain businesses, and anyway there's an embargo placed on Payments Bank because of RBI's action. The next thing is the company's commentary or the guidance that they've given on the Q1 FY25 numbers. Paytm has said that while there has been a financial impact or the impact of numbers in this quarter because of RBI's crackdown, the full impact or the entire impact is expected in Q1 FY25. So in terms of numbers, Paytm expects an incremental EBITDA impact of 100 or 150 crore rupees in Q1 FY25 and a revenue of rupees 1500 to 1600 crore in the first quarter of FY25. We'll bring you more updates as and when we have them.
Well, NVIDIA is also in focus. The company's stock price has seen a 92% rally in 2024 and has tripled in the past 12 months. The company is expected to set the US markets on fire with its Q1 earnings. My colleague Rishabh joins us with more details. Now, Rishabh, can we say that NVIDIA is currently the talk of the town?
There is only one talk and stock of the town, and that is NVIDIA. We've seen it grow, we've seen it triple in 2023. It's already been up by about 92% this year. And why wouldn't it be? It is at the heart of all the artificial intelligence developments that are coming out of the US. Now, be it Google, Meta, Microsoft, OpenAI, for all matters, everything is powered by NVIDIA chips. Now, the CEO has constantly been in touch with the chiefs of all these big tech companies. He has been sort of been in their good books. Because he is a very, very important person and a very, very important company at this point in time. We've also seen that the market cap of NVIDIA has ballooned past $2 trillion this year. And with this, obviously, comes a windfall in the revenue and the profits that it is expected to book. The profit and net income is expected to be up more than 5-fold to roughly $14 billion. Now that is a massive, massive number coming in from NVIDIA. Google, Amazon, Microsoft, all these big tech companies are altogether expected to shell out $200 billion in capex purely for AI, and a large chunk of this will go to NVIDIA. So this is the stock and talk of the town, and it is expected to be so going ahead as well.
All right, we'll slip into a very short break right now, but when we come back, we'll tell you more about the red alerts that have been issued by the Met Department in multiple states. Stay with us.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have 1 day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India,
Welcome back. Now, the Met Department has issued a red alert for 5 states. A heat wave will send temperatures soaring above 45 degrees. Yukta joins in with the list of states where the alert has been announced.
Right. So the India Meteorological Department has issued a warning today of an impending heat wave across several states in North India, including Rajasthan, Punjab, Haryana, Delhi and Uttar Pradesh. The warning has come after yesterday saw scorching temperatures of more than 45 degrees in these regions, making it the hottest day of the year so far. The department stated that heat wave to severe heat wave-like conditions were expected till the 25th of May. Additionally, Jammu, Himachal Pradesh, Gujarat and parts of Madhya Pradesh were also likely to experience heat wave-like conditions. Maharashtra is expected to face similar conditions till the 24th of May. The IMD has also warned of an increase in heat-related illnesses in the country during this period. So stay safe and stay hydrated if you live in these states.
All right, thanks for that, Yukta. And in the southern part of the country, however, the situation is entirely different. The regional Met Center has issued a red alert in 4 southern districts of Tamil Nadu, and many districts of Tamil Nadu, of course, continue to receive showers, including Kanyakumari, Coimbatore and Sivaganga. Sam Daniels joins us with more on this. Sam, tell us more, please.
Heavy rains continue to pound several districts of Tamil Nadu, particularly in southern, western and delta areas. In fact, the Met has given very heavy rainfall to extremely heavy rainfall alert to districts like Kanyakumari, Theni, Tirunelveli and Tenkasi districts, both for today and tomorrow. Heavy to very heavy rainfall is also expected in districts like Virudunagar, Tirupur, Coimbatore, Nilgiris and Dindigul. In fact, over the last 21 hours till 8:30 this morning, Trichy has received 12.9 centimeters rain. Thundi in Ramanathapuram has received 9.6 centimeters rain, and Salem 7.7 centimeters rain. Fishermen continue to stay away from the sea for the 5th day, and the Met Office has advised fishermen involved in deep sea fishing to return to the shore before 23rd, as they expect a low pressure over the Bay of Bengal on the 22nd, which could actually turn into a depression on the 24th. Authorities are not taking any chances. The Tamil Nadu government has deployed 296 state disaster response force personnel in several districts, including Kanyakumari, Coimbatore and Nilgiris, to make sure they would be on standby to be able to swing in action if the situation turns out of control. Tourists visiting the hill resorts of Nilgiris and Kodaikanal have been advised to avoid, and if they still choose to travel to these areas, the authorities have asked them to exercise abundant caution.
And going back to the other story that we've been tracking this evening, of course, the central bank will be paying a record 2.1 lakh crore rupees from its surplus. Now, this is, of course, beating expectations. We now have a reaction that we are getting from Vivek Joshi. He's the secretary to the Department of Financial Services. He says that this is an excellent step by the RBI, and it will obviously help in achieving fiscal glide path. Now, he also goes on then to say that he thinks that this is really going to help the government in improving its infrastructure and development. So that is the reaction that we are getting from Vivek Joshi on this. And moving on, to the other story that we are tracking, of course, is the accident that took place in Pune. Now, Devendra Fadnavis has said that the opposition has been politicizing this issue. Do remember that there has been quite a lot of criticism of the incident that took place in Pune, where a young boy was drunk driving, and the situation, of course, that followed thereafter.
मैं ऐसा मानता हूं कि इस घटना का राजनीतिकरण करने की ये बहुत ही ओछी कोशिश है, क्योंकि पुणे की घटना में पुलिस ने तुरंत कार्रवाई की। जुवेनाइल जस्टिस बोर्ड ने उसके ऊपर जो निर्णय दिया, उसके ऊपर हमने भी आश्चर्य व्यक्त किया है, लेकिन पुलिस उस पर रुकी नहीं। पुलिस ने वापस उस पर अपील दाखिल की और ऊपर के न्यायालय ने उसका कॉग्निजेंस लेकर वापस एक रिव्यू पिटीशन जुवेनाइल जस्टिस बोर्ड के सामने चल रही है।
All right, now Akshay is joining us on the broadcast on this. Akshay, hi, take us through how the government is planning to make sure that something like this doesn't reoccur.
The update of this case is now Vishal Agrawal, who is the father of minor accused, and two more accused along with were produced before the court and Pune district court, and the police demanded the 7 days of police custody for investigating and for taking the mobile for investigating the incident which has happened in the Koregaon Park, Kalyani Nagar, Pune. They have to investigate the same non-registered Porsche car was involved in any another incident and accident or not. So court has ordered the 3 days police custody for all three accused, and now the accused are taken to now police are going to take these accused into the police station. This is the now update of this case.
All right, thank you very much for joining us with those details. So quick update coming in on how the legal side of this is progressing. Now we are going to cut across to Paytm's Vijay Shekhar Sharma, who's speaking at its post-earnings con call. Let's see what he's saying.
Risk there. As of the approval, it is interministerial committee meetings. I think it was due or will be due once the government gets formed. I can't say much comment about when will it be done or so on. So that is why we are in waiting state. As for losing any online merchant, no, we did not lose any. We have actually focused on deepening relationship by farming relationships. So practically speaking, I can share that our revenues from online merchants have grown on a product to product basis. Obviously, our revenues included other payment instruments like postpaid, etc., that we would used to have, which we have paused. So that part of revenue, if we don't account for, then like to like basis, our revenues from our online merchants have increased.
Okay, fair. I just have one more on your guidance of Madhur 3 to 3.5 basis point NPM X of UPI incentives. Your UPI incentive roughly was 1.5 basis point in FY24. And when you look at government allocation to UPI incentive, that number is growing at a slower pace versus the growth of overall UPI P2M GMV. So incrementally in FY25, when you are likely to lose market share, means I'm finding it difficult to understand how you will get 2 basis point when this year you did 1.5. So shouldn't, means unless I'm missing something, shouldn't it be more like a 4 to 5 basis point kind of a guidance for NPM?
Yeah, sorry. So just a couple of clarifications. I think the incentive scheme this year was very, very similar to the incentive scheme last year in terms of how they think about industry and non-industry teams, groups of merchants, and what the incentives were to the acquiring banks. So it was very similar. As you saw, we got a number which was slightly more than 50% more than the previous year. So that's the first point. Second is on acquiring GMV. Of course, we have not seen a few months of growth, but it's more or less back to, especially UPI acquiring is more or less back, in fact, probably about flat to January. So yes, we haven't had the growth that we would have otherwise had from January to April. But our acquiring numbers, including on UPI, is very strong. The third is purely, look, UPI was previously 70% of our GMV, and now it is going to be 80 to 85% of our GMV. So that has a little bit of a blending impact as well. And finally, while overall our UPI incentive sharing with partners is similar to what we had with Paytm Payments Bank, there are some small nuance differences. And the final point is Paytm is now a TPAP. So there's a small amount of money that the TPAP gets, which we will also get going forward.
I think, Alok, overall, I also want to tell you that UPI is headed towards MDR. If you notice the indication of different payment instruments that have come on UPI. For example, like Rupee on UPI plus 2,000 rupees payment, meaning upward of 2,000 rupees payment is MDR charged to the merchant. Credit on UPI also is very clearly out.
All right, so that of course was the con call that followed the reported net losses of 550 crores for Paytm. Well, that's all we have time for on this edition of Reporter. Stay tuned to NDTV Profit as we get you more news.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have one day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn.
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary, and this show is all about your stock-related queries. So write to us on any of our social media channels or the YouTube live chat or on the WhatsApp number that will be on your screen. Any long-term queries or short-term strategies, do tell us and we'll get your questions answered by a fundamental and technical guest. But before we do that, let's dive into, before we dive into the questions, let's look at where the markets are currently at. You have the Nifty 50 trading in a very tight range today, almost about 100 points. And it's only about 0.1% up right now, but in the positive. You can see that low in the morning trade, but we've come up since then, so above the low point of the day clearly. But you look at some of the constituents of the Nifty 50 as well and see what's pulling the index higher. You have something like an RIL that's contributing about 22 points to the Nifty. You have Infosys, HUL, ITC all in the green. On the other hand, you have banks like ICICI Bank, SBI and HDFC Bank all in the red today. And even Axis Bank. So all the banks that are not doing too well clearly. And let's also look at some other sectors that are trading in red today. You have the auto as well, that's down about 0.2% or thereabouts. You have metals in the red today. We saw a rally in metals in the last 2 days or so, and it's down about 0.7%. So clearly some profit booking happening there. You have the PSU Bank index also down about 0.5%. On the other hand, you have Realty doing very well in trade today, up about over 1%. FMCG up about 1.5%. So a good day for FMCG. As well. You have the energy index up about 0.6% as well. Let's also look at the broader end of the spectrum now. You have the mid-cap index, if we can pull that up and see, yeah, it's up about 0.2%. So doing better than the benchmarks for sure. Let's also look at the small cap that's down about down 0.16%. So in the red today. However, positivity on the mid-cap space definitely. Let's look at some of the counters that are moving. You have Piccadilly Agro that's up about 5%. On the upper circuit right now, you have Apollo Tyres as well. That's up about 1% after a bulk trade. You have BHEL that's down about 4.5% right now, and we'll talk a little bit about that in detail in just a second. You have Dollar Industries also down about 5.2%, while Dollar Industries did well on most of the counts. There was net profit that's been that's the area of concern, and that's what the market is taking cues from as well. You have something like a PNC Infratech. If you can pull that up, that's gaining in trade. It's up 11, okay, about 12% up. Now this comes on the back of an announcement that happened only a couple of minutes ago. It emerged as the lowest bidder for 2 road projects worth about 5,000 crores from Maharashtra State Development Corporation. We're seeing that impact play out in the stock. You have something like a Hitachi Energy also down about 2% on the back of fourth quarter results. But let me circle back to BHEL, which is also the focus for today, and I'm joined by my colleague Mihika to tell us about how the numbers were for the fourth quarter and what's the management commentary, what's the outlook like for the company.
Yes, so the Q4 earnings were disappointing ones. Revenue was marginally up 0.4%. The key number was the EBITDA, which was down 30.6%, and this was mainly due to higher other expenses that stood at 527 crores versus 58 crores a year ago. Margins contracted 400 basis points, and net profit fell 25.6%. When you talk about the con call highlights, now the order book of the company stands at 1.31 lakh crores, and around 92,000 crores of these orders were from the power sector and rest from the industrial sector. Now, gross margins were down due to supply chain issues and execution delays, according to the company, but they are targeting a 12 to 15% CAGR growth in terms of revenue. And they also mentioned that the government is planning to add 88 gigawatts of power by 2032, and the company is expecting 10 to 12 gigawatts orders from there. When you talk about the brokerages, a mixed bag. Now we have Morgan Stanley, which is retail and equal weight rating at a target of 220 rupees, which is a 31% downside. Q4 FY24 revenues and margins were below their estimates, but they do expect order momentum to continue given the policymaker focus on adding thermal capacity. They do believe that earnings visibility is improving with healthy prospect pipeline. We have Nuvama, which has retained a buy at a target of 400 rupees, which implies a 25% upside. They've mentioned healthy outlook given a 25 gigawatt of thermal total addressable market spread over the next 2-3 years. They've also implied that the old legacy projects expected to be completed by FY25 end. And lastly, they've estimated an EPS CAGR of 88% over FY25 and FY27.
All right, thank you, Mihika, for that. On that note, let me introduce you to the guests for today. We have Lancelot Tikuna, CIO, ValueX Wealth Connect, joining in along with Vaishali Parekh from Prabhudas Leeladhar. Thank you so much for joining in today. Lancelot, I'm going to come to you first on BHEL. You saw the management commentary as well, and there is some concern around the execution of orders. And even though there is this positive outlook that the government is going to continue putting in money into the space, but the execution part of it seems like a concern, and especially with a long gestation period, right? What's your long-term view on something like a BHEL?
So I think, whenever you look at the future of the company and its growth prospects, you also have to look at what is the price that you're investing in that company. And if you consider that valuations, while there will be earnings growth going forward, it is trading at a very high multiple at this point in time. So unless the profitability can significantly improve, it's very difficult to justify, investment at a high multiple as it is at this point in time. So yes, there is no doubt that the company is going to get further orders. Execution capabilities may improve a bit. There has been some short-term disappointment on that front. The question is that, if the valuation is high, is this, it's better to wait out and, wait for a significant correction in the price before the valuations. When the valuations become attractive, then one can look at investing in the stock.
Fair point. Let's dive into the queries now. The first one is from Suresh from Kerala. They're talking about the counter KEI Industries. Vaishali, I'm going to come to you on this one. They bought the counter at a price of 3,890 rupees. It's currently trading well above 4,100 rupees. Vaishali, this has been a doubler in the last 1 year. Do you see more upside from here? And the question is, should you add more?
Well, I would say that yes, it has a very strong uptrend and it has moved one way. So if one needs to add, I think in all likelihood, the way stock is going on, even on the monthly chart and all I'm looking, I think it's ready for a target of 4,600 and so on. But I would say, one needs to be cautious at these levels. 4,000 should be the support and buy near the support.
All right, fair point. The next question is from Mohandas on Crompton. They say they have bought the shares at a price of 392 rupees, so slightly above where it's currently trading at. And so we saw the earnings come out in the last couple of days as well. What's the long-term view on this counter?
I think the long-term view is definitely the counter should see much better growth going forward. And being in the power industry, you do get some benefits of